about 97.5. But the issue quite simply is how long, first off, is a time frame. Secondly, the disruption and hitting those oil production plants and what you've got across the whole of the Persian Gulf. And then how much higher can crude prices go for how much longer? That's the issue. And it just seems to be on a one-way trip at the moment, and that's heading north.
Morning, Peter. And so the question, therefore, is, we were actually debating this earlier today, which is with gas fields getting hit, infrastructure getting hit, even if there is a dissipation of these tensions and hopefully we reach, if not an end to the war, then a cessation of hostilities, it's going to take time for this infrastructure to come back on stream. Do you anticipate, therefore, that we're going to have to deal with a supply constraint, or do you think that that can be made up for by other manufacturing regions?
Well, that's a very interesting question, Alex, and good morning. I mean, first off, the severity and how long it takes and how damaged are these particular sites. You're looking at Ras Laffan and so on, and the Shah. So if it was to be significant, is it going to be a tit for tat? And are you going to see anything happen as far as Karg Island? The next part is, if it's going to be over a matter of weeks and months, and if they're severely improvised or impacted, then that's certainly going to add, from a supply side, much concern trying to get crude through that whole region. And secondly, is there enough crude to go around? And this is where we get to a real inflection point, and that's where price comes. And normally you're going to see a spike in price. Don't forget that you've got Oman crude, and that's the physical. I'm just looking at that. That's above 150 a barrel.
150 a barrel if this continues. Wow.
No, Tamana. No, that's physical on the Oman crude. That's what it is at the moment. So yes, you could have significantly higher prices.
What's the upper end on the Brent, Peter?
Oh, Brent, I think, where are you looking at the moment? You're looking at 112. You might hit a 125 or a 130, and I want to see what the acceleration is to get to that. But there are a lot of moving parts to this whole equation, and we need to work through that. We're at 120 only about 2 weeks ago. Then it fell back, and we understood them. We thought it was a downdraft, and now all of a sudden you're at 112.
Seth Freeman also joining in. Peter, stay on with us. Seth, very good morning to you from where we are. As you see
good morning.
This is putting gasoline on an already raging fire. This is how I can unironically describe what's happened in the last 12 hours or so. Is there any way you see out of it? Do you see a one-way free fall across asset classes basis what we're hearing and seeing since yesterday?
Well, we saw the U.S. markets go down 1.25%. And I think it's going to continue just being very volatile and probably to the downside. To use your analogy, we're actually putting flames on the oil. And it's just about as disruptive as it could possibly be, and with no end in sight with the retaliation that Iran is promising.
In this context, what is your opinion, Seth, on emerging markets? Because you've already seen the mother market, so to speak, the US Wall Street fall quite dramatically. But do you anticipate that the cracks in the emerging markets could be deeper?
I would imagine so. Investors are going to be really risk averse. And of course, India in particular is a major net importer, and the entire supply chain is being disrupted globally.
Well, it's certainly something to watch. Peter, Seth, thanks so much for taking the time today. Pleasure having you as always.
Thank you.
Let's talk about the context as much as it matters. And you're going to see cracks at the start, but it's been 3 days of good news for the benchmark Nifty 50. In trade yesterday, you had foreign institutions that once again net sold to the extent of about 2,714 crore rupees. This is the lowest in the month so far. Foreign institutions have been selling for 14 sessions in a row, well over 40,000 crore rupees on a net basis. Domestic institutions have net bought equity in yesterday's session worth about 3,250 crore rupees. In those 3 sessions, the Nifty 50 has gained about 2.7%. Quite a bit of that could well be erased in trade today. Eternal, M&M have stood out as key winners. M&M in particular has gained close to 3% on all 3 sessions. Definitely over 3% on 2 of those sessions. Yesterday, less than 3%. The mid-cap index gaining close to 3%. The small-cap index about 2.3% in 2 sessions. Remember, the small-cap index and the mid-cap index only gaining for 2 sessions in a row. The Nifty IT was one of the big talking points yesterday. Biggest sectoral gainer. It gained about 2.8%. And it actually dropped from the high point of over 4%. It snapped a 6-day losing streak, and so some might have argued that it was bound to happen. It just happened yesterday. Broader markets have actually outperformed the Nifty 50 on Wednesday, that is yesterday. All sectors barring metal and FMCG ended in the green. There were a few pockets though that were in focus. Frontline counters, Neeraj, also seeing interest, but the broader markets, I think, in trade yesterday was where quite a bit of the action was. They were missing in action perhaps earlier in the week, but they caught up yesterday.
Yeah, somehow it feels that talking about the minutiae of what moved and what not
does not matter.
Completely irrelevant.
It does not matter.
And
it's so fraught with danger. We did updates yesterday after markets closed, and everything seemed great. And then by 10:30, 11, I started getting messages that no, markets are going to close 300 points. And I had to come out and say that, listen, this was recorded, and after that, a lot of things have happened.
Yeah,
it's that.
Don't
volatile.
celebrate too soon.
Yeah.
Thankfully, we maintain that on our platform, so which is a good thing. And the conflict is kind of, you can argue, as some people would say, is shaping up from military warfare to energy warfare. And this destruction of the energy infrastructure in the Middle East. I know calling the passage of material through Strait of Hormuz as irrelevant is taking it too far, but it becomes less relevant if the infrastructure itself is not throwing up the kind of oil that might be needed, never mind the emergency reserves. And I'm not pretending one bit that I know the math of what the various kinds of emergency oil reserves coming in does to the overall demand supply. But you know that the government of India yesterday has released that the Indian crude import parity price is $142 or $143. This is government of India release, right? Official. So you know that we are in a higher crude regime and it has a macro impact per se. The second order, third order derivatives of sulfur supply chain damage, etc. is not even known as yet. And I think today's move shows that while long bets in the current environment are fraught with risk, you take a long bet but exit it very, very quickly. Let this be a swift traders market and not necessarily somebody who's saying, okay, this is the bottom, I'm confident of it and let it go up. Because frankly, guys, the 10 a.m. guests who've come on our show all through the last few days, right? These are experts who've studied this history for such a long time. They do not have a conclusive answer, right? So how can equity market experts try and bet that, okay, this seems to me like the end? Because listen, we don't know how this unravels. And frankly, we didn't need HDFC Bank. I wonder if ICICI becomes a kind of a beneficiary because of what's happened to HDFC Bank, because typically that might happen. You look at 2 or 3 blue chip names, and the past Kotak was in that same league. That agar ek ke saath bura tha to baki ke 2 ko fayda hota tha. Now you probably look at HDFC and ICICI in the same breath, but that is just clutching at straws, if you will.
Yeah, and we'll get to HDFC Bank in great detail in just a bit, because we're learning different things about what's really happening there. Is it a fight at the top which has led to this? You have the vice chairman, of course, coming out and saying that I'm quitting because executive vice chairman, because I'm quitting because of misalignment, but no material factors. We'll come to it in just a bit. Other factors to look at. I mean, it was a final hour sell-off of 130 points, suggesting that the 23,850 to 23,900 zone is acting as a formidable ceiling. Markets will reflect the impact of 3 pieces of news: FOMC's hawkish hold, the deteriorating situation in the Middle East, and HDFC Bank. RSI has crawled up to 37.04 from 24.15, but still remains below 40, which is technically weak. If the Nifty breaks Wednesday's low of 23,600, expect a slide towards the 23,500 to 23,350 zone. A rally towards 24,000 is likely only if the Nifty closes above and sustains the 23,800 resistance level. Bank Nifty is currently at a technical crossroad, although it has recovered nearly 3.5% from its recent lows. The underlying structure suggests a corrective pullback rather than a full-blown trend reversal. So resistance levels for the Bank Nifty at 55,520, 55,725, 56,000, supports at 54,850, 54,650, 54,325. So those are the technical levels. But I mean, if you think that you could be surprised with what's happening, HDFC Bank is as blue chip goes. And I'm not even talking about their logo colors. This is as blue chip as it gets. So to have the part-time chairman then resigning, and with what he's saying, Atanu Chakravarti stepping down with immediate effect, and of course KK Mistry in the helm, that's great. But the letter and what he says, Neeraj and Alex, really struck me. He says certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics. This is the basis of my aforementioned decision. What would really get you to say something like that in the position you are in an official letter that you made public? That is the worry. And many versions today that this was an internal fight, XYZ. I don't know if it is or it isn't. But even if it's an internal fight, to come out and say that, I think that's what's astonishing.
Yeah, the last line was great. The first two lines weren't. I mean, but Tamanna is right. I mean, I don't know if anybody knows the exact detail that happens, and maybe KK Mistry coming in and clarifying or talking might help. But until then, I think the ADR was a dead giveaway as to markets, what the markets think of it.
Yeah, 7% downtake on the ADR.
7.5%, right? Because you don't like uncertainty. And if you have uncertainty, you want to stay away.
I'm sorry. Okay, so I don't know what the details are, and we'll find out eventually, or we may not. Let's see how it happens, right? And hopefully we do. My only point is, as the chairman, as the outgoing chairman, you have a responsibility not to not speak the truth. Please do speak the truth, but don't make it vague and uncertain. This is one of the largest listed companies in the country with a massive retail shareholding, institutional shareholding. You're beholden to them. Forget about the bank. You're beholden to retail investors to make a clear statement one way or the other. This is not clear at all. What does it mean to say that this is not in congruence with my personal ethics, but there are no systemic issues, there are no key issues? What is the word? There are no problems, right? There are no systemic issues. Right, so he's not really saying anything.
No material
issues.
Impact. The important word
material reasons.
No material reasons.
Actually, Hiral is joining in with more details. She's been looking at this, and Hiral, not just what has happened, because we've talked a bit about that, but also what kind of an impact HDFC has on all key indices.
Right. So, Tamanna, I just want to add a little bit right now over here to the conversation that you're having. Now, there are sources right now indicating that, one, there is no impact in terms of the functioning of the bank. The regulator has not found anything on that front, and that is the reason why this approval was given as well, to get someone else, for a short term. Number two, the reason of his exit is mainly on the back of two things. One, differences with the management and differences with the board. So that has been the major concerning area right now. And there is a statement from the bank which is expected shortly as a response to the letter that the exiting chairman has put out. Now, let's quickly understand, apart from the news, in terms of what the impact is, because we've already seen, what the statement is, what the letter states. Now, in terms of the impact when it comes to indices, let's pull up that one. On Nifty, you have HDFC Bank, which almost has a 11.8% kind of a weightage. Bank Nifty is close to 19.7%. Now, a fall in terms of Bank Nifty, what it could do to both these indices. A 5% fall on HDFC Bank could actually impact Nifty 50 to the tune of 0.6%, whereas Bank Nifty to almost 1% right now. And you can see on a 10%, it goes down to almost a 1.2% on a Nifty and a 2% on Bank Nifty. Let's see how this translates in terms of overall points as well. 141 points to a 281 points impact on Nifty 50 if the fall is in that range of 5 to 10%. And on Bank Nifty, you're looking at almost 545 to 1,100 points in terms of where a Bank Nifty fall goes if there's a 5 to 10% fall on HDFC Bank. Let's quickly look at the performance. On the YTD basis, the stock has actually seen a negative return of 15% already. So a further downtake, whether that becomes an opportunity for investors to buy is the key question, if systematically everything is okay with the HDFC Bank. And lastly, if you see in terms of where the ownership goes between FIs, DIs, not a major change. They've hovered in that 48-49% band in terms of FIs, and DIs in that 36 to 37% kind of a range. So clearly the ownership very strong when it comes to FIDIs and retail investors. The bearing in terms of the stock is going to be the key question from here on. And if anything comes in from the bank as a statement, if that is able to actually give that confidence to the investors is the key question here.
Okay, so a couple of brokerage notes out already on HDFC Bank. Kotak Securities has maintained a buy with a target price of 1,050, saying interim leadership but uncertainty persists. Chairman exits over ethical differences. Valuations already meaningfully derated. Recovery is likely slower than expected. Re-rating unlikely until issues are resolved and news flow improves. JP Morgan has maintained a neutral with a target price of 1,090. Says chairman exit adds to macro headwinds. Sentiment hit with elevated volatility near term. Stock likely to trade weekly following the resignation announcement. Impact further amplified by a softer macro backdrop amidst geopolitical uncertainties. Resignation raises concerns about potential material disagreements, could widen the governance risk premium embedded into the shares. Scope for near-term stock price weakness and heightened volatility. Letter does not allege specific misconduct. Perception alone can weigh on sentiment. There's a UBS take also saying the part-time chairman resigning over certain happenings and practices. KK appointed. While there are no other details available, this could put near-term pressure, as one would expect. All right, Siddharth Raj Purohit, lead analyst, banking and non-lending financials at Systematics with us this morning. So is Aditya Shah at Hercules Advisors. Thank you to both of you for joining in. Siddharth, I'm going to come to you first. I mean, it's the wordings of Atanu's letter might seem at the end of it to say nothing material, but it's as damaging as anything, isn't it?
It clearly indicates that everything is not hunky-dory. At HDFC Bank, there are clear differences in the way the top management and the others in the management are working. I think the resignation of Rahul Shukla, who was kind of head of, and he was doing very good at the bank in the MSME and the rural banking, that space, and then the CHRO. And now this clearly indicates that, yes, there are some differences in the board, between the board in terms of operations. And this is what differences and the rubbing off things have ultimately led to this. So I don't have any questions majorly on the corporate governance of the bank, but yes, it clearly says that the operations and the decisions are not as smooth as they have to be in a bank of that size.
But I want to understand what that could potentially mean, and it's vague at this point, right? So it's not corporate governance as you say, but Aditya, what do you make of this? What could it potentially be referring to?
So I don't want to speculate per se, but there are 2 or 3 aspects to this. HDFC is a huge bank now with the merger. Nearly about 25 to 30 lakh crores of deposits and loans are being managed. Of course, there will be disagreements. Of course, people will come and leave because the organization is really very huge. But what is happening here is the management could not really manage the disagreements at the board level. This has gone on to such an extent that the executive chairman had to go out of the bank giving this letter. From my perspective, what the bank should really now do is, over the last 2 years, the HDFC Bank has been really poor in communicating what is happening with respect to the business. They should first communicate and clear out what was the problem, what happened, what didn't happen, and what are the steps that the bank is taking to address any of the challenges that have been addressed by the executive chairman. Only then the investor problems will start to slow down. If the investor problems, if the bank does not address this, if the bank does not really address this, then there will be a massive challenge for the stock price in the shorter term.
Got it. Neeraj.
Continue.
Okay. No, Siddharth, I just want to get your sense as well, because, and your opening statements kind of wrapped it up, right? No corporate governance issues that you're worried about. But again, operationally, and I'm just wondering about the wording that has been used, ethics and principles. It's a little vague, isn't it?
Yeah. Those kind of words are actually very harsh, and for the bank of this stature, and this stature is global, it is not only local. So these kind of words by the chairman are really very harsh. It clearly gives an indication that what would be happening at the board, between the board meetings over the last few, say, quarters. There would be some clashes in the decisions that, so Mr. Atanu Chakrabarti has mentioned that last 2 years. So I think after the merger of the bank, things are not as smooth at the bank. There are constraints for growth. There is a call that the bank has to take between liquidity, which is the risk factor, and growth. Now, there could be some clashes between this, that do you want to focus more on a very steady growth and focus on your liquidity so that there is no long-term risk in the bank, or you have to then meet your guidance of growing at industry, better than industry, and then and stretching your liquidity. So I think I don't know exactly what has transpired. I'm not privy to all those information, but as an analyst, all the information that I have, from that I can indicate that these are some of the points around which things would be knitted.
Point well taken. Aditya, the question therefore is, where if HDFC Bank were to fall the way the ADR is indicating it will, it comes down to potentially 1.5 times price to book. Would that be amongst the cheapest levels that it has traded, and therefore does it price in the negatives of FI selling plus this incident plus more, or would you bide your time?
So, Neeraj, I've been a buyer in HDFC Bank. I believe the seeds for the next leg of growth with the merger are in place. I think the bank has done the right thing by giving up on growth over the last 2 years and concentrate on building on getting down the LDR and setting the bank right. However, as I said before, communication from the management over the last 2 years has been extremely poor. They need to come out and communicate really very effectively. They need to use the face of taking history and tell investors what really happened, and tell investors a roadmap as to how they will address these challenges that have come up. If they don't do this, I don't think there's a recovery in the near term. Investors will be confused as to what really the problem was and how is the bank really addressing. So in my opinion, shorter term negative for the bank stock. Longer term, the recovery will depend on how effectively communication happens between the bank and investor community. Mind you, each and every person in India would be investing in HDFC Bank somehow or the other, to went to an index, to a mutual fund, or to direct ownership of the bank. So from my perspective, longer term positive, shorter term an opportunity, but bank management has to be on its feet to address these problems.
Siddharth, just trying to understand, because we've had, one set of sources telling us there's no corporate governance issue at all. RBI has not flagged any concerns. There seems to be disagreements at the top. Even the fact that it's disagreements at the top, but to this extent, will that be forgiven then by investors with the argument that this is a strong bank, one of India's largest banks? Is that going to be enough?
Yeah, see, it is actually if you see, it is kind of underperforming for a very long period. So from the time of merger, it has not kind of come to the growth or the aspects that they are doing. See, valuation is relative, but see, yes, investors have already had some concerns on the growth, so that are already there. So now on top of that, one more thing adds up to it, to that concern, is that, yeah, there are a lot of difference of opinion between the management. So this, we don't know it is between the executive directors or between the executive and the independent directors, or it was only with the Mr. Chakravarti. See, we from outside can only create probabilities that these were the cases. So given all the probabilities, I'll say yes. There would be a near-term overhang on the bank. In my consideration, in my pecking order, HDFC Bank was already below ICICI, Axis and Kotak. So for me, it was only relatively lower in the pecking order. ICICI is my kind of ahead in the topic, in the picks that I have in coverage bank. So yes, I'll take your point. Yes, there will be an overhang on this bank, and the confidence that investor have to get again would be, it will take some time to come get a confidence. So that way, I don't see very meaningful negative impact on the bank in the near term, but yes, some consolidation, I think the bank would be for some time.
Yeah, maybe not on their balance sheet, but that's the thing with reputations. They're glass-like. Thank you so much, Aditya and Siddharth, for speaking with us. I mean, it's a day of covering pyrotechnics. This is literally, you have oil fields set on fire. This is the reputation of a stellar bank set aflame. That's what's happened today. Nisha Poddar joining us with more details. We're getting you all the news on this fast and furious. We're also going to be covering the conference call by the company live. Nisha, what are you learning? Who is upset with whom and over what in HDFC Bank?
Right. So I've spoken to several of the direct sources in and around the bank, and the relationship of Atanu Chakravarti with the senior executive leadership has been a cause of worry for quite some time. So Atanu's misalignment with leadership is seen as a prime reason, but his parting shot of the bank's practices not being in congruence with his values and ethics is a real big concern that is coming up for the bank. But what I've got from sources is that Atanu was earlier informally told, that was middle of last year in 2025 mid, to avoid assuming executive powers and taking keen interest and also dominating the executive decisions of the company while he was non-executive in nature. Now, Atanu was also seen colliding with the executive leadership on key strategic decisions. And two of the conflict areas that I have figured from sources with direct knowledge is that the concern about HDB's future, and there were talks of MUFG, the Japanese company, really buying out a stake in HDB, or there was an IPO decision, and at that time Atanu was in favor of HDB's listing, and he prevailed over the executive strategic decision on that point, and also the progress on merger, which he has alluded to in his letter of resignation.
Okay, thank you for that, Anisha, and we'll of course keep populating more and more details on this story. Watch out for the conference call. I think the clear take over here and from the experts we've spoken is that the management needs to come out and explain what's happening, and we'll hope to hear from KK Mistry. I mean, one of the most reputed voices in Indian banking, and him coming out and calming the storm is just what the doctor ordered. But let's talk about other stocks as well today on our watch list. I'm looking at Nazara Technologies. The announcement is positive on the face of it. They're going to acquire 50% stake in a company called Blue Tile and Best Play. The deal is at about 918 crore rupees. It marks Nazara's entry into AI-driven casual social gaming. Now, the target company has 24 million monthly active users around the world. One note on it from B&K Securities, which says that on the acquisition talks a bit about the valuations as well, saying valuations ex earnout are 7.1 times trailing EBITDA. These aren't as cheap as it appears, given that publishers are exposed to changing user interest. So if there was only one, I would say, question mark or small question in the minds of investors over Nazara's acquisition today is what they have paid for it. Option to buy the balance 50% at 6.6 times trailing EBITDA, of course, is there with the company. This would be the largest acquisition that Nazara would end up making. And further, there is additional earnout of $98 million over calendar year 28 to 30. They've not disclosed the targets for such earnouts, 25% of these earnouts will be paid in Nazara shares, highlight the changing nature of business to a high risk, high reward nature. Nazara loses to de-risk this by taking measured bets. Nonetheless, this is still different from the esports ad tech business. Buy thesis is predicated on these measured risks bearing fruit. So it's a measured and I would say caveated buy from BNK on the stock. So let's watch out what happens with Nazara today. It's already run up a fair bit. GR Infra Projects is the other one I'm looking at. They've been declared L1 bidders for a road construction order worth 2,440 crores. It's for 4-lane greenfield section of the National Highway 33 in Bihar. It will be built on the hybrid annuity model and completion period is set at 910 days from appointed date. Order book as on December 2025 is at 20,500 crores. Delivery is the other one, also a thumbs up. They've announced an expansion of the economy air parcel service. They've launched economy air shipping to UK, Canada and Australia. Service utilizes Delivery's domestic infrastructure to connect India's Tier 2 and Tier 3 cities to major international hubs and expands access for Indian MSMEs. So the timing of it also I thought was interesting. So watch out for these. I don't know if everything's going to be overshadowed between the conflagration in the Middle East and HDFC, but then yes, there are some companies which are doing interesting things.
Yeah, certainly. Physics Wala, there's good news and bad news. The bad news first, they've gotten an income tax notice for 263.3 crore rupees for the assessment year 2023-24. It relates to certain investment returns that they have gotten, which the tax department has said they should be paying more tax for. Just the number is quite stark, and it usually is when there is a demand of this sort. And invariably bear in mind that there is a conversation that takes place between the company and the authority, or it goes to the appellate tribunal and it gets revised downward. The demand is 2.5 times the Q3 net profit, and the company hasn't been profitable for very long. The company will file an appeal before the appropriate appellate authority, and it says that it feels like it is within its rights and the legal argument is strong. There's another update though, and it's not too detailed, but it could well be positive for the company. It has incorporated a wholly owned arm called Physics Wala Student Housing. It is self-explanatory what they intend to do with that wholly owned subsidiary, seemingly to offer housing facilities to students. The details of that are not known, but it could be another revenue stream that opens up. All told, though, it could see a negative reaction, particularly because of the kind of move that it saw in trade yesterday. Some profit might be taken off the table. Alchem Laboratories is the second stock on my list. It has gotten allotment of 30 acres of land in Ujjain, and it's planning to set up a greenfield formulations facility there. And the board has already approved investments of over 530 crore rupees, which will be made in a phased manner for that expansion. So it is a positive development. Of course, it's going to take some time for this additional capacity to be set up. So let's see how that affects the financials.
Yeah, I have two obvious ones. I mean, we'll obviously see Oil India and ONGC have a positive reaction. So you want to keep an eye out for that. And you will obviously see the oil marketing companies, in addition to a few others, have a negative reaction because of the crude price uptick and a flare up that we've seen. So those are the two sets of stocks you want to watch out for. Just the third one, because I read a note today from Jeffries on GMR airports, and I flew to Delhi yesterday and came back. I can tell you, both while landing and while takeoff, that the airport was probably half the traffic that it normally would have. And I wonder if that's got to do with this whole Middle Eastern scenario, and therefore would the airport revenue, both F&B as well as footfalls, I mean, for GMR and for everybody else, will actually be lower in this quarter, and that might hit earnings and footfalls. So keep an eye out for that.
And the fact that fuel surcharges have also gone up across the board. There's an upgrade to TFS today, though, from one of the brokerages. They've upgraded to a buy at this time. So that's interesting. But yeah, we've been seeing a lot of reels on the airports being fairly empty, and now you've seen it yourself. So that's a tough one.
Yeah. It was a breeze through, which is a positive, but yeah, an empty airport. Anyways, time for a short break. On this note, we slip into a break, get you the top 20 strategies on the other side. Stay tuned.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Welcome back. You're watching India Market Open. Quick look at the implied before we move ahead. Rough and rougher. It's 500 points down. I mean, at this point, you wonder what else could go wrong. I would say HDFC Bank's internal fight at the top was the kind of addition to the chaos that you didn't really need. But let's help you make sense of the markets this morning. Coach Bora back in the studios. Coach, we spent 4 days preparing to see Dhurandhar 2 and then 1 day seeing it and recovering. That's why we've been missing you here.
And despite all that, like everything else that could go wrong in the world, right? There are issues with Dhurandhar shows as well, you know that, right? With the censor board cutting the 6 minutes. There was a delay in, the dubbed version being released. IMAX screening has been stopped because of that. So there have been issues there also. So yeah, troubles all around.
Push today. I thought you'll start with 3 words.
And
Hosla, Indhan, Badla.
Somebody's quoting dialogue.
Absolutely love it.
Sharad Dubey told me
Not
about
bad,
it.
not
Oh, yeah, no, by the way, I did catch the paid previews of Dhurandhar. I must say two things. One, don't go by any fan theories or any theories that you might have. There are enough twists and turns in the movie, to keep you glued and excited. Correct? And two. Okay, so maybe I found the first one a little better, but this is a very satisfactory close to whatever the first built up to. So yeah, I'm just going to leave it at that without giving too much away.
You better not.
I will not risk the wrath of the viewers, the spectators, and the fans. But I think what's happening in the movie, similar shades of red in the markets, like all across. 3 days we held up. But we knew that recovery was fragile, right? I mean, let's just look at a couple of data points. The volumes on the way up were shrinking every day, right, as markets went up. Also, the massively oversold indicators, they rebounded from those oversold levels, but not any kind of runaway reversals or not any kind of reversal breakouts. So yes, you knew that this was fragile. Plus, when you combine that with rising crude and the depreciating rupee, this was always going to be something that you would hit a wall, which it did around the resistance of 23,824,000. At these current levels, I'll be a little watchful. 23,300, 23,250 is a support zone that could well be tested, perhaps even breached today. If this escalates, then the 22,900 recent lows are well on the cards yet again. So I would not trade indices right now. Stock-specific action also. But like I said, I'm adding more to my watch list right now than to the portfolio. And I think that view pretty much continues.
Okay, and let's talk about that watch list. We missed out on the weekly picks and we're just two sessions to go. What do you have for a pick today?
So I'm going with one long and two short ideas. Despite everything that's happening with the banking space, especially with HDFC Bank, I still have a banking name in my pick, and that is J&K Bank.
Okay, I thought you were going to say HDFC Bank today.
Not today. Not today. Perhaps in the times to come, but not today. So yeah, J&K Bank, because there's been a massive consolidation breakout, and this one's just not giving up. The gains that it's had. It's definitely maintaining those support levels. So I'd be constructive on J&K Bank. Like I said, you don't have to necessarily go out and buy, but definitely something to keep on your radar. From a medium-term perspective, near-term perspective, targets 127, 131, stop loss at 119. The two short calls are Patanjali and Exide. There's been some recovery, but with the primary trend being negative on these and the weakness in the market, this recovery will be sold into in all likelihood. So Patanjali for targets of 484, 478 and a stop loss at the 496 mark, and Exide sell with 303 and 298 as your targets and the stop loss at the 313 mark.
Okay. Keep an eye out for that. Well, we've been talking about all the other key newsmakers as well. We've spoken about HDFC Bank at length. Dharmesh Kant joins in, Head of Equity Research at Chola Securities. And Dharmesh, one is the news on HDFC Bank. Two, of course, all the crude sensitives will be in focus. Just trying to think of this. If you bottom fished into any of those crude price fall beneficiaries, would it be too soon? And would you be walking on eggshells? Would you rather sit on cash with regards to the crude price sensitives?
Yeah, good morning, Neeraj. Thanks for inviting me for the show. It would be too soon, Neeraj. I mean, this I have maintained since the beginning of this war which started. So people were expecting 1 week and it should be over. I don't think so. It's getting more prolonged and elongated. Though, I mean, any day a tweet can come from Mr. Trump that he's done with and what he wanted to achieve has been achieved. But I don't think Iran is going to let it down from here on. And the bike connects in the Middle East, whatever news flows which we are hearing is it's getting intensified. So, and see, one is the supply disruption because of this bottleneck and the blockage which has been there. Another is the actual destruction of the plants and equipments which you need to repair and replace. It will take a longer period of time. So, I mean, it will be too early to take a call and jump in the gun into, crude fall beneficiaries, which seems very unlikely, at least for next 2 to 3 months. So, better stay away and see how it pans out. More destruction, more damage is there. Yesterday I was sitting with few of the corporates, in fact, they were promoters. I would refrain from naming the companies. But the only thing is they are saying that now they are planning, I mean, they have overseas exposure. They have plants and factories in most of the countries which are located outside India, and what to produce, how much to produce, how many days to get the plant shut down. Already many plants are under shutdown. So this has already started. Most of the pain will start trickling in from Q1 FY27. So wait and watch is the theme right now.
Wait and watch. All right. So that's not a bad strategy. Not doing anything is also a strategy. Let's talk about stocks that you should keep on your radar, and let's run through the list quickly because there's quite a bit to talk about. Right on top of the list, crude sensitives, but upstream companies could benefit because crude oil prices have been on the up and up. They're well above $110 to the barrel right now. Manappuram Financial, the RBI has given its nod for the Bain Capital acquisition. This is something that is significant for the company. Vikram Solar and a couple of other companies actually as well. Wari Energies, MV Photovoltaic as well. The ALMM framework has gotten extended. Transformers, rectifiers, as well as Tata Power, Triveni Turbine, a couple of others as well. The small hydropower initiative by the government should be positive for them as well. Let's talk about more. GR Infra has gotten a sizable order, or rather it has been declared as L1 bidder. Natco Pharma, the board is set to mull a demerger of one of their businesses. Specifically, this is going to be the agrochemicals business that they're going to look at demerging. UBL has gotten environmental clearance for a brewery. Vedanta is set to have a board meeting for another dividend payout as well. On the downside, we've already spoken about HDFC Bank. This is going to be the story in the next few minutes. Fertilizer companies, as well as several other companies that are crude sensitives on the other end of the spectrum, the cost side, right? So you have aviation, paints, various other companies, including the OMCs. You have crude that has gone past $110 per barrel. Nazara Tech, brokerages are turning cautious on the acquisition that has been announced. Physicswala as well has gotten a tax demand. On the flip side, remember that it's gotten into the housing business for students. So it could well be a reasonable positive. Just a quick question to Dharmesh. Dharmesh, you didn't specifically talk about how you would treat HDFC Bank. I wonder if you're holding right now, would you continue to hold and wait for the dust to settle, or would you not?
Yeah, good morning, Alex. I would continue to hold. I think whatever, I have gathered from the tweet, it looks more of a personal, differences on the ethics and the principle which a person sets for himself and how he sees the involvement of the entire management functionary, rather than something which is, ethically wrong with the way the business is done at HDFC. So I may be jumping the gun by saying so. But to my mind, it's more of a personal differences between few individuals which led to such kind of, decision making. So it's a person's call. He is always, all the right. He has to do that. But as far as buying is concerned, fresh buying into HDFC Bank, so that is not warranted at current stage. Not because of what has happened overnight or what the origination and thing has to do, but on the business front, because I do see the kind of disruption which is happening because of the inflation and the credit cost going up, the firming of the SME and the working capital stress is likely to be there in the near term, at least in Q1. So from that perspective, I think the entire financials will take some beating. I mean, it may be a time correction. So let's see how the things pan out, but not a time to buy and jump the gun and take the calls on that's applicable for the entire financial space.
Okay. Thanks, Dharmesh, for that. And keyword may be applicable for a lot of stocks in that space. What about what is being heard on the street amidst this 500-point downtick that we have today? Somit Johnson with his dealing room checks. Somit, are the dealing rooms in the mood for any kind of bottom buying this morning at all?
Well, I'm not sure, given the fact that the pain is quite high after the 3 days rally that we saw. There were a lot of long positions that were taken, and given this now downtick that has come in, I don't think there could be a fresh set of buying that would happen. Only if HDFC Bank, there is some recovery, then that could lead to a recovery for the benchmark and the Nifty Bank Index. But few stock-specific action that dealers have highlighted. Firstly, Shriram Finance. There were some buy flows on the institutional desk. There's a buzz of a potential open offer that could be announced at a higher rate. Obviously, this will take some time, but this is what the street is expecting could happen in Shriram Finance. For ABB India, there are sell flows on institutional desk. Channel checks are indicating that ordering has been weak, and dealers believe that all the positives are largely priced in when it comes to ABB India. For RBL Bank, there are buy flows on institutional desk. Couple of factors that dealers have highlighted. On the fundamental side, they're saying that the fourth quarter numbers are expected to be quite strong. And on the technical side, the setup or the chart looks pretty much strong for RBL Bank is what dealers have highlighted. For Samvardhana Motherson, there are buy flows on FII desk. Delivery volumes were also on the higher side. And for Polycab, there are buy flows on the large HNI desk, and dealers are indicating that given the current geopolitical situation, higher copper prices are affecting a lot of unorganized and smaller players. This will lead to consolidation in the market and thereby benefit Polycab over the longer term period. Hence, one of the reasons why the stock was up nearly 2.5 to 3% in trade yesterday. And Nazara Tech was part of our segment yesterday, where we did indicate that there's an acquisition that is in works, and the company has announced that they will be buying around a controlling stake in a couple of companies for close to around $100 million. But given the fact that the stock had run up around 7% in trade yesterday, it would be interesting to see how it reacts today.
So Nazara, definitely a khabar confirmed. Thank you for that, Somit. Dharmesh, what are you making of Nazara? Because big move in terms of an AI-led gaming acquisition, one of their largest acquisitions. Some questions about the valuations of what they've paid for this company.
Yeah, so Tamanna, we have dropped Nazara from our coverage way back, and from there on we have not having any view on that. So it's very difficult for me to comment on this since I have not been tracking this company past 7-8 months.
Just talking about whether you would look, I'm thinking of a contrarian play today. Do you think IT will continue its up move today, looking at what's definitely going to be a pain for the bank Nifty? and for banking stocks, Dharmesh? And would you look on favorably at an ICICI Bank and an Axis Bank? Because HDFC's pain might just be there again today.
No, I don't think so. I mean, it's a very small trade which can play out in a very short term, maybe for a couple of hours. But actually, structurally, things may shape up differently for financials in the short term, and that is the point why we are turning cautious on the space. We are not negative on the space, but we are cautious on the space. As far as IT is concerned, I mean, there can be trading bets here and there playing out. But I would like to highlight one point. See, FY 19-20 IT index contribution to Nifty 50 EPS was around 19 to 22%, which has fallen down to 12%. So a meaningful sticky allocation to come back into entire IT space from a long term, say 3-year, 5-year kind of a perspective, when you're seeing structural, tailwind playing out. This contribution to the Nifty 50 EPS has to rise. I'm not saying it will go back to 20% immediately, but this 11%, which is a falling trend line, should reverse. It should be 12, 12.5, 13. If that growth is demonstrated by IT companies, then I think Pharma allocation will come. And for that to happen, IT companies' earnings had to beat Nifty 50 earnings growth, so which is, to my mind, is very difficult. That's going next, 2 to 3 years, 3 to 5% or 7% is what best they can do. Nifty in the worst scenario will do 9 to 10% kind of an EPS growth. So that's the reason why we say IT companies are more for trade to play out, but not a structural, wealth creators from here.
Okay, the pre-open rates will start kicking in now, and we'll in a bit talk about some of those renewable energy companies which had got a big bump up yesterday because of the ALMM scheme on ingots and wafers. But the starting point is not pretty. Very likely it might not be 2.75% either, closer to maybe 2%, but that is a sharp gash too, and in some sense takes away all the gains that we had for the past 3 days, and which is why, just so fraught with risk. But bring up HDFC Bank, bring up the other banks, maybe Axis, Kotak, ICICI as well, and just see. HDFC may have a 7, 8, 9% downtick. Let's wait and watch. ICICI Bank, interestingly, I really doubt that will have a 5% downtick, but let's wait and watch. But the markets, by and large, also will have some bit of a hit. Watch out for ONGC and Oil India, might have some green on the screen, but the oil marketing companies, and I wonder if they will get punished in the session today yet again. So, BPHP, IOC, for now it's okay, but let's see. HPCL though, down about 2 or 2.5%. Remember, the biggest impact of the marketing margin gain or loss is for HPCL versus BPCL and IOC, and therefore it gains the most when oil prices fall fundamentally, and it also falls the most when oil prices move. And then of course there'll be others like Nazara, etc. But the headline, HDFC Bank, guys, not looking good. We know it'll start off lower. The question only is what happens post that.
Nifty also looking painful right now, and that will also maybe, I don't know if it'll really settle too much from here. I know this is the pre-open session, but that's the thing, there are bigger fish to fry, right? There is so much pain. If I'm going to look at it from the point of view of suddenly gas supplies coming down, look at what's happened yesterday. Statement from Qatar Energy saying that we are not going to be able to supply anything right now because that part of the gas field which has been hit borders is part of the same geological piece that Qatar also gets its gas supplies from. So both have effectively been hit. I wonder what's going to happen at that 3 p.m. interministerial conference today as far as it goes. Look at a delivery. Just want to pull up a delivery. Tough luck that a day after you announce new air services, you have Brent hitting 112. Your ATF is going to go out of whack right now. CAT, some of the biggest losers apart from HDFC. HDFC Bank is today in a category of its own, of self-inflicted pain. Because frankly, even if there was a fight going on between the chairman and the CEO or the top executive committee, it could have been handled in a better way before 100%. The chairman came and imploded everything in a public fashion. We'll wait and see what HDFC Bank does. But that's in a pain point of its own. Everything else, your entire JBM Auto, one of your big winners yesterday, Electra Green, all of them really seeing a tough time today. I want to see what Interglobe is doing. I want to see what GMR is doing. That whole travel space is also beginning to look fairly shaky. These are actually relatively okay. You have some advances on the Nifty 500. Adani Total is one of them. I mean, anyone who's in that pipeline of gas right now will start getting a little more valuable, one supposes. Century Plyboards doing okay, so is Grasim. I mean, it's quite random at this point. Not seeing any great positive uptick in any stock despite, good news even coming for some of those companies. I want to go across to Sharad for the big brokerage call of the day, and this is an interesting one that you've picked, Sharad, which is on TFS, Travel Food Services. We were having a conversation earlier about how airports are emptying out, could have an impact on airport revenues as well as revenues of F&B services there. But TFS is something that HSBC finds quite exciting, isn't it?
Well, that's right, Tamanna. HSBC has initiated a buy rating and the target price is set at 1,520 rupees per share. And now they've stated that the airport F&B in domestic markets in India is flying high. It's a market leader in the fast-growing, high-margin airport quick service restaurants and business lounges. And there's a healthy outlook coming in, especially for the domestic and international air travel, which will drive revenue growth for the company. The stock is, however, oversold due to the Middle East tensions, and the ROC numbers is best in class amongst peers, and a healthy free cash flow and dividend yield is also something which augurs well for the stock.
Okay, some of the other brokerages calls I wanted to talk about before I get a view on TFS from Kush and Dharmej. I thought Polycab, Citi maintaining a buy with a target price of 9,500. I mean, if you're looking at companies which are going to get impacted, this is one of them. But nevertheless, what they say is that there has been impact on export demand and domestic demand. No impact on sourcing, given majority of copper is imported from Japan. The 10 gigawatt data center capacity by FY30 can add 30,000 crore revenue for the industry. Polycab uses LNG for aluminum rolling mill. However, it can be replaced with furnace oil. Company expects new entrants to disrupt wire segment given low regulatory buyers and higher unorganized share. I thought this was interesting. Ramesh, view on Polycab and how now the hunt is going to begin for alternatives. All right, we're going across to the biggest story of the morning. HDFC's conference call with investors to explain what's going on has begun. Let's listen in.
Mr. Srinivasan Vaidyanathan. Thank you, and over to you, Mr. Vaidyanathan.
Okay, thank you, Ranju. Good morning to all. Thanks for joining at short notice. We have with us Mr. KK Mistry, interim part-time chairman, and also he chairs the Stakeholders Relationship Committee. We also have a few other board members on this call. We have Dr. Mrs. Sunita Maheshwari, chairperson of the ESG committee. We have Mrs. Lily Vadera, chairperson of the Risk Policy and Monitoring Committee. We have Mr. Harsh Banwala, chairperson of the Governance and Nomination Committee and also a member of the Audit Committee. We also have Sashi Jagdishan. Our CEO and Managing Director. We have Mrs. Renu Carnage, who chairs a couple of committees and members of several committees in the board. With that much ado, I'll hand it over to Mr. KK Mistry for his opening remarks and take the call from there on. KK, thank you, and over to you.
Thank you very much, Srini, and good morning, and thank all of you for joining us at such short notice. We would like to address the recent development regarding the resignation of Mr. Atanu Chakrabarti as part-time chairman and independent director of HDFC Bank Limited. The board has accepted his resignation with appreciation for his guidance and contribution during his tenure. We wish him the very best in his future endeavors. On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements. The board and the management oversaw the largest merger in recent years in India's corporate history. The merger's successful completion and continued results have not only boosted the bank's balance sheet, but also given it a stronger presence in key products and services. The merged entity continues to build on its shared values and realize the full potential of its market synergies. The board remains fully committed to safeguarding institutional resilience and investor confidence. The bank operates with strong governance standards, robust internal controls, and an extremely experienced management team. Our strategic direction, business priorities, and execution capabilities continue to remain as always. The Reserve Bank of India has approved my appointment as the interim part-time chairman for a period of 3 months. The governance architecture that HDFC has built over the decades is grounded in transparency, institutional integrity, and long-term value creation. We remain focused on building on a strong legacy and working towards continued value creation for the bank's stakeholders. We share strong value systems, and I am confident of camaraderie and collaboration with the executive management in steadfast execution to meet all stakeholder objectives in an optimal manner. I also want to emphasize, and this is the last statement I'll make, that I would not have taken on this responsibility at the age of 71 if it did not align with my principles and the level of integrity that I would expect from the bank. So thank you, everyone. And Shashi, would you like to say something?
No, thank you so much, Keki. I think you've said it all. As I said, we all put in years of experience here. Our biggest treasure that we all have collectively with the members of the board, each of them are extreme professionals, and you as a part-time chairman is the trust and the integrity. I mean, that is a value system with which we have all grown up, and we've all been mentored in this wonderful umbrella of the brand HDFC, and we are proud of that. We'll continue to ensure that this particular trust is maintained not just now, but sustained for several years going forward. We will not do anything that will bring in ignominy. Of course, there will be a large organization, will have errors and omissions. We will continue to address them as we go along, but never will the tone at the top have anything which will have any kind of embarrassment to anyone, including our own conscience. Thank you so much.
With that, Renju, we can open up the lines for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question comes on the line of Kunal Shah with Citigroup. Please go ahead.
Yeah, thanks for taking the question and doing the call at the short notice. Firstly, maybe you indicated that at least there are no material matter that bank is aware about, or no specific happenings or operational issue. But maybe for such a strong wordings in the resignation letter, what do you think would have actually triggered that? Maybe that it's mentioned that it's not in congruence with his personal values and maybe ethics. So if you can highlight if there is something which would have triggered the friction which would have got created. And the second question is again, maybe it coincides the reappointment term of MD and CEO, which is now due in next 7 months. So how, since there are like board members also who are there on the call, maybe in terms of whether what would be the impact with respect to the MD and CEO reappointment, and maybe the application which would be made to the RBI, any timeline which you can suggest in terms of how should we look through in terms of this development over next 2-3 months? Yeah.
So let me try and answer that question, and then maybe some of my colleagues on the board can also step in. Firstly, let me say that we are not, none of us as board members are aware of what are the specific issues which Mr. Chakrabarty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned.
Okay, and in terms of timeline, so maybe generally 6 months prior to the reappointment, we see it getting applied.
I'm sure the NRC will meet in the near future and take a call. But Shashi is very much part of the bank. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
Sure. Okay. Thanks. That answered the question. Yeah.
Thank you. Next question comes from the line of Kaitav Shah with Anand Rathi. Please go ahead.
Hello. So in terms of, hi, am I audible?
Yes, you are.
Yes. Good morning, sir. Thank you for having such a quick call. So in terms of timeline, there was an additional message that was received by the investors that you all received the resignation day before yesterday, and the board received.
It was
yesterday. And sir, so within that timeline, you were also approved by the RBI to become interim chairman. So that happened very quickly. If you can just tell us what happened within that timeline.
All right. So let me answer that. I'm right now in Delhi. I'm not in Bombay. I was in Delhi yesterday also. There was a board meeting in the evening. After the board meeting got over and Atanuji gave his resignation letter, some of the directors of the bank went and met RBI, spoke to them, and that is the time RBI approved. So it happened at very short notice. It did not come with a 1 day lag or a 2 day lag, as you may have indicated. The letter was received by the bank yesterday evening, and they met the RBI. They met RBI later on in the evening after the meeting was over.
Thank you, sir. The speed really helps. Thank you. That was the question.
Thank you. Next question comes from the line of Suresh Ganpati with Macquarie. Please go ahead.
Yeah. So KK, was the issue with Mr. Chakrabarty there for a long period of time? You definitely would have minuted in all the board meetings the kind of disagreements that he would be having, because these things don't happen overnight, right, KK? So it's been a 2-3 year process perhaps. The press is quoting there is a power struggle and he wanted to operate on an executive style, again strictly going by what CNBC is saying. Has there been a long period point of differences over the course of last 3-4 years?
Well, differences on minor issues do come up from time to time, but there was nothing material whatsoever. Let me reassure you, in no board meeting has there been any kind of, complete differences of opinion or anything of that sort. And the board minutes will reflect that. Relationship, human beings are human beings. There will always be some relationship issue between individuals. Those kind of things happen. There was no power struggle in the bank, as you put it, Suresh. The bank works, the entire bank, the management team in the bank works as a cohesive unit, and to my mind will continue to work as a cohesive unit. When this thing happened yesterday evening, the first thing the board members did, people who were in Bombay, they met RBI, spoke to RBI. RBI gave their approval for making me interim chairman for a period of 3 months to just stabilize things and then move on. So that's the background. And differences of opinion and differences of views may always be there between individuals, but there was nothing, I repeat, nothing substantive, nothing whatsoever. And believe me, as I mentioned earlier, at the age of 71, I would not take on this responsibility for 3 months if the systems, processes, governance practices in the bank did not align with my principles and my level of integrity.
Thanks, Kiki. That is reassuring. Just one more thing. Of course, we talked about power struggle at the board. again,
there was
the
no
press
power
keeps-
struggle. There was no power struggle at the board. Absolutely nothing.
But what about power struggle at the employee level between the CEO or the DMD or the CXO? Just again, that also comes in. Is this also functioning well?
No. Kiki, you can join, but I would like to address that question of young Suresh. Number one is, Kaizad is a very dear colleague, and I have the highest regard and respect for him. We have worked together. Unfortunately, I do not know what kind of stories are going around, but today that man handles the entire business, the asset business of the balance sheet, which reflects the kind of respect and stature that he commands within the organization, both at the board level and at the management level as well. So that will continue. In fact, he will only get more responsibilities as we move forward. And the very fact that we were all unanimous, both at the board level, to send his name for yet another term as a deputy managing director reflects that, and we're extremely happy that the approvals have come, and he's going to be there for next 3 years, which is going to be one of our best years in the history of the bank. Thank you.
Okay, that's clear. Yakik, you want to add something, or this is fine?
No, I would add to what Shashi said. There is complete, let me repeat, complete and absolute unity in the management team.
Sorry, just one last question I have to squeeze in. How are the regulators, you have in Delhi, you have of course met, how are the regulators, the government, the SEBI, the board, everybody is looking at this particular thing? Because you need to get the shoe-in of the regulators at this point in time, right? So can you give us a clarity on that matter?
I have not come to Delhi to meet anyone. I'd come on a personal visit with my wife, so I'm really on a holiday today. But so I've not met anyone in the government, and RBI, my colleagues on the board went and met them yesterday, and maybe someone may want to speak on that.
So there were 2 whole-time members and 2 independent members who had visited the regulator. The regulator heard us out. He obviously, was very supportive of
We'll be going back to that investor call with HDFC Bank, but breaking news coming in. The first word coming out of Atanu Chakrabarti, the chairman who stepped down from HDFC Bank, spoken exclusively with NDTV Profit. This is his response even as the investor call is going on. Hiral joining us with more details. Hiral, you spoke with Atanu Chakrabarti on the phone. What is he saying?
Okay, so Tamanna, it's very interesting the way he was calm and composed about the entire situation. Now, his initial comments that are coming in is, one, I have nothing in terms of negative comments when it comes to HDFC as an organization, as a bank. It's a system that I have actually nurtured for 5 years. That was his first comment that I picked up from the conversation that I have had with him. In addition to that, he's saying is that in the letter that I've written, I am not pointing out to any wrongdoings at the bank. There is no malpractice that's happening at the bank. That's not what my intention is of the letter. And the only difference is in terms of where ideologies go. The way I want to function, my ideology is very different as compared to the board, to the management, to the ones running the organization. And hence, at this age, I have taken the decision to step back, move out and move on in terms of my career as well. But clearly, no malpractice. There is nothing that he's pointing out that could be a wrongdoing at the bank. It's mainly on differences when it comes to ideologies, why he's looked at stepping down right now. And from here on, he's saying that it'll be up to the management to figure out how they will be doing the day-to-day running and what Mr. KK Mistry will take over from here on as well. But categorically, it's mainly differences in terms of where ideologies go is what he's pointed out to, and he respects the organization and the board clearly.
Stock, by the way, and Hiral, it's important to have gotten that statement. Of course, we've been listening to the management and board members, new board members as well of HDFC Bank, the new chairman as well, KK Mistry, speaking about it. The stock has recovered from the low point of the day. Let's go back to that call to find out what else is being said, because I'm sure that everyone needs to tune into this.
Hi, Shashi and team. Look,
so far, whatever I've heard on this call, it doesn't make me any wiser than I was an hour ago, right? So, like, we've not seen, like, chairmen in India resign and quoting that they did not like, what was going on. It's basically a very scratching remark, right? People could resign because of personal reasons. Generally, that's what we see in India. So there is something. Would you kind of open up and, try and build some confidence with your investors? Like, what exactly was it? Because he was the chairman of the bank. I mean, it was not like he is an employee that resigned, saying something and means nothing. Thank you.
Look, I can only say that at the board levels, there has never ever been any kind of a discussion on any matter which is contentious in terms of governance, where appropriate, if there has been any minor issue here and there, these issues have been tackled appropriately. What caused that letter to be sent yesterday is something which really, to my mind, defies logic. But any of my board members would like to, or any of my colleagues would like to step in and say something. I'm not aware of any issue in the bank.
Sorry to interject here. So look, if it is too early and you guys have no idea why it was happening, so how can you say there is nothing behind it?
Because the bank has a very strong risk management process. The bank has a very strong audit process. The bank is a systemically important bank and therefore gets supervised continuously by RBI on a regular basis. The board carries out various kinds of audits of different functions, and there has never been anything from a governance standpoint, to my mind, which has come to the attention of the board.
And Sachin, do you have anything to add here?
No, I think Keki has sort of added whatever very well. It just encompasses all our thoughts and feelings on the same.
If any other board member would like to speak up, please do so.
I'm Harsh Vanwala. I head the GNRC, and I can assure you we hold highest regard for our conduct rules, and we believe strongly in sound governance. He was a member of the committee, the outgoing chairman, and all the discussions that happened within the committee, the resolution was unanimous. There was no difference of opinion by anyone. And bank and the management of the bank, whatever various committees have said, have taken due cognizance of that in line of the principles of regulation and governance which are required, and has come up to the expectations of employees as well as independent directors on almost all issues.
Okay, so all of the latest from that conference call will be on your screen. So you'll see it on your flashes. Stay with us. A lot of things happening in the last half an hour or so. Of course, markets have opened weak, as was expected. But HDFC Bank is really the story to watch out right now. So, I mean, your take on the call. Keki is a very reassuring voice. He always has been. He comes with that sort of, I will answer all your questions. I will be clear about it. Shashidhar Jagdishan clearly letting Keki Mistry take the lead as the most reputed name and the one to calm investors. But some sharp questions they had to answer. And the last one we heard, Neeraj and Alex, was if you yourself don't know why Atanu Chakravarti is upset, how can you say there's nothing to worry about?
Yeah, but I think from what they said that there is no issue of governance or any other factor which would have led to this, and therefore might be, is this indicative of an interpersonal reason which would have led to this, for a chairman position person to resign without giving the confirmation to the board about what it is, and then parallelly what is told Hiral. I think that is what the markets are pricing in, from a 8.5% downtick to 3.5% currently.
Sharp recovery from the low point, as much as 5.5%. To me, what stood out is the first statement that was made by Keki, which is that the board got this message from Atanu Chakravarti. They asked him what the specific issues were. Nothing was raised at that moment. So therefore, the point that is being made is that It is not corporate governance issues.
No operational issues
No
highlighted.
operational issues. So it's very clear. The statement that has come out is very clear. They can't possibly say anything else at this point.
No, but then my question is, and just let's pull up that statement in case you missed it. Atanu Chakrabarti spoke exclusively with NDTV Profit. What he said to us is on your screens. We've broken that story. He says HDFC Bank is an organization I nurtured for 5 years. I'm not pointing out to any wrongdoings. I am not pointing out to any wrongdoings at the bank. I mean, that's the statement which has seen some recovery in the stock. It says my ideologies did not match with the organization and hence it was time to part ways. Now, ideologies is a loaded word. What does that mean? This is not about your worldview on politics or religion or anything else. This is ideologies when you're working in an organization. What does that mean? Gurmeet Chadda, Managing Partner and CIO, Complete Circle, joining us in the thick of a huge news story that we're covering this morning. Ashish Somaya, CEO, White Oak Capital, AMC also with us. Welcome to both of you. We will talk about markets at large, but really can't possibly not start with what's happening with HDFC Bank. Gurmeet coming well prepared. I'm sure you've heard most of that conference call. Gurmeet, what is this, a self-created mess or is there more pain which is not apparent right now?
Tamanna, hi. I've been an ex-HDFC employee and I'm in touch with some of the people who are in leadership roles. So I think there's been a bit of a tiff between the board and the leadership for last few years. The stock hasn't done well. Senior employees have a lot of stake in terms of ESOPs. And there have been some issues with, without naming anyone, with board being involved sometimes in operations. And I think that is where the disconnect has come. Also, I'm not speculating, but some people also told me regarding the MUFG deal with respect to HDB, then finally going to Shriram. So there's been a lot of things on which there has been some bit of a maybe viewpoint differing between board and leadership. And I think that probably is the reason rather than any material happenings or governance, which is what I would like to believe. But, we'll see how things go out. And HDFC, in the longest period of time, in different credit stress periods, whether it was COVID, whether it was Lehman, whether it was during demonetization or the NBFC credit crisis in 2018-19, has come out relatively much stronger. So, and that's the reason I think on governance and material happenings, I don't see an issue. But yes, it's been an underperformer, and that's been one of the reason of a disconnect. And it happens when some largest weight, the largest bank doesn't do well. It does create a bit of an issue amongst various stakeholders. So it seems more like that than any material happening. That's my view on it.
Okay, Gurmeet, that's a fair point. Ashish, I want to come to you from the perspective on this is my personal view. I want to know what you think about it, right? Just the manner in which this was done. This is the largest listed, one of the two largest, certainly the biggest on the weight of the Nifty 50, right? So much in the way of retail shareholding, so much in the way of institutional shareholding. The uncertainty and the lack of clarity that is created by a message of an outgoing part-time chairman could have been avoided, Ashish.
Yes, I think, Alex, what has happened is what has got the goat of most people is basically, because that letter or that statement said that some of the things are not in congruence with personal values and ethics. And I think that's probably a bit cryptic or probably raises, doubts or raises questions. And I think that is the reason why maybe there is, some fear or some confusion in terms of what exactly has transpired. Obviously, because you guys have spoken and some clarifications have come forth, so that might soothe the nerves temporarily. But definitely, I think that the suddenness, sometimes when somebody suddenly just puts something out and says that I'm walking out effective immediately, I think it also creates that impact, right? Generally, someone might transition out over a period of time and say that, why don't you guys plan your way forward? I have decided to move on, right? That is usually what one sees. But when something comes suddenly, then it causes an impact. And maybe, that impact is desirable or not desirable, depends on whose perspective you really look at it from. But I think that, we have to watch, how things go from here on.
We certainly do. But I must tell you, the fact that out of the top 5 losers, HDFC Bank is number 5, and 3 of the top 4 are crude sensitives, shows you that the market is now more worried about what's happening in the Middle East as opposed to HDFC Bank, right, per se. And Ashish, I come to you here, and good talking to you after a while, and great to have you together with Gurmeet. What do you sense is in store in the near term if energy prices stay higher for longer until crude reverses? Are long bets off the table?
Yeah, I think that, look, to be fair, I think over a period of time, it's almost been like a Pavlovian response that every time the market declines, it's been like this for like 25, 30 years, because there was a point in time when a lot of education was desirable and a lot of education was done to explain to people that they need to think on a contrarian basis, and that every time the market declines, especially for external reasons, not domestic reasons. So whenever the market declines for external reasons, you should actually try to take advantage of it. Now, that has always been the right approach. But what is happening is that your question is very important in that light, because if this continues for long, then what happens is that, you may think that, okay, Nifty is down some 12, 13%, small cap is down some 20%, and I must buy the dip. But then if it remains like this, let's say, for example, you spend another 2-3 months at 22,000, 23,000 Nifty, then the problem is that a lot of people start to lose their patience. My sense is that if this ends right now, still we will have to deal with second order effects and watch for, now March will end. From 10th, 11th April, you will see corporate commentary. I think that commentary will be very, very important to see how it plays out. Also, let's hope, after Mr. Trump's statements yesterday, where there is some, lack of congruence is the buzzword now. So lack of congruence with how Israel is operating. That was kind of revelatory statement that he made. So I think that, it looks like they're looking for an exit. So if they are looking for an exit and they want to stop this thing, then I think we are better off. If it doesn't stop, if it prolongs, then I think buying the dip might turn out to be a bit premature, might turn out to be a bit hasty. So I have been telling people, and we spoke in the end of 2025 when the new year started. One was hoping and one was expecting that there would be a correction this year, more emanating out of US, this whole AI and the US economy, etc. And I personally believe that in the long run, US markets correcting is not necessarily a bad thing for us, because then with some lag effect, we will attract flows and we are becoming relatively cheaper and cheaper by the day. So I think 2026 is a time to enter, but one has to be cautious, careful, gradual, and invest over maybe 6 months rather than rushing into something. Watch out for when America extricates itself from the situation, and watch out for the corporate commentary at the end of the quarter.
Ashish, hi. It's been an eventful, sometimes it's strange. Kis cheez pe zyada dukhi ho? I think that's the state that markets are in. What should I worry the most about? Should I worry about Brent at 112? Should I worry about the fact that Qatar can't, they're very afraid that their oil fields, their gas fields are on fire? What will happen to remittances from the large Indian population in Gulf countries? So that's the position that, say, India is in right now. Are there any bright spots that you see? Because as of 24 hours ago, the mood was maybe worst is over, India will do relatively better, time to do some value buying. Is that completely off the table in your view?
Yeah, I think that, like I said, I was hoping for, this whole AI thing to, get back to its senses, so to say, because I personally felt that it was getting overextended, and the real world monetization, real world business use cases, I think all of that requires ITES companies to prepare businesses for becoming AI enabled. So there's a lot of work to be done on data integration, cloud migration, analytics, and then obviously AI enablement. So I think in the long haul, India would bounce back and we would do relatively better. But for that, this whole hype had to kind of cool down. Now, corrections don't come for reasons of our liking. So for whatever reason, it may be West Asia, or it may be the private credit and private equity thing happening in US, or it could be fizzling out. Now the result season will start. So again, questions on AI companies and their capex. So for whatever reason, I think if the US market were to cool off, it's not necessarily a bad thing for us. It's just that cooling off doesn't happen for reasons of our liking. And now the reason is more West Asia and the war. The second thing is that I think if all of the negative precipitates itself together, I think that's better for a discerning investor, because then you really move on. And the last thing which I'll tell you, I don't think it's any solace for investors who are listening to us, but the last thing I want to tell you is practically every second year, for some or the other reason, market declines 15-20%. Today we are talking, so we are discussing West Asia. Last year we would have been talking Trump tariffs. The year before that, we would have been talking coalition politics and India's elections. The year before that, we would have been talking about maybe Silicon Valley Bank, and before that, Ukraine war, and so on and so forth. So I think this is how it works. For my right set of reasons, every alternate year the market falls, and the reasons are never to our liking. We just have to see when we should take advantage of it, and I think that point will come sooner rather than later.
Well put, Ashish. Thanks so much on that note. And asset allocation is absolutely key in these moments. Thanks so much for taking the time. Gurmeet, I want to go to you, and I know that we've kept you waiting. But I do want to ask you, how much is priced in at this point? Because you're talking about the benchmark having cracked as much as it has, right? And individual counters having cracked even more. So the argument is how do you deploy if you're building for the long term? And you've always been a proponent of buying every month. And so accumulating units is the most important thing. But do you do that in this kind of environment?
Oh, absolutely. You actually do more, especially in these times, especially if you're looking at longer term. So maybe you can split the asset allocation into two. So equity, you can look at things which are less impacted or have less correlation with crude and conflict. Let's say telecom, defense, good names in pharma. Then you can do a bit of an accumulation. And then the second part could be where you can wait it out. Where the impact is more, because the petrochemical prices are surging, so the inventory levels go up, cost of inventory goes up, credit goes up, working capital goes up, and impact actually will reflect in the corporate profitability too. So whether it is capital goods, and petrochemical is the base for so many things, if you take different years. So I think that's how you should probably start this, because when market falls, the collateral damage is across, somewhere less, somewhere low. And then you can gradually build this up. And as Ashish also rightly pointed out, 3 months down the line, we'll have some another, wall of worry to climb. But as I said, this conflict needs to end. The more it prolongs, the more it creates uncertainty and ambiguity. And that's what market doesn't like.
Welcoming Abizar Divanji, founder at Neostrat Advisors, into the conversation. Abizar, it's been quite a morning. And, we've been talking about it. Would you have ever imagined a situation where the chairman of HDFC Bank would have resigned in such a public manner and made his displeasure felt so emphatically, yet vaguely, leaving more questions than answers?
Yeah, it's quite vague actually in terms of what he said. And then he's also come on a call I was seeing on your channel itself.
Yes.
And telling people that, no, there is nothing wrong with the bank. If there was nothing wrong with the bank, then why do the kind of provocative, resignation that one has done?
What he's told us is there were ideological differences, so we decided to part ways. We're trying to figure out how ideological differences and what that could mean in the context of a corporate setup.
So on boards, very frankly, differences of opinion and healthy debate is a very good thing. And frankly, if that has happened, that actually proves the governance of the organizations. Having known HDFC for quite a while, I do think that from a governance, from a debate, for an openness of discussion perspective, that organization has the right culture to do it, and it does do it. Now, ideally, what happens is sometimes as part of this discussion is that, some people may agree with a few things, others may find it ideologically different to do what they want to do. Sometimes management styles differ. A big thing that does happen is that when operating people, especially people who have been aggressive in their operations, come onto boards, there is a level of restraint that board needs to exercise. Board has to make its point, but the board is not running the bank. the board is taking responsibility for governance. And that responsibility for governance is a nice thin line which says that you are not an operator. And if you're not an operator of the company, then your job has to be with reasonable restraint to say that my job is to highlight issues. And if those highlighted issues become irreconcilable, I need to either be part of the board or I need to have a further escalation mechanism, which in a case of a bank would be a regulator. But to publicly come out and say that, there are ideological differences, it only stems to, and the fact that there's nothing wrong with the bank is what he said, basically stems to the fact that there could be personal differences in operating styles.
Therefore, the question is, good morning, Neeraj here. Is this maybe a smaller issue than what forget the stock reaction, I'm just saying the 9% reaction wasn't response to, oh my God, something bad has happened. But if the board doesn't know the reasons, if this is more an interpersonal issue, then it could happen with any individual in any corporation at any point of time. That it has happened with HDFC Bank right now is fine. Will the bank tide over this very, very quickly?
So ideally, it should not happen with every organization because, as I said,
I'm saying could happen, right?
Could happen. It could happen anywhere, of course. And that's possibly would have been the case itself, given that the statements of what both people have said. The big issue is that when there are these differences, is there considerable exercise of restraint? So there have been situations in the past, for example, where people have resigned. There was a resignation at Infosys due to some governance-related issues. There was something at JM Financial a few years back. I think if you make it into a splash, then everything becomes sensational. But if you actually try and if you do not agree with something, ease out, and I think that would be a better way to do things, because otherwise the organizations do get impacted. As you rightly said, HDFC.
Yeah, Abhizar, so 2 points here. And look, it's sometimes reputation comes into the play, right? Which is that if you are accusing somebody of doing something, ultimately it has to be believable. That's one. I'm not saying that there are no issues. I'm saying that reputation does come into play. I'm also asking you, Abhizar, from a regulatory standpoint, this is the change that took place at the top, at the chairman's seat, has taken place very, very quickly. So seemingly the regulators seized of the importance of moving fast on this. What do you think beyond what has already happened will be done by the regulator? Because I don't think that they've had the last word yet.
No, so I think clearly the regulator will want to get into what are the issues. And if the issues are simply interpersonal, then I don't think the regulator is bothered. Now, if you look at it from a regulator's point of view, HDFC has had some operating issues which they have sorted out with smaller fines. They have a larger issue in terms of integrating well the bank and the housing finance company. And that process, frankly, is mammoth. And you've got to give it to management that they have done a fantastic job at a time when times are turbulent. Do remember when ICICI and ICICI Bank merged, we had a low interest rate regime. It's much easier to do an integration of a large organization into a small one in those times. But when times are different, either turbulent or high interest rate times, then integration is that much more difficult. So I would not take those as real reasons from whatever I read in the press. But if it's purely interpersonal, then it's a cry-wolf kind of thing, because I would not expect the regulator to have made this issue into such a boil. Just by the way, had there been a single line resignation, that also would have called for a regulatory inspection. Because the regulator would want to know that if a term is not ended, what is the reason for a non-independent director, for an independent non-executive director to resign?
Gurmeet, now the prime question right now is, this is a quality bank. Now, clearly that is not changing. Even what Atanu Chakrabarti is telling us, that doesn't change that it's a quality bank. Is it looking like something you would want to buy at some point? Or does this make ICICI Bank now more attractive? And I'm saying this at a time when the entire market is in some different kind of an oil shock. Market is currently facing what you call an oil shock. But even so, financials always look relatively safer. How would you rate an HDFC Bank right now after all of this?
So, Tamanna, if you see, it's now trading at 1.7 FY28 book, maybe 13 times earning on a forward basis. Not seen it, at least for 20 years, I track this bank. So valuations have become reasonable. But because there is an overhang, I don't see much price action, while nobody can predict in the short term, but markets would want some clarity before it really starts participating. So obviously, relatively, the attractiveness of the peer, which is ICICI, goes up, and ICICI has been outperforming the bank on operating metrics, whether it is credit growth, the NPA profile is similar, credit cost profile is similar. I think one change Sandeep has done is remove these product-wise targets and focus on branch profitability. I think one key issue with HDFC has been very high attrition at branch level, almost 30% at the lower management, personal banker level. There's too much pressure on insurance and third-party products. And I think somewhere that needs to get addressed. I'm not talking about this incident. I'm just talking about in general. And also in terms of communication. I think post Aditya Puri's departure, the communication of the bank, the guidance of the bank, and as this incident happened, needs to be upfront. It's the premier bank of the country, systematically important bank. These issues should not come, even if they are ideological. So the communication, to the market, the approach really needs to change. So I agree with you. Relatively, other private banks may find favor for the short term, but valuations are very, very reasonable. I think it can't get more reasonable than this. If you see, SBI is probably 1.4 times, 5 times book, and HDFC is maybe 1.7, 1.8. So there's no difference right now in the valuation. Imagine this 5 years back when bank was 4-5 times book and HDFC was below book, and SBI was below book.
So just at 725 it is 1.5, right? So about 1.7 times Gurmeet is right. If you do it on earnings, 12-13 times, as Gurmeet said. I was just looking at the stocks and the way they have corrected from their one-year highs. HDFC Bank is down 20%, yes. Kotak is down 20% as well. ICICI Bank with this 3.5% downtick is down 16%. And Axis Bank is the best performing of the lot in the last 1 year, down about 13% from the peak, but still in the green from a one-year perspective. So a lot of these banking stocks have fallen in tandem. It's not that HDFC Bank, even after this 6% fall, has really been underperforming some of the others in a massive fashion. So point well taken there, Gurmeet. Thank you so much for joining in, Gurmeet. Really appreciate your time. Very quickly, Abhizer, the next steps, you reckon? I think on the con call they have explained that KK Mistry is in for 3 months and the board remains committed to protecting interest of all shareholders. Is this it, or would you believe more concrete comments need to come in?
I think, very frankly, they've handled it very well. They immediately got onto a press conference with the whole board. And frankly, KK's appointment also is excellent, given the fact that he knows the bank inside out. He's dealt with HDFC Limited for such a long time. So I think the one thing that they would do, in my opinion, going forward is to rationalize and stabilize the board. And that's all that we required. I think getting a new chairman in place is all that they would do. If there are internal reorgs, the internal reorgs are part of the normal business and not necessarily because of this particular resignation.
Okay. The real question is, what is the role of, I think the broader question becomes, Abhizer, what is the role of chairman and CEO? To what extent should someone in the position of Atanu Chakrabarti have a say in how the bank is run? Do you think that also now becomes part of the conversation around HDFC Bank, banks and governance in general?
So banks and governance in general, very clearly RBI also says this, that the governance, the ultimate responsibility of governance lies with the board. And the board is led by a non-exec chairman. So very clearly, the board is responsible for taking strategic decisions, policy-level decisions of the bank, remuneration-related decisions, and controls-related decisions of the bank. Every kind of fraud actually has to get escalated to the board, and the board is responsible for the corrective action taken on it. So RBI makes sure that banks in general are very board-driven. So that having said, the role between a board, and I'm not only restricted to an executive chairman, but between a board, non-executive chairman, a board and a management, is that the management operationally runs the bank's strategy. The board is an oversight which basically comes in to evaluate that strategy. Independent directors, mainly from a general shareholder perspective, non-independent directors from a large shareholder or management perspective, comes and defends that situation. And a consequent debate that happens as a result of this would make sure that the bank has adequate checks and balances in place. A board is not running the business, and often issues arise when the board tries to influence implementation of strategy rather than just directional and oversight.
On that note, Abhizar, thanks so much for taking the time. I think this is by far and away the biggest story of the morning, and I appreciate that you've taken the time to speak to us.
Thank you.
All right, well, see, there you go. Pull up the intraday chart for HDFC Bank, and it did slip just a tad bit from the high point, now trading with cuts of about 0.5%. 800 is the mark that it's currently holding. But let's talk about other stories as well. And there are several big ones that are panning out right now. In the pharmaceutical space, one of the big talking points is the ending of the patent on semaglutide, and this whole conversation about GLP-1 and what it means not just for the pharmaceutical industry but also for you, the customer. But specifically, let's talk about how Lupin is viewing these changing times. And joining us to speak about this, we've got the management, but Hiral is having that conversation. Hiral, over to you.
Thank you so much for that, Alex. You know, this is going to be an interesting time for the Indian pharmaceutical industry as a whole when it comes to the GLP-1 portfolio, because the sector is set for a major shift. You have semaglutide that goes off patent. It's actually opening up one of the fastest growing drug segments to domestic players. And this move will, significantly improve access and drive a sharp surge when it comes to demand, mainly due to lower pricing. Joining us is Ramesh Swaminathan. Ramesh, welcome to the show. Always a pleasure to speak to you as well. I mean, this is an opportune moment for the Indian pharmaceutical industry. You have semaglutide patent, which expires tomorrow, which is the 20th of March. How big, according to you, is this an opportunity for Indian companies and Lupin specifically?
The semaglutide becoming generic is certainly a very large opportunity that all of us are excited about. Clearly, because of the fact that India has a very large population of diabetic patients. There are more than 100 million people who have been impacted by diabetes, and there are a good 125 million who are pre-diabetic. About 50 million people would really be obese as well. So clearly, it's a very, very large market. If you look at, in fact, the numbers, the growth rate, there's 15.7% in the last 3 months in terms of diabetic products being consumed. Whilst if you were to exclude, in fact, the impact of GLP, it would normally be about 7.8%. So clearly, there has been an increase in terms of consumption of anti-obesity products. Clearly because of the kind of advertisements that you see on TV, on airports and stuff like that. So clearly, there's a lot of visibility going on, and that is in fact setting the expectations as well.
Okay, so expectations very high, but what happens when it comes to pricing? Because the innovator, that's Novo Nordisk, is already dropping prices. The differential between the innovator and the generic player like yours will be probably minimum. Do you think this could be a deterrent for the generic players, or are you seeing this still as an opportunity?
I would still think that there is going to be a big opportunity for the generic players as well. We have seen this in other products, So if we, for example, look at Sidmus, which is also a heart failure product, a genericized price dropped, and clearly the market expanded with a host of generic players coming in. So clearly, I would imagine this is going to be the way it is for GLP-1 drugs as well.
Okay, so that's with regards to a generic version of semaglutide. Now, beyond March 2026, the injectable launch is what everyone is eyeing. What is the status when it comes to oral semaglutide as well as the other GLP-1, products as well, like liraglutide, which you've recently received a US FDA approval for?
So clearly, we are excited by the overall opportunity of anti-obesity products, so clear. And as and when other products also come into the market, we would be looking at either in licensing or perhaps if they're going to be genericized, getting into the market. So, it's a big opportunity and everybody, is pretty excited about this.
Okay. Ramesh, my question is now moving away from GLP-1 slightly, because I'm sure the geopolitical tensions are impacting the supply chain shifts that are happening, not only for the GLP-1 portfolio, but for the others as well. With Lupin having an exposure to the US market, which is pretty large, how is the impact currently when it comes to the Strait of Hormuz being closed, supplies getting disrupted? How are you looking at this entire situation?
Well, I would certainly agree that there is going to be an impact as a consequence of the war. clearly there is going to be a shortage of quite a few materials, raw materials to start with. I'm seeing this in chemicals, I'm seeing this in solvents, I'm seeing in other products, in other inputs as well. And more importantly, freight costs have actually shot through the roof. The number of containers lying in the port itself is a humongous number. So from that perspective, moving it itself is going to be a difficulty. Air freighting is, of course, is going to be extremely expensive. So it is going to be a pretty not a good situation at all to be in. And the only consolation is the fact that it's not merely going to be Lupin. It's going to be an industry phenomena, and it's not necessarily just a pharmaceuticals industry. It's going to be across the entire spectrum of industries that you're speaking about.
Ramesh, agree, it's not only pharmaceuticals, industries across are seeing that heat that is being felt in terms of escalation of costs, downtick in terms of revenues when it comes to the export side of the business. From a Lupin perspective, what is the impact that you are looking at?
No, I would imagine, perhaps if it is going to be pretty long time, then clearly we'll have to look at ways of passing it on. But for the short term, of course, you'll be impacted in terms of margins. There is going to be a cost pressure, and one has to do what it takes to kind of, cut down on a few things and tighten your belt.
Okay, so tightening the belt and impact on margins in the short term is what Lupin is eyeing. Very lastly, India is betting big on biosimilars. Where is Lupin in this entire journey, and what's your view?
No, we are also pretty excited about the biosimilars opportunity, given the fact that the framework has actually has gone through a change. Firstly, I think you would appreciate that private labels are on, given the fact that there is the interchangeability aspect has been brought in. Secondly, the regulatory pathway, they're not insisting on actually PD studies. You could actually substitute that with biomarkers, for quite a few number of products, and that would in fact open the gates for a number of players, and that would actually mean the market would expand. But you would also appreciate that we are pretty, we are amongst the early entrants into this game with the capacities having been set up for some time. So the number of players, we service, in fact, the small molecules is certainly on the lower side. So from that perspective, I would imagine it's a great opportunity for incumbents.
Okay, so biosimilars as an opportunity also pretty large. Impact of Israel-Iran war also pretty large in terms of the short term, and GLP-1 a major opportunity. That's the key takeaway. Thank you, Ramesh, so much for joining in. Always a pleasure to speak to you as well. We'll quickly slip into a short break. On the other side, more news lined up. Please stay tuned to NDTV to do not miss the coverage that we have exclusively for all our viewers.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you The investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome back. We spend this time of the morning from the last couple of weeks speaking to a geopolitical expert, because that's really what is moving everything around the world. But before we do that this morning, just want to quickly take you through what's happening to markets. HDFC Bank's turmoil notwithstanding, markets are in a bad shape. I would say that all of the gains that have been clawed over the last couple of sessions at least have been wiped out decisively. The Nifty is at 23,200 levels. I mean, think about it this way. Just at the close yesterday, we were talking about the possibility of 24,000 coming back. Of course, that seems far away right now. Nifty IT about 2% down, and Bank Nifty is the one that's getting badly hammered, and of course in part because of the weightage of HDFC Bank, which is going through its internal issues right now. Their chairman quit, said I have ideological differences. They have a new interim chairman, which is KYC Mistry, just for 3 months, and they're saying they're sorting it out, but that hasn't really helped. If you look at the overall advance decline ratio, it's an extreme bearish mode right now, and you're seeing actual fear coming into the markets. In the middle of all of this, we have a statement from KYC Mistry. It's his first statement to any media organization which has come in, and he has said some of what he already did say in the conference call. Due to legal issues, we understand there is a limitation to what he can say right now. So this is what he's told us. I would not have taken this responsibility if HDFC Bank had not been aligned with my principles and values. That's the statement coming in from KYC Mistry at this point. But let's move on to the geopolitical. And Sushil Singh, former ambassador, joins us on this segment on the show this morning. Sushil Singhal. Ambassador Singhal, thank you so much for your time to us this morning on NDTV Profit. And
thank you.
Joining
thank
us
you,
and just
for having me.
Absolutely joining us in and giving us perspective, because a lot of people watching this program are investors who are now heavily engaged in what's happening geopolitically, but we need to give them context. Is it safe to say that the events of the last 12 to 14 hours have worsened the situation extensively? This is the worst case scenario playing out when this entire war started, isn't it?
Certainly, Tamanna. The attacks which have taken place on the gas field, I think it is a game changer. Though President Trump has, given he has spoken in two ways. One is, of course, he said Israel will not do it again, but at the same time, they have threatened Iran that if they continue to attack Qatar, because they have also attacked some facilities in Qatar, then the attacks on the Iranian oil fields will commence or will continue. But the point is that this attack, this is, as we all know, Iran and Qatar both share the same gas field, gas reserve rather. And if it is damaged, so it will damage the Qatar also. And we know that Qatar supplies is the largest, supplier of gas to the world. So if that is affected, it is going to have a catastrophic impact on the global economy, particularly on the oil and gas industry. So I hope and pray that they will stop doing this, what is happening, because if this happens, we are moving in a very, very, bad phase, and there'll be a lot of shortages. Already the oil has crossed $113 in the morning. So it will go further down, further up, and the economy of or not only one country, everybody will suffer. In our neighborhood, we are already seeing that what is the status, what is the situation there. India is helping them. Of course, our spokesperson has just said that India is considering the request, and my feeling is that we will be helping them with the shortages. But India also has a finite sources. We all know that. So India will also be affected if it goes on long run. And but again, as I said earlier, that hopefully the better sense will prevail.
Sure.
And they will stop attacking these gas field and oil fields.
Sure. At least the statement that was made, Ambassador Singhal, by Donald Trump seems to suggest that that indeed will take place. He's called for a cessation of strikes on oil infrastructure. But one asks why this took place in the first place. And of course, not reading too much at this point into Donald Trump's posts on Truth Social, but the tone of what he is suggesting seems to say that Israel has done its own thing. And this is not something that the US was aware of. So it is very clear that Israel is pushing its own agenda in this matter and the war front that they've taken up. So the question is, even if the US does want to exit, does it become harder for them because of their partner in that region, which is Israel, which is pushing its own agenda?
Well, the point you're making is very valid. And let me take you back to June 25, when Israel on its own attacked Iran, and President Trump came out as a savior. And he, of course, did one sortie and said every objective is achieved. And then he said, I'm mediating the peace between the two sides. So he became a mediator also. Of course, at the time, Iran did a symbolic attack on American base in Qatar. And USA was informed, it was all state managed. This is what normally Donald Trump does. But this time, I think the Israelis learned their lesson that Donald Trump, being what he is, will look for a very quick victory. And somehow, I don't know how, Israel was able to convince him that this is going to be a quick, operation to the like of Donald Trump. And this, once they take out the leadership, first year of the leadership, it will have internal contradictions and it will collapse, which is normally liked by President Trump, given his history. But I think Israel knew what they are getting into. Because the kind of game plan they had. And if you remember, when we say that Israel has gone wrong, Israel is having, right, I absolutely agree that Israel has its own agenda. And sometimes he takes USA for granted, and sometimes he is forced because they have to show joint front. If you remember, Israel also attacked the oil depots in Tehran when there was a big fire and the black soot was all over the place. And at that time also Donald Trump was not happy and told them not to attack. So Israel resisted for a few days, and then again they have done it in this oil field, which is very dangerous because it's, as I said earlier, it is being shared with Qatar. This same oil resource or gas field is shared by the two sides. So again, I think President Trump was taken unaware. And let me take another point here, just to reinforce what I'm saying, that when this counter-terrorism chief resigned, who is now being apparently investigated by FBI for disclosing some state secrets, wherein in his resignation letter, he mentioned that Iran was not a threat to USA, and Israel is the one who took them, forced President Trump to go into this war.
Yeah.
I'll stop with it.
Fair call. Ambassador Singhal, very quickly, does this, the last set of posts that have been put up by Donald Trump, etc., suggest to you an off-ramp, and could that happen sooner, or is it difficult to call?
Well, the problem is that, President Trump is President Trump. And as we know, he always liked to claim victory. And in this scenario, at this moment, he is not in a position, even being a President Trump, to claim that he has achieved, he is a victor. Because Strait of Hormuz is still closed for him. And so he is looking for a way out. But way out which is honorable to him, where he can claim victory. But Iran is not letting him have it. And my feeling is, despite not wanting, Trump is getting involved more and more. The way the news is coming that more Marines are being brought in, which shows, I think indication that they are considering maybe ground invasion, or particularly maybe because there was some news that they will try to occupy Hog Island and control, because that is the center where the Iranians send their export their oil. It's the main nerve center, and they have a lot of reserves. So looks like that he's getting sucked into this war without willy-nilly, without his willingness, without his wanting.
Yeah, you could argue a lot of people feel like that. Thank you so much, Ambassador Singhal, for giving us your thoughts. Really appreciate your time this morning.
Thank you.
All right, last guest on the show today, and an important one, Manish Sonthalia, Director and Chief Investment Officer of MK Investment Managers. Long ago, Manish had told us that we fund managers have ice water in our veins. We have nerves of steel. And I guess all of those need to be pulled into question right now with the markets doing what they are doing. Manish, is it easy to have those nerves of steel currently, or are you wondering where the next hit to the portfolios could come in? Because it seems to be coming in every second day.
So we are used to these sort of situations, Neerav. So this is not the first time that we have seen these sort of drags. You have seen 2008 global financial crisis, Asian crisis, COVID, and now this is the recent one. So nothing too extraordinary or alarming, given the drawdowns that you are seeing. But yeah, it is unnerving. That's to say the least. I think the situation looks like to be stabilizing. Of course, it's very fragile, and new developments emanate every day after we close. So how do we look at this situation? I think 24,000 is a pivot on Nifty 50. And why I say this, because over long periods of time, this 18 price earnings multiple have stayed. Now you could argue that given that oil is at 110, and this could have a damaging impact on the earnings. So even if we build in, let's say, some damage on earnings, and we look only at FY27 numbers, it's no point looking at FY28 right now. Before all this started, everybody was working with 1250. Now, let's say you take some depreciation, let's say a 50% margin compression going into the first quarter FY27, and inflation is going to move up, costs of capital is going to become dearer. All of that built in, you build in another 5% depreciation in earnings for FY27. Even then, we are traversing on a deviation away from that 24,000 pivot. Now, how far can this go on the downside? It depends on what sort of a Six Sigma event that we are building in. Nobody built in damage to energy infrastructure, which could impact global prices, but it's happening. So 1 sigma deviation away from what is the normalized situation, you could be looking at, let's say, 22,000. And that is what we defended even during Operation Sindoor. So we are very close to those levels. So that's how I would read the situations. And, we always think in these sort of extraordinary situations that the world is going to come to an end. World never comes to an end. Market always reverts to mean. So some could say that the glass is half full. Some would say that the glass is half empty. That is how opportunities emerge. So I'm in the camp who is an opportunist and an optimist. And I think these sort of times one should, if somebody has dry powder, should look into deploy more. If somebody doesn't have dry powder or fully invested, one should keep the faith and, hope for better times to come.
Yeah, there are several sayings about hope and dunya kayam, etc., etc. Manish, but having said that, let's talk about earnings impact, right? You mentioned energy infrastructure. I'm just wondering, because this kind of an incident hasn't taken place in this century, is there an underestimation of the extent of the damage and impact? Because a lot of people seem to think, Manish, that once this settles, and the dust will eventually settle, that things will bounce back very quickly. Oil will fall from those heady levels that it currently is at, and it's heading towards that $120 per barrel mark, and that supplies will be adequate. But let's face it, infrastructure is getting damaged, and some are estimating that it'll take years, not months, to get things back in line. So are people underestimating the extent of the impact?
Look, we have seen this $140 crude in the past also. Infrastructure getting damaged will take, let's say, 1 to 2 years to build. There are alternate supplies. You have Russia, you have the US, who can fill in the gaps because there's ample reserves of energy and it just needs to be tapped. If the Middle East is one source and it gets damaged, of course, supplies are going to move to other parts of the world and they could benefit more than what the damage has been from the Middle East. So supply chains will get disrupted, working capitals will get elongated, but I think it's not going to be like that. The world is not going to have energy at all. In our country also, we might pivot to renewables as an increased focus. Government may incentivize more. So sources of energy might change. Supply chains of energy might change, but I think that is the impact that one needs to see. And it's not that, we haven't seen these sort of situations in the past. We have seen it. And near-term damage to earnings is getting priced in as we speak.
No, so Manish, what is then the conclusion of it? Because I think you are one of the relatively optimistic voices that we've heard since this morning, saying that we have seen bad times like this. By bad times, I'm assuming you're talking about crude at 112. Would you have the conviction to go out and buy right now then?
100%.
Really?
100%. Yeah, absolutely.
What would you buy? What spaces would you look at right now? When you're seeing
there's collateral damage across the sectors.
Yeah.
Tamanna, there's collateral damage across the sectors, but relatively speaking, anything to do with healthcare is immune. Whether it is health insurance, whether it is hospitals, whether it is pharma, these are immune. You go to talk about metals or critical minerals, this AI infra build is here upon us, and sooner or later when this whole war situation diminishes, again you'll have that renewed theme of AI getting built, and in that the critical mineral space is likely to be much in focus. So that is another space where there's opportunity. We have seen enough damage in the technology space. Now these companies are trading at 5% free cash flow yields. So whether there's an opportunity, of course there's an opportunity. You can't have earnings yield or free cash flow yields of 5-6% and see further damage. Unlikely. These are some of the spaces which look pretty much there. Of course, now when we are looking at, let's say, elongation of working capital cycles, of course, near term or just in time inventory is no longer going to be in vogue. You'll have enough days of inventory that will be required, and all of that means better opportunity. Working capital facilities required will be good for credit growth in the system. So again, banks and financial services will come into focus.
Since you talked about banks, I know you might not talk specifically about HDFC banks, but are private banks something that you would look at, or public sector banks?
Private sector banks as well as public sector banks. Of course, one thing which I must highlight out here, that the market share loss in the loan book of public sector banks is not falling anymore. So market share of public sector banks, which post-COVID was declining, is now stabilized at 60%. So PSU banks are no longer losing market share to private sector banks. Of course, deposit market share, the private sector banks still have an edge. So deposit accretion to private sector banks is still. But when we talk about the LDRs, the credit to deposit ratio, we are somewhat more, favorably placed as far as PSU banks are concerned vis-a-vis the private sector banks, because there's a scramble for deposits in the system, and because of ATC deduction not being there, savings deposits is a problem. So all in all, I think it's a pick and choose. Valuations of PSU banks are quite lucrative, and valuations of private sector banks are also correcting. So anything closer to fair values on the price to book basis, given vis-a-vis the growth, those are a buy, both in the private sector and PSU banks.
Manish, presumed in your gumption to buy currently would be a hypothesis of peak oil prices currently, that they will not substantially stay longer from here on, right? I presume. And
so Neil, the way to look at it is how much is going to be the damage to your growth.
No,
right?
so okay. Sorry, but my question was more specific for OMCs. So what I was trying to think was that if that is your hypothesis, that oil prices will not necessarily stay longer for longer, there's been severe price damage in oil marketing companies already. Do you reckon they give you an optionality currently, or that sector is out of the window?
100% is an optionality, because you value these sectors on price to book, never on price to earnings. And anything below one-time price to book is a margin of safety. Particularly in the energy space, when we are talking about next 5 years, power and energy is going to be in focus. India is going to require a lot of energy, given that we have to build the AI setup. In that, so-called commoditized sectors will be bid after. And let's say near-term price escalation is not happening due to crude oil prices. That creates a cushion as far as margin of safety in some of these power and energy and ONCs. It's all proxy to energy, right? So, it creates margin of safety. It's a buy, according to me.
Okay, some conviction there, and yes, things will turn. Question is when and how long can you as an investor hold out? Manish Santhalia, thank you so much for speaking with us this morning. And, we're talking about now relief measures which need to come in for various categories of stakeholders, and exporters are likely to receive fresh relief measures amidst the Middle East crisis as the Commerce Ministry meets the DGFT and other officials later today. It's an important meeting which will take place at noon today. Rishabh Bhatnagar joining up with a heads up to what is expected. Rishabh.
Absolutely. So a very crucial meeting today. You've had a lot of exporter relief measures come in from the Customs Department. You've had some sort of measures coming from the Shipping Ministry in terms of the directions given to ports to handle back-to-town cargo. A lot of issues, logistical issues being faced, of course, by exporters and shippers. So now some sort of relief also expected from the Commerce Ministry side, from DGFT, and what this could be based on is, of course, some sort of a procedural ease. You will have a lot of these export obligation clearance certificates that are currently that take a lot of time for approval. So far, that could be shortened. What we're seeing is that in terms of credit guarantee as well, on that front, we could see some sort of relief coming in for exporters. Remember, they have been badly hit across sectors. Now, in terms of commercial LPG also being stopped, so there is a multifold effect that is being felt by them, and so relief is being rolled out on that front as well. So we'll stay tuned to about noon is when we can expect some sort of an announcement there as well.
Okay, all right. Thanks so much for getting us those details, Rishabh, and we will, of course, stay with that story. But that brings us to the end of this edition of India Markets Open. It's been an exciting one. That is one way to put it. We are trading very close to the low point of the day for the benchmark Nifty 50, and HDFC Bank continues to be a key story to track. I'm sure you've got several questions about stocks that you own or you'd like to buy. You can take them up on the next show, which is Ask Profit. In the meanwhile, from Tamanna, Neeraj, me, and the entire team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
You're watching Ask Profit here at NDTV Profit. I'm Mahima Vacharani and with me is Soumit Sarkar, and we are here to solve all your stock related queries for the next 1 hour or so. But before we do that, let's take a quick look as to how the markets are doing. Right now, the Nifty is down by over 2%. The only stock holding up for the Nifty 50 right now is ONGC with gains of about 1.4%, followed by small gains in Coal India for about 0.4%. But on the flip side, you have the biggest bank losing its ground, down by about 4%, but recovered from its day's low point. Shriram Finance, Eternal, Bajaj Finance, L&T, Axis Bank are some of the names which are also losing ground in that range of 3 to 4% each. You have Tata Motors, Grasim, Interglobe Aviation as well losing ground. So not looking very good for the markets today for sure. And that's the same story with regards to the broader end of spectrum as well. The mid cap 150 and the small cap 250, if you can try to pull that up. The mid cap 150 right now is down by about 2%. The small cap 250 is down by about 1.7%. That's with regards to where the broader end of spectrum goes. We can quickly pull up the broader end of spectrum, the BSE 500, to see some of the names going on and see as to what are the counters that are gaining today. There's Gujarat Alkali, Adani Total Gas, Gujarat Fluorochem, all seeing some gains coming in, but HPCL, NBCC, Eternal, etc. losing ground. So that is with regards to where the markets go. But I think the biggest story today is HDFC Bank. And to understand as to, every viewer out there who's holding HDFC Bank as to what should be the next course of action for him or her, we have Parag Thakkar joining by, who's the head fund manager at Fort Capital, joining us now. Parag bhai, thank you so much for taking out the time.
Thanks.
You have been the biggest advocate for this particular counter. Does your view change now, considering what's happened overnight and after the con call commentary coming in?
No, not at all. My view remains same, very positive. In fact, the entire fall in HDFC, ICICI kind of stocks today. Of course, one of the reason is geopolitical, and because crude, when you see Brent oil at 112, everybody panics. So one of the reason is that, but this reason typical to HDFC Bank, I would say that this is a great opportunity. As I have always said, I have great faith in the CEO, Mr. Sashi Srini, the CFO, the Bhavin Lakbatwala, this entire team. Plus, now that Mr. KK Mistry has himself stuck his neck out, and he has said that at the age of 71, I would not risk my integrity and my reputation, which gives you huge comfort. Plus, I think the NDTV Profit has taken interview of Mr. Atanu Chakrabarti also, where he has said that he has not pointed out to any wrongdoing in the bank. In fact, he has said that he has nurtured this bank for the last 5 years. So I think most of the concerns are it is related to ideology difference. And I would say that at this price, at 800, just to tell your viewers, right now nobody focuses on fundamental valuations because everybody is sentiment driven. But just to bring that one point, that HDFC Bank FY28 book value is 460. Now today price is 800. Subsidiary value is around 130 to 150. Okay, so you are getting this bank at 650 rupees, core bank, which is going to do a EPS of 65 rupees in my view in FY28. So it is 10p today exit. Plus price to book wise also, it is 1.6 times for a bank which can do 1.9 to 2% ROA. So I would say that this is not the time to panic. In my view, once this war-related thing settles down and this entire worry about crude oil going to 150 settles down, and I hope it does not go there, otherwise it is bad for everyone and all bets are off for some time. But if oil settles down lower and if things normalize on the geopolitical front, then this would be this price of HDFC Bank will be taken as a, investors will regret that they have not bought at this price.
Sir, you have been invested in HDFC Bank for a very long time, and as Mahima was mentioning, you were quite bullish on this bank. Given the fact that you were an investor in this bank for a very long time, did you have any kind of hint that there was some ideological differences between the chairman, between the CEO, anything of that kind, any hint that you had earlier about this?
No, Samit, basically, see, I'll tell you, when we do investing, we actually develop a trust on the DNA of the bank, right? So when Mr. Aditya Puri was there and after that Mr. Sashi took over, and I have personally worked with HDFC Bank for 5 years. So I can tell you the DNA of the bank, the entire culture of the bank, I have seen it through my eyes. So that is what I can tell you. What ideological difference the top management had with Mr. Atanu, that of course only management can tell you, or Mr. Atanu has to, and he has told you, right, that it is just ideological difference and not anything to do with wrongdoing in the bank. So, and I would once again tell people that if you have to see asset quality across the cycles, business cycles, be it 2007-8, be it 2000, any tough times you see in the India in past, HDFC Bank is the one, and of course followed by Kotak Bank also at that time, and now after Mr. Bakshiji has taken over in ICICI Bank also, you have not seen any big asset quality shocks here. Right, you might have seasonal asset quality issues in agri and all, which comes in Q1 and Q3. But I would say that in banking or lending business, the most important thing to focus is asset quality, and that is where HDFC Bank scores the best across the cycles, I would say.
Obviously, there is no doubt about the financial performance that we have seen for HDFC Bank. Okay, you attended the call. How was the mood there? Was the management quite confident? Because I believe they still did not clarify on what ideological differences they were that were present there. They did not mention what were those differences there. They just mentioned that there was ideological difference. Do you think they should have given more clarity on that front as well?
See, I would not expect that in any organization, there are so many people, there might be difference of opinion in every organization, right? And it is not right for management to reveal what kind of exact, on what aspect there was a ideological difference, right? So Mr. Chakravarti has all the rights and he has taken his call, and he has also clarified that it was just ideological difference. So I think I would thank NDTV Profit team, especially here, that she took that interview, because otherwise we would have just heard one part of the story, which is HDFC Bank part of the story, where Mr. KK Mistry has actually stuck his neck out and said that everything is perfect with the bank and there is no problem, which also was very, very reassuring. Because in past I have interacted with Mr. KK Mistry very closely, and I know these are all good, great people in which our country is fortunate to have. So I would say that, but very rightly so, you took the interview of Mr. Chakravarti and he also said this, that there is no wrongdoing. I think that reassures the investors.
Right, thank you
and
so
today,
much.
of course, today, so just to, today, when oil is at 112, it is difficult to expect a big recovery. So I'm not talking from the perspective that investors should buy today to say sell in 1 week or so. But it's from long-term perspective. Once this entire worry around West Asia conflict settles down, definitely this will be a great price to look at from long-term perspective.
All right, Parag Bhai, thank you so much for giving us those details with regards to where HDFC goes. So viewers, the take from this conversation is that do not panic sell right now, considering the entire overnight development plus the con call views coming in, plus the expert views as well. But moving on and taking all your stock-related queries, we're to answer all these queries, in fact, we're joined by Sameer Dalal of Natulal & Sons Stockbrokers and Kush Bora with us in the studio today, of course, founder of kushbora.com. Thank you so much for joining us, gentlemen. I'll take up the first question, which is from, in fact, before I do that, Sameer, your quick take on HDFC Bank, because you have also been, one of the biggest advocates for this particular bank.
Yeah, I continue to remain a big advocate. Look, one person in the management, if he has a disagreement with the rest of the team, and if he goes, okay, it happens, things like this happen, right? Now, we don't know what the reason is. Unfortunately, you see the chairman, being the chairman, he has not found it necessary to inform the shareholders what his problem was. So how do we decide based on just, very open-ended statements? I think the responsibility of the chairman should have been that these were the reasons I had a problem and this is why I've chosen to exit, rather than just leaving it in ambiguity. And especially when you are in a situation where the bears are in full control of the market. You see, what happens is when fear-mongering comes into a place and there's already panic on the street and it adds on to the negativity, it does create a problem. So for me, I think this was something the chairman shouldn't have done in the way he's done it. Having said that, look, as long as there is no problem with the financials of the bank, if the numbers are to be believed, if, there's nothing incorrectly done by the existing management, then I think the stock will bounce back quite quickly. People will forget this chairman, KK Mistry, who's coming in his place, is a HDFC veteran, phenomenal guy who grew HDFC Limited, and he will steer the ship the way it needs to be steered and make sure everything goes well. So I continue to remain a positive, continue to remain positive on the stock. I think over the next year, you'll easily get a 20% return from here. And for me, it's a buy. In fact, I would be buying today as well.
Right, so that's one more positive take coming on HDFC Banks. Kush, quick view on the charts as well.
Even before this news came out, ever since HDFC Bank fell below the 200-day moving average early Jan, my concern is that the volumes on the downside have been heavy and we've seen that slide come in, right? 800 is a key psychological and technical mark. The stock holding above it and, regaining that lost ground is a good sign. This is more like a panic bottom. So there's a good possibility that we might, see the stock at least consolidate here, go sideways. But it's a heavily owned stock anyway, right? One of the most widely owned. So I don't think anyone would want to deploy fresh capital. But if you do, then yes, this is a good entry point.
Okay, all right. So that's the holistic view coming in for HDFC Bank. Let's start taking your queries. The first one is from Prem, who's writing us from Dubai, asking about Cipla. He's got 100 odd shares at the levels of 769. Wants to know if he can continue to hold or sell. He says the stock has been constantly falling. Kush, your view on the charts?
Yeah, so right now it's a good idea to sell and take some money off the table. He's right, the stock has actually fallen off those 1700 odd levels, and even now the volumes on the downside heavy. So my suggestion from a near-term perspective, since you're seeing good profits on this one despite the fall, it's a good idea to exit at the moment.
Okay, all right. So that's the view coming in on Cipla. The next one is from Lokesh, who's writing us from Bengaluru, asking about Anant Raj. He's got 150 odd shares at the levels of 495, and he says that he's also averaged these in the past 1 year. Wants to know a view on this from Kush, and he's sitting on a loss of around 5.6 odd K. So Kush, on the charts, he's saying that considering the current geopolitical situation, he's worried. Do you think the charts are constructive? What should he do?
Yeah, well, I think Lokesh already knows my answer before I go ahead. Why did you average it? I know he knows my response to that. Shouldn't have, but it's all right now that, the deed is done, it's done. I would suggest you should continue to hold. Yes, there is weakness in the stock. I will not deny that, but there is a strong support at the 425, 420 kind of zone, that zone. So keep that as your stop loss. If that is tested and broken, then things get a little messy from here on as well. But for now, you could continue holding on. Keep the 420, 425 band as your stop loss.
Right. The next query is coming in from Abdul Rashad from Kerala, and he wants to know whether is it a right time to enter Indian Oil Corporation for the next 6 months. Any target, any stop loss that you could give for this one, Kush?
Look, let's be frank. I have rarely ever recommended, this pack of stocks, not just this one, this pack of stocks. And there is far bit of volatility on crude right now, and hence the stocks will also remain very volatile. My honest suggestion is to stay away from this. But since you've asked for levels in particular, I will give you those levels. Mind you, this is not a recommendation to buy or sell. In this, the support comes in at the 138 mark. And on the upside, there are resistances around the 160 zone. I'm just rounding that off. So if you want to take your trades, maybe with those levels, you can consider them yourselves.
Okay, viewers who are tuning in, you can also give us a call and ask your query on the number that will be flashing on your screen up there. There you go. That's the number. You can speak to us online and ask all your stock-related queries. Moving on to the next one, Mayur is asking the next one on Vedanta. Wants to know if he can go ahead and buy the counter from a long-term perspective. Samir, your view?
I've never been a big person who's been very fond of the Vedanta group for the simple reason the corporate governance issues remain. Their debt at the parent level is always an issue and can always come back at a later stage. They're constantly looking for acquisitions at their various points, which again re-leverage the balance sheet instead of deleveraging it. Yes, these companies are very cash positive in this kind of situation where commodity prices are rising. But, you're buying this stock again at the top of the commodity cycle where commodities have run up so much. For me, the upside is very limited from here. Even if you want to do trading, this is not the time. I would say this is a stay away from personally, whatever the situation is.
Coming in from Mahindra, and he has around 230 shares of KYC International at an average price of 709 rupees. Samir, he wants to know whether should he continue to hold this counter?
Yeah, I think, the opportunity for the transmission lines, distribution lines is only going to keep increasing. We've talked about this quite a bit recently. This oil price, gas price, LPG price moving up is going to make India more of a, alternative source, energy-driven country. The push has to come from the government. And if that happens, you need a huge amount of lines put up, and KEC is doing that. So I think the order book is decent. They will continue to grow their order book, and it's a decent management team from the group that they are, relatively strong balance sheet. So I think hold on. I think there is upside to it.
Okay, all right. We've got our first caller for the day. Suhas is calling us from Bengaluru. Suhas, a very good morning to you. What's your query about?
Thanks for taking my query. I hold Karnataka Bank 470 stocks at the rate 94 rupees.
Okay.
I would like to know if at all I can see if the stock crossing around 300 in the near future.
Okay, got your question, Suhas. Kush, I'll come to you on this one. He's bought it at attractive levels for sure. Do you see this crossing 300 levels in the near term?
I must say this is a very interesting pick, Suhas. long term, obviously the stock's done very well for you, but the reason I say that is because from a very near-term perspective also, near to medium-term perspective, this stock is actually flying. And when you see what the rest of the market is doing, this just stands out. This morning on the opening show, I gave J&K Bank as one of the buy calls. My only other alternative in this space would have been Karnataka Bank. So kudos to you on that. And to your point that, do I see this going to 300 in the coming future? Yes, there's a very good possibility because price action clubbed with healthy volume and the stock rising in a falling market, clear indications of strength. Near-term resistance around the 245 mark, but I think once that is taken out, the stock will have a clear run. You have to factor for market volatility with whatever's happening, but I think you should stay put in the next 3 to 6 months, maybe a little longer, but then the stock is on its way to 300 levels and higher. I would suggest a positional stop loss near the 205-200 mark.
Okay. The next one is coming in from Mr. Ramesh, and it's on Suzlon. He's holding 10,000 shares, bought at a price of 55 rupees. Samir, any view on Suzlon? Should he continue to hold?
Oh, absolutely. I believe continue to hold. I've remained very, very positive, on the renewable energy space. Suzlon is the largest wind manufacturing, not manufacturing, but the setup, of the plant, the equipment, all of it, they're fully vertically integrated player. As the renewable energy push in India increases, Suzlon will obviously get its fair share of the orders. They're upping the capacity from the 3.3 million ton to almost 4.2 million tons, 4.2 megawatts, not million tons, gigawatts. And that is going to lead to operational efficiencies. We believe the stock has seen a very, very sharp correction because of all the uncertainties around renewable energy in the past, but I think it's going to get a lot of tailwinds. Hold on to it if you can. Buy some more. I'm very positive. I believe in the next 2 years, you'll see the stock back at 80 rupees.
All right, so that's the view on Suzlon, but time to take a look at the F&O space. We have Sharad joining by. Sharad, a lot of factors playing its part, plus the expiry playing its role as well. What's the view?
Well, that's true, but there's a sea of red here. I hardly see any green, be it Sensex or BankX. And I think only just 3 names are there, but that's also not a convincing story. Largely, we see a sell-off happening. Basket sell-off, of course, HDFC Bank's impact is definitely there. Management came to NDTV Profit, and they also mentioned about what's going to happen next. Apart from that, even the private banking names, that's also the sell-off is there, and the IT pack as well. Let's look at the BankX also. The story remains the same. There's an insane sell-off happening, and even PSU banks, there is no safe refuge as such. And in my list, there is no long build-up or even short covering. I'm directly moving on to the long unwinding. Eternal and Inox Wind, both of them are down between 3 to 4%. That's something to watch out for. And short build-up is there in most of the OMC stocks. HPCL is down 4% and NBCC is down almost 5%. Roughly 80% of the F&O universe is seeing short build-up right now. So this is the entire setup of the F&O markets right now.
Okay, Shah, thank you so much for getting us those details. Moving on to the next question, Suresh Nair from Hyderabad is asking about Sterling and Wilson. Of course, if we have Samir with us, there has to be one question on this particular counter. He's holding around 48 shares at the levels of 148, if I'm not wrong, and wants to know if he can continue to hold and even average at the current level. Samir, your view?
So, Mahima, can I ask you a question in return? Is it that from all the questions that comes in Sterling and Wilson, is there an app there you all put that question up? Or is
No,
it just that
he's specifically taken your name and has asked me to ask this question to you.
Okay, so yeah, I remain very, very positive on, we just discussed Suzlon, right?
Yeah.
And KEC also was discussed in the power space. So my view on the power space continues to remain very, very positive. Okay, so I'm just going to take an extra minute, if you don't mind, and discuss why I'm so positive. The company currently stands on an order book of 10,000 crore order backlog, right? This year they will do about 7,200 crores orders. They work at a 10% gross margin, 9 to 10%, and they have a 350 crore OPEX cost, meaning the fixed cost at the central office. So on 7,000 crores, if you get 9%, you get about, you can say about 650 crores, 350 crores of cost, a little bit of interest, depreciation, which adds on a little further, which comes to your PBT. Now, why I'm so positive, let me explain. They are a subsidiary of Reliance. Reliance is going to be setting up 10 gigawatts of renewable energy every single year. And being a subsidiary, I'm sure they will be able to capture some share of that market. Now, even if they capture 2 gigawatts market, apart from the orders that they've already got, and if they're winning outside of Reliance, they can move their turnover to close to 12,000 crores a year by increasing the fixed cost at the central office by 50 crores. So now if you work at a 9% and at 12,000 crores, your gross margins will come in at about, say, 1,020, 400 crore cost. So you're talking of a EBITDA of about 600 odd crores, right? If I take out depreciation, interest, and PBT tax, I would still walk away with a 300, 350 crore profitability per year. And this will only keep increasing because the solar space will increase. So why am I so positive? This is an operating margin-led business, which will only keep scaling in size. And which is why if you just simply assume that at the end of 3 years, their profitability can reach about 600 crores, you do the math on what valuation multiple you can give a company like this and what could be the stock target price based on that PE multiple, maybe 20, 30, whatever you want to give it. And that will tell you why I'm so positive, and I would say buy.
Got it. Okay, so that's the view on Sterling and Wilson. With time for our rapid fire round, Kush and Samir, you both know the drill. I'll start by taking the first question from Venkat Ramani, who's asking about Belrai. She's got 600 shares at the levels of 112. Wants to know if she can continue to hold this for the next 12 months. Kush, enough data on the charts to give a view?
Oh, yes. I think you should continue holding on to Belrai's. Positional stop at 170.
Siri is holding 900 shares of IDFC Bank, bought at a price of 71 rupees. Samir, should he continue to hold?
Yes, please hold on to it. Very positive.
Okay, Bandhan Bank, 3,000 shares bought by Mira at the price of 204. 6 months perspective, stop loss and target. Kush?
Yeah, recovery fizzled out. I would suggest a stop loss at 145. If it does go up, then there's the possibility of it hitting close to the 185, 195 zone.
Srinivas is holding 500 shares of AWL Agri, bought at a price of 450. Should he continue to hold this counter? Samir?
No view on AWL Agri.
Okay. Kush, any view?
See, it's a massive downfall. I would suggest hold, but with a stop loss at 170.
Okay, Canara Bank bought at the price of 107. 300 shares what Cyan is holding. Accumulate more at these levels, Kush?
Yes, you can consider accumulating, but again, positional stop at 120. But yes, you can consider accumulating at current levels.
Okay, the next query is from Manish from Chennai, and it's on Eternal. He's holding 78 shares, bought at a price of 262. At what price should he add more or should he sell this? Samir, any view here?
So, my view is you can add more closer to 180 levels if you want, but not at this point.
Endurance Tech is the next one. Anoop from Noida is holding 200 shares at the levels of 2826. Hold or exit? Kush, your view on the charts?
It doesn't look good right now. The recovery is fizzling out. I would suggest an exit.
Narendra is holding 5,000 shares of IRCTC, bought at a price of 540. Samir, should he continue to hold this counter?
Oh, absolutely. Please hold on. Monopoly business. I think you will see profitability going up over a period of time. Hold on.
Okay, Vadilal Industries bought at the levels of, the levels are, but it has 30 odd shares. From a 6 months perspective, can Mr. Chatterjee continue to hold? Push.
Yeah, you can continue to hold. It's not really going anywhere. I mean, that also says that it's not going down. You can continue to hold. Stop loss at the 43.75 mark.
Okay, Lokesh is holding 2,000 shares of Take Solutions, bought at a price of 35 rupees. Kush, should he continue to hold this counter?
Sorry, what's the buy price?
35.
This is like a circuit-to-circuit stock. Not really a big fan. I would suggest hold, but with a stop loss at your buying price.
Okay, Force Motors is the next one. From a long-term perspective, is this a good time to buy? Arjun is asking this question. Samir, your view?
Force Motors, I find valuations a little expensive. Good counter. I believe profits will grow, but valuations is that expensive. Wait for corrections to buy closer to maybe 14,000. I'm talking of a significant correction.
Okay.
Vani is holding 200 shares of Bajaj Finance, bought at a price of 910. Kush, should she average or hold?
No, don't average. Standard answer, but works right now. Don't average, but you can hold. And I would suggest a stop loss at the 825 mark.
Okay, Mazagon Dock, from a long-term perspective of 4 years, is it a good buy? Aniket is asking. Samir, your view?
Closer to 1,800, yes, it's a good buy. At this price, no.
Madan from Bangalore is holding few shares of KPIT Tech. In fact, 31 shares, bought at a price of 763. Kush, should he buy more at the current market price?
No, don't buy more, but you can hold. There are green shoots that the stock could see some recovery. There are green shoots.
Okay.
Irida is the next one. Bought at the levels of 209. 60 is the quantity. Balamurugan wants to know if he can continue to hold for a year. Samir, your view?
No, I'm not very positive on this counter. I think valuation is again expensive. I think there are better companies like TFC, REC, so avoid this one.
Saurav from Pune is holding 1,105 shares of Indigo, bought at an average price of 4,585. Samir, should he continue to hold this for long term?
I'm not a big fan of the aviation sector at all. So for me, it's a avoid as a sector overall. Nothing wrong with the company, but I wouldn't buy the sector, so I can't give a positive recommendation on stock.
Right. It's time for a short break. We'll answer more of your queries on the other side. So stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. Viewers tuning in, you can give us a call or send your queries on WhatsApp. We've got Puneet calling us from Hyderabad. Puneet, a very good morning to you. I believe you have a question on M&M.
गुड मॉर्निंग मैम। मैम पहले तो आप सबका बहुत बहुत धन्यवाद जो आपने मेरा क्वेश्चन शामिल किया है और आप लोगों की राय के कारण ही हम अपना पैसा शेयर मार्केट में जो है वो कमा पा रहे हैं। थैंक यू वेरी मच। एंड माय क्वेश्चन इज दैट कि आई हैव ए एम शेयर महिंद्रा एंड महिंद्रा के एट द बाइंग प्राइस ऑफ 3599 और 1000 शेयर है मेरे पास। तो मैं थोड़े और शेयर जो है वो खरीदना चाहता हूँ। तो कृपया मेरे को ये बताइए कि मैं किस प्राइस पे शेयर को खरीदूं और होल्ड करूं। मेरा जो व्यू है वो लॉन्ग टर्म व्यू है।
ठीक है, पहले पुनीत थैंक यू सो मच आपके अप्रिसिएशन के लिए। यू कम्प्लीटली मेड आवर डे। मैं आपकी क्वेरी समीर जी से लूंगी। समीर, ही सिटिंग ऑन अ बिट ऑफ लॉस, राइट, 4.7 lakh rupees if I'm not wrong, and wants to know if he can, I don't think that calculation is correct, but I'll get back to that. He's sitting on a loss basically right now, but wants to know अगर he can go ahead and add अभी more, continue to hold. M&M पे क्या view है आपका?
So I'm positive on M&M from a long-term perspective. मेरे हिसाब से, I mean, should I answer in English or Hindi because he was speaking more in Hindi?
Yeah, Hindi. Yeah.
Okay, तो मेरे हिसाब से M&M पे परचेस बाय करना चाहिए क्योंकि जो उनकी ऑटो बिजनेस है इज ग्रोइंग, स्पेशली इलेक्ट्रिक व्हीकल साइड पे। वहां पे उनके ट्रैक्शन बहुत अच्छी आ रही है। दूसरा, उनका ट्रैक्टर बिजनेस भी अच्छा कर रहा है। जो ग्रोथ आएगी एग्री सेक्टर में इंडिया में ओवर द नेक्स्ट फ्यू इयर्स, M&M विल बी द लार्जेस्ट बेस्ट बेनिफैक्टर ऑफ द ट्रैक्टर बिजनेस। तो वहां दोनों सेक्टर ग्रो करे। अगर आप उनकी सब सब्सिडरीज देख ले, बारिंग टेक महिंद्रा जहां मे बी ग्रोथ में स्लो डाउन, M&M फाइनेंशियल में ग्रोथ बहुत अच्छा आ रहा है। जो NPA प्रॉब्लम्स थे वो पीछे आ गए हैं। कंपनीज रिपोर्टिंग हायर प्रॉफिटेबिलिटी। उनके पास एक और उनका रियल एस्टेट बिजनेस है विच इज डूइंग वेल, स्केलिंग अप वेरी नाइसली। होटल बिजनेस जो उनका महिंद्रा रिसोर्ट्स एंड हॉलिडेज है, दैट इज डूइंग एक्सट्रीमली वेल। तो उनकी आप सब सब्सिडीज देखेंगे तो भी वो बहुत अच्छा काम कर रही है। तो मेरे हिसाब से ये स्टॉक लॉन्ग टर्म अच्छा है। करेक्ट प्राइस जो आपको एवरेज करना चाहिए या लेना चाहिए मेरे हिसाब से 2800 या 2700। इनफैक्ट अभी करंट फॉल में 2850 तक आया था। इट्स पॉसिबल कि अभी मार्केट और करेक्ट करे तो वो वहां तक जाए, तो वो प्राइस पे प्लीज डेफिनेटली ऐड करिए।
Right. The next query is coming in from Pawan from Hyderabad and it's on EPAC Prefab Tech for long term. Samir, do you track this counter?
So we've started looking at it. We don't have active coverage, but I can tell you that the company's growth is going to be very good. The way they're scaling up operations, new plant is up and running. Order book is very strong, healthy. We think the numbers will come in quite good. Stock has seen a sharp correction. 320 is, I think, down to about 155 or 160, if I'm not mistaken, which is why we started looking at it. And we think there is upside potential. We are working on something like a target price of about 240, 250 in a 1 year. So hold on to it.
Okay. The next one is on Vishal Megamart. Pankaj wants to know if this is a good level to make an entry into this counter. Kush, your view?
Yeah, I'd suggest wait up a little, because the stock is actually very near to a rounding top formation support, and that comes in close to the 98-99 level. Now with the kind of selling that the stock has seen, there's a good possibility that it could go ahead, breach that 100 mark and test that support zone. Now if that is intact, then that is where you start accumulating. The stock could go sideways with the kind of selling pressure that it's seen, and the ongoing spike in the volumes on the way down. I think you should wait up a little, maybe closer to those support zones of 98 and 100 is where you should consider accumulating.
Right. The next query is coming in from Priyanshu from Delhi, and it's on Radico Khaitan. He is holding few shares at a price of 2,673. Should he average or continue to hold this, Samir?
This is the one counter that we missed out on. Unfortunately, the alcohol space has done fantastically well. The kind of products that they're launching, I've studied the company. Unfortunately, we didn't cover it and we haven't invested in it. But if the alcohol business continues to grow the way it is for them, especially with the new brand launches and all they're doing, I think the stock can do well. I don't have active coverage, but it's a stock I missed and I would like to look at. I just need to find the right price. I don't know what it is, but hold on for what you have at a lower price.
Okay, that's the view on Radico Khaitan. The next one is on NTPC Green. Shankar from Bengaluru says if he can go ahead and buy this at the current price, he's planning to buy 1,000 odd shares from a short-term perspective. Kush, your view on the charts?
You can buy this. The stocks actually had a good spike, just a couple of sessions ago, just a few sessions ago. And surprisingly and interestingly, it's held on to that ground. Now there is the 200-day moving average around that 199 mark, and that's where the stock is consolidating. But with the positive bias and maintaining the spike and the gains that it's seen last week, I think this is a good move on the stock. Also from a medium-term perspective, there was a falling channel resistance that the stock has broken. So a couple of things going for it positively. I think it's a good idea to consider NTPC green right now. Given the entire market scenario, I would suggest accumulate. So maybe about 20 to 50%, depending on your portfolio size, position size you want to buy right now, and rest if it declines. So I would suggest, yes, you can add some right now and then keep a positional stop at the 93 mark. In between that, if it dips, you could consider adding some more.
Okay. The next query is coming in from Bala Murugan, and it's on Bajaj Housing Finance. He's holding 61 shares, bought at a price of 125 rupees. What is the next 1 year outlook? And when will the stock touch to 28? He wants to know the same, sir. Samir, any view on Bajaj Housing Finance?
So, the Bajaj Housing stock is something everyone invested in because of the Bajaj name. Unfortunately, nobody apart from the initial IPO investors have made money. Anyone who bought it after listing has only lost money. Valuations are much higher than all other housing finance companies. And, people continue to remain in this belief that just because it's the Bajaj name, they will continue to get the high valuations. Yes, they have a slightly differentiated business model where they're not only doing retail housing or, salaried income housing. They're doing more of corporate lending for buying real estate for rental purposes and things like that. But I think that opens up also a risk, right? And for me, Bajaj Housing was not an investment then, still not an investment right now. I think they're far better, not better, but far better priced companies in the housing finance space which you can invest in.
Okay, all right. The next question that we have is, I think, from Pradeep, who is calling us from Hyderabad. Pradeep, a very good morning to you. What's your query about?
A very good morning. I would like to know more about Elecon Engineering Company.
Okay.
I bought around 50 shares at 558 rupees, and I think currently it's trading down at 31%. Would like to know, should I hold it or let's say sell it out and average it out?
Okay, and what is the time period that you're looking at?
I'm looking for long term.
Okay.
Not for immediate, but on the long term.
All right, Pradeep. Got your question. Samir, your view on Elecon Engineering?
Sorry, no coverage on this. Can I request Kush to help on this one?
Sure. Kush, your view?
Gladly. The stock is seeing some downward pressure, but I would suggest a hold for a simple reason that on the daily and the weekly setup, especially the weekly one, it's starting to see positive divergences, which means the pace at which the stock was falling is actually starting to reduce, which is a good sign because those are first green shoots and first indications of any kind of bottom formation. But there is pressure nonetheless. I would suggest you should hold and sell maybe slightly at elevated levels so your loss is lesser from where it is at currently, and in that case I would suggest a stop loss at the 355 mark. That's a strong support zone. If that is broken, this recovery could fizzle out.
Right. The next query is for you, Kush. Again, it's from Karthik from Hyderabad. He's holding 63 shares of Infosys, bought at a price of 1,850. Okay. In fact, we have Karthik on our calling line. Let's listen to him. Karthik, you can go ahead and ask your query.
Yeah, hi, I'm from Bangalore. So I have 25 shares of Infosys bought in at the price of 1,450. So I wanted to know, is it a right time to exit and invest in any other sector? But I want to hold Infosys, maybe buy it at a later time. So when the IT stocks are up. So I just wanted a long-term view as well as I wanted the technical view from Kush sir as well.
What would you suggest Karthik to do when it comes to Infosys?
Karthik, that's actually a good idea. While there are some positive signs on Infosys in terms of, positive divergences and the stock attempting a bottom formation, is a V-shaped recovery likely on some of these names? There is, I have my doubts on that. So that's a good strategy. So I would suggest, since you're already considering that, it's not a bad idea to maybe exit right now, consider once the momentum returns to some of these IT names. So you can exit Infosys at the current level. Where do you go to is the question. So I would suggest two sectors broadly. One of them is auto ancillaries. A lot of auto ancillary names have seen good traction and have not really seen that kind of fall. Even if they do, they recover rather well. So I would suggest consider some of those names like, Lumax Autotech, even Bellrise, something that we discussed initially. So that is something that you can consider. And also in a market like this, the healthcare names, they become, a good haven of safety. So these are the two sectors that you could broadly consider if you switch from Infosys.
Okay, all right. The next question that we have is from Biswajit, who's writing us from Kolkata, asking about SBI. He's holding 700 shares at the levels of 535. Wants to know if we can continue to hold this from a long-term perspective, and also wants to know if we can add more of both SBI as well as ICICI Bank. Samir, your view on this one?
So can he hold on to what he has? Yes, I think you can hold on. Just don't expect the valuation re-rating story to happen the way it's happened in the past. So the kind of run-up you've seen, you're not going to see those kind of continuous returns. Now you're going to see the growth kind of returns of anywhere between 12 to 15%, which they grow at, right? For SBI. Now the question is, should he buy ICICI Bank, which is the second question. If I had to pick a bank in the space right now, I would pick either in the large cap HDFC Bank, given the sharp correction we've seen today. And, like I said, from 1 year perspective, the stock is up even up to 1,000 from 800. We're talking of 200 and 800, which is 25% return from here, which is fantastic. So in an HDFC Bank. So that would be the top pick. But I would also continue to remain very positive. We discussed IDFC First Bank. I said, hold on, it's a buy for me. IndusInd Bank remains a buy for me. I think these are the banks where the re-rating story is going to happen, apart from the growth story.
Okay, all right. With that, viewers, time to step into a very, very short break. We'll be right back answering all your queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff.
Welcome back. You're watching Ask Profit. Moving on to the next query, that is on Federal Bank. Rohit Garg from Ghaziabad is holding 2,000 shares at the levels of 287. Should he hold or exit? Kush, your view on the charts?
Yes, you should continue to hold. The stocks had a very good run, right? I mean, the last 4-5 months or so. And then what you're seeing, in that context is mere profit booking. So I would suggest you should continue holding on once the dust settles and, markets start to move higher. I think this will be one of those stocks which will move higher and faster. So yes, you should continue to hold. I would suggest stop loss at the 245, 250 support zone.
The next caller query is coming in from Hyderabad. Anjali, you can go ahead and ask your query.
I'm holding CIE Automotive.
Okay.
47 shares at the rate of 494. So this is for short term. I bought it. So can I hold or exit?
Kush, any view on CIE Automotive? Should she continue to hold?
Yeah, rather positive. The stock has consolidated. It was, in the, the breakout was in the offing. It did come about, but then it just gave way because of whatever's happened with the markets. Other than that, the stock's still holding ground. It's taken support at those multiple averages of the 200-day moving average, the 50-day moving average. Volumes also a couple of weeks ago have been fairly healthy. I would suggest you should continue holding on to CIE Automotives, and a deepish stop loss, a positional one at that, comes at 440.
Okay, the next one is on Hindustan Copper. Anu from Hyderabad has bought 650 shares at the levels of 500. She wants to know whether to hold or exit from a long-term perspective, and this query is directed to you, Samir. Your view on Hindustan Copper. She's sitting on a loss of around 22,000 rupees.
Yeah, so like I told you, I'm not very positive on metals counters at the moment. Yes, copper prices have moved the recent past. I guess if the stock price moves up closer to 550, 560 over the next maybe month or so, I would advise booking profit. Not a big proponent of buying commodities at the top of the cycle from an investment perspective.
Okay. The next query is from Venkatesh Warlu from Nellore, Andhra Pradesh. He is holding 300 shares of Keynes Tech, bought at a price of 5,100. He's currently sitting on a big loss. Samir, what should he do?
I think he can hold on. I think it's going to be a while before he recovers his money. At the moment, the only call I can give him is hold. I wouldn't suggest averaging at this point.
Right. The next question that we have is from Siddharth, who's writing us from Bengaluru. By the way, he's saying, Coach, he's a huge fan of yours. He's holding 300 shares of Volta, spot at the levels of 1420. He wants to know from a 3 to 6 months perspective, can he continue to hold this or shift to Venus pipes at the current level? So it's a combined question. I'll allow that this time, but your view on both of these.
Is that supposed to be a bribe for anyone who says they are a fan of me or Samir? You allow them two queries? No, but that's so sweet of you, Siddharth, to mention that in a market like this, these compliments definitely cheer us up. So yes, so Voltas, I would suggest it's not a bad idea to continue holding on. Yes, there's been a sharp decline in the last 3 weeks, but prior to that, if you see, the stock was attempting to gain ground. Also, there's a rising trendline support that comes in close to that about 1285, 1290 zone. So maybe that could be your stop loss. So yes, it's not a big mover, but right now, because there's profit booking and support around the corner, you can continue holding on to this one. But as far as Venus pipes goes, I would suggest wait up. The stock's seen massive selling pressure. The recovery in last couple of days has also been sold into. So maybe you want to wait up. I would suggest, a different strategy. Buy if 1020 is taken out. So that's how you approach Venus pipes.
Okay. The next is a caller query coming in from Kerala. Aman, you can go ahead and ask your query.
So I want to know about TD Power System, both fundamental and technical way. You want to buy it or?
Okay. Samir, any view on TD Power System? Is it the right time to enter?
Sorry, again, this one I don't have coverage on.
Okay, Kush, how's the technical setup looking like?
Not bad at all, I would say. Not bad at all. It's had, 2 weeks of cuts, but before that, it's had a good run of 5 solid weeks of gains, and the stocks moved actually from those 600 odd levels all the way up until about 900, 925. So had a good run. It's consolidating. Volumes, nothing to write home about, but I would take that because the stock's not falling either. So it's a good setup. The pullback should actually act as an entry point. My only concern is the volumes are usually not so high, so volatility could be a little higher. So on the whole, because of the positive move, you could consider buying into TD Power Systems right now. Positional stop at the 775 mark.
Okay, time for our second rapid fire round now. Samir and Kush, try to keep your answers as short as possible. The first one is on Rainbow Children Hospital. 40 shares is what Chitra has bought at the levels of 1190. Hold or average? Samir, your view? Samir, I think you're on mute.
Hold.
Manoj from Bangalore is holding 80 shares of Vedanta at a price of 480. Kush, should he book profit?
480 you said, right? Yeah. Yes, you should book profits right now.
Bombay Dyeing bought at the levels of 109, 855 shares. What a viewer is holding? Hold or sell? Kush, your view on the charts?
You could continue to hold, stop loss at 100.
Rain Industries is the next query coming in from Siva from Amravati. 10,000 shares bought at a price of 178. Should he hold for the next 3 months, Kush?
Afraid not. So you could perhaps exit at these levels.
Coforge is the next one. Siju from Qatar is holding 65 shares at the levels of 986. The next course of action for him, Samir?
I think you can hold on a lot of the negativity question.
Vivek from Chennai wants to know whether should he invest in TTK Prestige. Samir, any view?
I think the valuations are a bit rich. Wait for corrections. I mean, here right now it's run up because of that induction cooker, but wait for corrections to buy into. It's a good counter.
Ola Electric bought at the levels of 58. 20,000 shares is what our viewer has bought. From a 5-year perspective, can he continue to hold? Samir?
Absolutely, hold on. I mean, like I said, the worst in priced in, the Gigafactory takes off the way it is. I think the stock can do really well.
Mr. Gupta from Pune wants to know whether should he continue to hold Swaraj Engines. Any view on this, Samir?
No, sorry, no view on Swaraj.
Kush, any view?
Yeah, it's consolidating, breakout above 37.25. So you should continue holding on to this 35.50 stop loss.
Kalyan Jewelers bought at the levels of 555. Hold or sell? Your view on the charts?
Yeah, I no, sell.
Tejas from Nagpur wants to know whether should he hold Sundaram Finance. Samir?
Which one?
Sundaram Finance.
Yeah, you can hold on to it.
Inox India bought at the levels of 950. Hold or sell? Kush, charts?
You should continue to hold on to this one. Good moves. Stop, I would suggest at about 1150.
Amit is holding 1,000 shares of SpiceJet. Should he continue to hold this, Samir?
I told you I'm not a big fan of aviation, so for me it's a sell. But yeah.
Okay, Ask Automotive, 205 shares bought at the levels of 464. S Strategy wants to know from a 2 to 3 year perspective, can he continue to hold? Samir?
Absolutely hold on. This is a great counter. In fact, I would say buy more.
Umesh from Bangalore has few shares of Tata Motors CV. Should he average or sell, Kush?
Sorry, did you say the buy price? What's the buy price?
It's around 357, I think.
Yeah, you can continue holding on to this. It's consolidating, but keep your stop losses at 410.
DCB Bank bought at the levels of 198. Hold, sell, Kush on the charts?
No, it's more of a hold. Stop loss at 163.
Vasudevan is holding 2,400 shares of City Union Bank. Should he continue to hold this for long term, Samir?
Yeah, you can hold on. Banking very positive.
Okay, Z Media. The viewer says he's stuck in this particular counter at 100 rupees. What should he do? Samir, any view?
So honestly, I don't know how he's ever going to recover his money. Sell out, take your loss, buy something else and make money, recover your money there.
Madhav is holding 100 shares of LIC bought at an average price of 820. Samir, should he continue to hold this?
Absolutely, hold on to it. Great counter, will do well.
Bank of Maharashtra. Would this be a good time to enter? Ramana from Bengaluru wants to know. Kush?
Yes, you can consider entering this. Stop loss at the 57 mark.
Raj from Chennai is holding 68 shares of Swiggy bought at an average price of 320. Should he accumulate more, Samir?
No, not at this point.
Okay, Jai wants to know if this is the right time to enter Tata Power for the next 6 months. Kush, your view on the charts?
Yes, you can consider. The stocks had a good run. I would suggest enter this right now. Stop loss 385.
All right, that brings us to the end of this round of Rapid Fire as well as Ask Profit. Samir as well as Kush, thank you so much for taking out the time and helping us answer all those stock-related queries. But viewers, completely out of time on this edition of Ask Profit. Do stay tuned. KYC up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the hottest KYC show in town, and each session we get you very interesting company, and of course right now summer is a theme, but I'll give you some hints. Try to guess it. The first important hint is of course going to be that the company is India's largest amusement park chain. Only 2 of them are there in the listed space, so it becomes easier for you to guess. The second important guesswork for the company is that the stock is up 190% in the last 5 years. And also the third hint I would like to give you is that the stock has parks located in 5 Indian cities, predominantly in the south. Now you must be wondering which stock I'm talking about. Exactly. So when I talk about wonder, there is a hint in that as well. The company's name is Wonderla Holidays. Look at that. This is the summer season. A lot of you, and including me, are fans of amusement parks as well. So we'll understand about the company. But why are we getting this company in KYC? That's the big question. Why now? The reason is that summer season is near. Summer trends. How does the summer pan out? The fourth quarter and the first quarter for Wonderla Holidays. That's something which we'll be watching out for. Remember, there is a seasonality at play here. The company is planning to venture into the indoor parks. Will that company go ahead or not? Right now they are doing outdoor parks, but indoor parks is also becoming an in thing as well. Also, the third reason is the key footfalls and the progress, especially coming on the Mumbai project. That is something which we'll be watching out for as well. Remember, Mumbai project, the company is in talks with the government, and the price hike is expected ahead of the holiday season. So we'll try to understand, is there any price hikes being taken by the company right now? Of course, it's the holiday season coming as well. Expansion plans, especially in the non-South market, is something which our views would be coming in as well. Entire questions will be asked by the management and the ARPU, the average revenue per unit growth strategy ahead, especially with the company focusing on higher realizations. We saw that in Q3 also. Will that repeat in Q4? That's the big question. And the new attractions. What are the new attractions coming in? They have roughly 230 rides in both air, wind and water, these segments. But to understand more, it's a bit technical, this industry, but we all love it. It is Arun Chittilapalli. He's the Executive Chairman and MD at Wonderla, who will be giving us all these important details and clearing our doubts as well. But come over, let's understand the key details about the company. And of course, is it a really attractive bet in Dalal Street? That's the big question to be asked. But about the company, of course, it's India's largest amusement park chain. But let's move ahead and see what is more details about it. They're offering wider range of land and water rides. Of course, there's a water park also. That's what is the interest for me, especially in the summer season. They provide food and beverages also via food courts. And remember, there is banquet services also. There are 5 cities where they are operational: Kochi, Bengaluru, Hyderabad, Bhubaneswar and Chennai. Largely south-based, but nevertheless, we'll need to understand what are their expansion plans. They are having 230 fun rides, 23 restaurants and 5 banquet halls. This is the overall operational picture, to be honest, and the company is focusing on the makeover of existing parks as well. Remember, it takes almost 2 to 3 years to make a park, and the payback period for this ranges between 7 to 8 years. But let's understand what happened in Q3. They delivered their highest ever revenue. Of course, there is some lumpiness involved. It's the winter season. People go out. That's what we had seen. The company has been driven by a successful launch of their 5th park in Chennai. That's what the street will be understanding. What are the numbers looking like in the 4th quarter? The Bengaluru resort, that has also commenced operations as well. But remember, resort business is also seasonal. So we'll understand about this entire business setup. The premium experience, they have added the ARPU growth to 8% YOY. This is a high margin segment. So we'll understand what are the new offerings in 2026 and also the target ahead. They are ramping up their Chennai park and the margins are similar to the Bengaluru and the Hyderabad facilities. The second target ahead would like to point out is the expectations, the recovery in the footfalls, especially in the mature locations, as headwinds might subside going ahead. And if that happens, the numbers will also be important. But why this is not attractive for Dalal Street, that's the big question. The seasonality is at play. And that is where at times the long-term investors do question, and at times the patience is also tested. Largely outdoor offerings are there in India for the listed players. So footfalls do vary, and it's a regional play as well. Pan-India demand, footfalls, they keep on varying as well. It's a capex heavy business as well, because they control the entire quality, R&D and the rides which come in, and that's very much important, especially the safety. Over here, there's a lack of analyst coverage in the amusement park theme space, and that's why the street is not understanding whether this is a good investment bet or not. And the gestation period in this industry is very long. When you try and source a land, then you create something on it, then the people come in, so it takes time. So if you are an investor, you need to have a lot of patience when you invest in stocks like Wonderla Holidays, and even if you could talk about Imagica, that's also the peer, to be honest. And let's talk about the ratings, how we'll judge the company in KYC. Of course, the usual numbers is something which we talk about. It includes income statement, balance sheet, cash flow. This is something which we talk about. But remember, there is a little bit of a seasonality at play. There is a little bit of lumpiness also. There is a regional impact, return ratios, the ROC numbers we talk about, shareholding, FIs, DIs, how much there has been a movement or has there been any. Street cred, what returns have come in long term, short term, medium term, and valuations where we compare that with Imagica World. That's the only 2 listed peers. And the outlook on the company's business front, and of course the industry's emerging new trends which are important, especially for a country like India, where still the amusement park and the outdoor theme is still at a very nascent stage if you compare that with the developing economy. So these are the 8 rating parameters where we'll judge Wonderla Holidays. The first one is the income statement, and a little bit of concern comes in this kind of a model. The margins have been continuously going down. This might be because of a pressure of expansion of parks, and when these parks get matured, then your bottom line numbers start improving as well. So this is something which you need to hold, but the last 3 years basis, the numbers not very convincing, and the Q3 numbers also, we see there was a labor code impact as well, but nevertheless the top line numbers were decent in Q3 as well, but overall net it is still a negative when it comes to the income statement. A balance sheet, let's look at it. Actually, sorry, it's a neutral rating, it's my mistake. Balance sheet is something which I want to talk about. Borrowings, it's largely a very high capital, working capital business. Cash bank balance is pretty much decent. They're sitting at 423 crores as per the end of FY25. That means they might be deploying this in the new parks as well as the existing parks as well. So overall, there is a lumpiness coming in certain categories. So it's a thumbs down when it comes to the balance sheet. Also, let's talk about the cash flow, how things are panning out, and let's see how things move. There is, of course, the seasonality at play as well. The company does important investing and financing announcements as well, and that is where we see the overall changes happening here. But largely, it has been decent, so I'll just give a neutral rating when it comes to the cash flow. Let's talk about the return ratios in a business like this, how much you should expect. Of course, it should be in the teens, especially you could say in the higher teens, but there is a lot of variability in it. There is definitely, it's trying to hold up, it's just 8% ROC numbers coming in, but it was 20 odd percent. So we need to ask the management why, when these return ratios will be back to these levels, or are they sustainable or not? At least, especially 15 to 20% is something you should be expecting in a business like this. So it's still a neutral rating when it comes to the return ratio. But let's talk about the shareholding, how things have moved. And interestingly, despite a steady business model, FIs have been increasing their stake. Look at it, it was 5% in March 24. That has gone up to almost 11%. It's more than doubled, and that's a good sign, to be honest. We are seeing a good participation coming in from the overall institutions. Even over here 4% it was, now that has also slightly come down, but it's still up almost 50%. It's 6% stake coming in. There was the promoter stake sell-off, but right now we see the absorption is very strong from the institutions, and that is why I'll give a thumbs up when it comes to the shareholding. But let's talk about the street cred, how much the stock has made money or has it not. In this market, remember, the small caps and the mid caps have taken a big beating over the last, you could say, 12 to 18 odd months. So company is doing decent. It's flattish almost, you could say. Last 1 month stock is up 6%. Last 6 months down 19%. We have seen a hammering of small caps. Year to date, it's still flat. Remember, last 3 months were difficult for the Indian markets, especially the small cap. And that's where we see it's 1 year, it's down 21%. But if you're a long-term investor, congratulations. You have made a 2x returns in 5 years. That's pretty much decent. That makes it around 25% plus CAGR in a stock like that. And that is where your patience gets rewarded in a stock or a sector like this. So it's a neutral rating. Congratulations to long-term investors, but medium-term basis, there's definitely pressure coming in the stock. Let's also talk about the valuations. And there are 2 companies in this industry which are in the listed space. Wonderla, of course, is there. Another one is Imagica World as well. All of these companies are at their 5-year low PE ratios, or you could see they're correcting by almost 60 to 70%. The 12-month forward PE ratio, it's around 26 times for the company which we are discussing, and 30 times for its peer, which is Imagica. So definitely a little bit of value is emerging, but will the markets give any valuation premium for this theme? That's the big question. It's likely it'll take more time because they are all in their expansion phase as well. So it's a neutral rating when it comes to the valuation. So let's talk about the outlook, how things are panning out. And if you could just show the outlook, the important factors for that. They're expecting another 1 to 2 parks to be made and launched in the next 2 to 3 years. This is something which is like a formula which the company has devised, and that's the time actually that's taken for that. Value-added offerings and ARPU increases, that is very much important. That's an important strategy for the company going ahead as well. and also the growth and expansion plans, especially for the non-South markets, especially I'm talking about Bombay markets or something in the northern India, because they made some inroads in Bhubaneswar, but will it expand going ahead? This takes time and a lot of analysis, so we'll ask that to the management as well. The company is working with the Maharashtra government for the Mumbai offering as well, so we'll take a status update on that as well. So net, it's a neutral rating for the outlook also. You require a lot of patience if you are listening or understanding the sector as a retail. But come over, I'll explain you the entire KYC ratings which we have given in our analysis, how things are panning out for the company. Largely the income statement you could say is neutral, but balance sheet management has been strong, especially the debt front, so that management is good. Cash flow and return ratios largely neutral because of the lumpiness of the business. The company is at times asset heavy, but shareholding is very much important because in both the cases FIs and DIs have increased the stake. Stakeholder long-term investors has been good, but short-term, medium-term it's been challenging. Valuations for the entire industry, it's been corrected and it seems like a little bit of value is emerging in current levels, and the outlook remains neutral as well. But hey, it's summer season and so is the amusement park and the fun regarding that. And joining us would be Arun K. Chitilapalli. He's the executive chairman and the MD as well. And remember, before that, the company we have given that rating is 5 out of 8. But moving on, there are key important snippets about him, and he has literally, you could say, the co-founder. His father founded the company 2 years before that, and he's the co-founder for the last 23 years. He has given to the company and its growth strategies, increasing it from a Kochi amusement park to all other places. He has studied engineering from Swinburne University of Technology. It's located in Melbourne. Pretty much interesting street cred he has. And one interesting fact about him, he has visited more than 120 amusement parks globally. Now that's very interesting, and hopefully from abroad we get in more rides as well, as summer is also near the corner. Joining us is Arun Chitilapalli. Good afternoon, Arun. Always a pleasure to have you, and summer season is on. The excitement is there for amusement parks. So what's new? What's the plans for the fourth quarter or the first quarter? If you could just explain us, how are the numbers looking like right now? Of course, I remember Q3 numbers were good. And you can expect that in Q4 and Q1?
Hey, lovely to chat with you. Thanks for having me on the show. Yeah, so I think summer is one of the biggest quarters for a business like Wonderla, and this summer should be one of a good summer for us because this is the first time we have our fifth park, which is Chennai, fully operational for the season. So we are expecting good growth there. It has been a good start for us from Chennai, so I think we will continue that momentum. The only caveat here I would put is the uncertainty in the global situation and all that. I don't know how that's going to affect consumption in India, but as of now, it's looking good. And we should be having a good summer, and we are expecting good growth. I can't give you numbers, like I said, because this is our first year for Chennai, so it's unpredictable. We'll see how it goes, but it should be tracking our other larger parks, so it should be good.
Right, I just have a query on the Chennai business as it matures going ahead for your other parks as well. Do you think your margins up move or realizations, if you don't want to share the margins, it's fine, will they go up on the northward side as well?
Yes, so this is our new project, and so the first couple of years you will see heavy depreciation, and other marketing costs also will be heavy in the first 2 years of operations. These things will settle down by year 3, year 4, so you can see revenues and consequently EBITDA, etc., improving considerably. This is a asset heavy business with all the investment coming at front loaded. So because of that, the return ratios, etc., will be skewed in the beginning. But if you look at our established parks, like for example, even Hyderabad, which is less than 10 years old, it's going to complete 10 years. It's already at a very high EBITDA level. So I think we can expect similar performance from Chennai, maybe even better, because Chennai is one of the largest cities in South India, and it is we've had a strong start to our performance there. We are a very well-known brand in the South, so I think it should be good.
Right. And Arun, just to actually give us a perspective, a lot of prospective shareholders and the existing shareholders are listening. What's the exact timeline? Suppose you need to make an amusement park in a tier 1 or a tier 2 city. If you could just mention the important timelines, how it's made and what's the payback period like for a project, then it gives a little bit more perspective on your line of work.
See, building an amusement park is a large gestation project, not only in India, abroad. Like, for example, I know that Disney takes more than a decade from planning to execution. For us, the entire process from planning to execution is roughly, for a large park, for a, like a 600 crore park, for us is roughly about 3 years. 1 year of planning and land acquisition, etc., talking to government, etc., and then 2 years of execution for building a park. The first 3 years, we expect it's 3 to 4 years will be a ramp-up period where the footfalls, revenues, etc., ramping up in a new market. These things will vary widely depending on the market. Tier 1s, especially in the South, should ramp up faster. Where we are in a new market, in a new geography where we are not known, the ramp-up period could be a little longer. But once they become fully operational and fully ramped up, I think once they cross, like for example, 1 million footfalls in Chennai, then we will see EBITDA numbers will be strong. Right. It will be 40+% EBITDA. So that will happen. So this is the broad timeline for park.
Arun, there has been some talks also with the Maharashtra government for any offering in Mumbai. How have the talks gone ahead, and can we expect any kind of announcement or a timeline for Mumbai area?
So we are looking at about 3-4 different geographies. So Mumbai is one of them. We are also looking at Ahmedabad. We are looking at Goa. We are also looking at other smaller markets like, for example, Indore and a few others as well. So we will give you an answer on this only when we have confirmation from the government, because like I said, land acquisition and government approvals is the first step, and that a lot of it is with the government and for example the landowner, whether we are able to go through the deal, etc., etc. So those things will take it'll time. We hope to have an announcement in the next financial year regarding Bombay. And also maybe another park as well, or maybe more than that. But again, like I said, these things are, it's not easy for me to predict when we'll be able to tell you. If things move quickly, we should have at least 2 projects again going ahead. And that's the plan.
Right.
Yeah.
Arun, indoor theme park, this is also very much important. Everybody is bullish on. Your peer has also announced that they are going into indoor theme park. Do you also have any ideas in the offering for indoor theme park, because that removes the seasonality also, and it's on a higher ticket price or a margin also. So is any thought there for expanding into the indoor theme park segment?
We are not averse to it. We will definitely look at indoor parks, but our strength is in large format parks where people spend a whole day. And that's what we are known for, and that is where I think we can see the numbers, like we are able to grow our revenues considerably. The issue with indoor theme parks is there are too many offerings. You will have too much competition. You are very highly location dependent. Depending on the mall that you are in, you can even if your product is excellent, but if you are not in the right location in the city, you may not get the kind of footfalls that you want. Your break-even and cost of setting up is those points are much lower, but I think the revenue potential itself will be again much lower. So these are the issues with indoor theme parks. That is why you will not see Disney or a Universal doing indoor theme parks, because for them they have the larger, bigger, the bigger and better experience is what finally gives it that cred. For us also, I think we prefer to do larger format parks, because I think that's in the long term for us that is definitely revenue upside and more profitable. But having said that, there is I don't see indoor parks as I don't have a negative view on that. It's just that it's a different business, and it's much more subject to the regional issues that you may have.
Right, fair enough. That's a good valid point which you have mentioned, and that's pretty much interesting as well. But it's the summer season, and of course there'll be a lot of new rides also coming in. If you could just give us, any kind of a new launch, especially in the rides front, you could just give us a little bit of, flavor on that.
So for the summer, we will be launching a new ride in Chennai. We will be launching a new attraction in Bangalore. We will be relaunching our resort offering in Bangalore as well, because we have just premiumized our offering and we will be shortly launching it. So those are the three big ones that we are going to do for the summer. Also, there's a new roller coaster that's being launched in Bangalore. So I think it's going to be a very exciting summer for us, especially in Bangalore and Chennai. The other parks already have gone through a capex cycle and some new rides have been added. We will continue to add new attractions. We are expecting new rides to be added to the other parks as well, but not during summer. It will be for the FY27, maybe in Q2 or Q3. So that is the expansion plan for the year. Of course, then we'll also be adding a new location, hopefully before the end of this financial year. So this is roughly the expansion roadmap.
And Arun, apart from that, the value-added offerings which come in, of course, we know about your core offerings, with the value-added offerings and the offerings which increase your ARPU numbers also. Which are those segments? How are the growth or the demand trends looking like from these value-added offerings?
Value-added offerings have been strong for us, whether it is new avenues for spending within the parks, or whether it's F&B, whether it's retail. All these things have contributed positively over the last 2 to 3 years, and we expect that to continue, especially with Chennai also now going on stream. So there is definitely an upside there. I think spend should improve. Again, the slight caveat here is, the war in the Middle East, which might have some impact on some F&B offerings and things like that. But as of now, we are fine, and we are expecting ARPU growth even otherwise. We expect a single digit, like for example, 4 to 5% ARPU growth every year. Most of it will come from value-added offerings. Some of it will come from ticket price increase.
All right. Just the ARPU growth you mentioned around 4 to 5% is something which we are expecting. But Arun, apart from that, the price hike, generally there is a price hike at times comes in the seasonality impact. Are we looking at that maybe from April onwards, or if there is a price hike, any kind of a number or a range for that?
We will typically increase our prices by 3 to 5%. Exact number is still being worked out, but I think you can expect a 3 to 5% increase in ticket prices. But I think more than that, we are expecting maybe 5 to 8% ARPU growth, mainly because of our F&B and retail offerings, non-ticket revenue. That should grow faster. So that's the outlook for the year.
Okay, so that's an important update coming in for FY27. And thanks a lot, Arun, for explaining us the entire mathematics of the amusement park and why you are not so happy with the indoor theme park, but the expansion is something which we'll talk about. So that's the management of Wonderla Holidays, giving us the entire picture of where the company stands, where the industry stands, and where they are looking for their moat. Of course, this tests the long-term investor patience for a company like this, but nevertheless, we have given you the entire picture in KYC. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Hello and welcome to the special show on HDFC Bank and its changes in the position of chairman of the board of this large bank. Atanu Chakravarti resigned from the board serving as non-executive chairman, and the bank has appointed HDFC's old hand KYC Mistry as the interim chairman of the board. In his resignation letter, Atanu, a former bureaucrat, said that bank's practices did not align with his values and ethics, which seemed to cast a shadow on the bank's workings, which was speedily rebutted by KYC Mistry, who lent his support to the management of the bank, aiming for stability of this systemically important bank. Now, the bank regulator, Reserve Bank of India, has also been quick in allaying any fears on the change and stated that there are no governance concerns surrounding HDFC Bank and that the RBI has approved the changes in the chairman of the board. So as a way forward, we learn from sources that with the conflict between Atanu Chakravarti and the bank's leadership now being resolved with this particular change in chairmanship of the board, Shashidhar Jagdishan's position at the helm of HDFC Bank strengthens further. That's what the bank insiders tell us. Now remember that his reappointment for the next term as the CEO of HDFC Bank is due in October this year, to be watched very, very closely and has not yet been applied as we speak, is what we gather. Now, let me discuss this with some experts joining in to make sense of this large corporate development. Let me welcome on the show Ashutosh Mishra, who's the head of research, institutional equity at Ashika Stock Broking. And we also have with us Amit Tandon, who's the founder and MD at IIAS. Gentlemen, so good to have you on NDTV Profit. And to put context first, before we take it to the expert comments coming in, let's hear out HDFC Bank's leaders' thoughts on a con call in this particular change, Sashidhar, and how he allayed fears and the changes that have really come in.
Minor issues do come up from time to time, but there was nothing material whatsoever. Let me reassure you, in no board meeting has there been any kind of, complete differences of opinion or anything of that sort. And the board minutes will reflect that. Relationship, human beings are human beings. There will always be some relationship issue between individuals. Those kind of things happen. There was no power struggle in the bank, as you put it, Suresh. The bank works, the entire bank, the management team in the bank works as a cohesive unit, and to my mind will continue to work as a cohesive unit. I would not have taken on this responsibility at the age of 71 if it did not align with my principles and the level of integrity that I would expect from the bank. None of us as board members are aware of what are the specific issues which Mr. Chakrabarti wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation.
We will not do anything that will bring in ignominy. Of course, there will be a large organization, will have errors and omissions. We will continue to address them as we go along, but never will the tone of the top have anything which will have any kind of embarrassment to anyone, including our own conscience.
All right, so those were the snippets of all the developments that have really taken place since morning today on this large development at HDFC Bank. We have with us Ashutosh Mishra as well as Amit Tandon joining in. Amit Tandon, first question to you. What does this entire, turn of events and how it was really resolved by the bank very speedily and quickly, what does that show about this overall governance aspect of a systemically important bank?
Thanks a lot for inviting me, Nisha. I'll first begin with a disclosure that HDFC Bank owns 10% equity in IIAS. So your viewers need to take whatever I say with taking that into account. Having said so, I guess what it means is that they know more about what is happening in our company rather than in us necessarily knowing regarding what is happening at the bank. And certainly, not with regard to the developments which have taken place this morning. I think, given the letter, there's simply no clarity in terms of what the underlying issues are. The chairman did, or the ex-chairman did say that there wasn't any alignment in the ethics, and there was certainly a mismatch between his ethics and those. And the question then is that, look, is it something cultural or are there certain specific issues which caused it? But it's the ambiguity which is the biggest problem right now. And therefore, it's very difficult to kind of comment in terms of what is it that is agitating, what agitated Mr. Tanu Chakrabarti. Having said so, I think the bank has at least so far been on the a little bit on the front foot on this issue. That's the most credible path, because we know that if there are certain uncertainty and governance uncertainty, it can erode trust by the market very quickly. So the fact that just as the market was opening, they were speaking to investors, giving them some degree of comfort that what they said at that time is pretty much that they're as much in the dark about what the underlying issues are as the rest of the market is. But subsequently, I have seen some statements from the central bank that everything is okay. And in this case, if we kind of read between the lines, the fact that the Reserve Bank of India appointed KYC Mistry, who is for all intents and purposes an insider, means that they still have enough trust in the people, in the bank, and in the processes and systems. Otherwise, they could well have said that, look, there is, we want an outsider to kind of come in and step in at this moment where there is some degree of there are some issues which have been raised, even though we are not sure what they are. So we're taking some comfort in that. We ourselves have been, looking at governance of companies very closely, and in all these years, we've kind of found that HDFC Bank has reasonably strong processes, and therefore it's not been something where there are red flags with regard to their governance. So we take comfort in our own analysis, we take comfort in some of the statements which have come, but nonetheless, there is some degree of ambiguity in the market, and it needs to be addressed in some form or the other. And the sooner it's done, the sooner that happens, the better off we all are.
All right, Amit, thanks so much for your comments. In fact, explaining the overall situation, how it's being seen overall. But Ashutosh Mishra, as Amit was mentioning, the bank as well as RBI both have been speedily really allaying fears around any differences or governance concerns coming to the board level. Does that really give a lot of sanity and also confidence in the bank? What's your view?
So yes, this gives a lot of sanity and confidence, especially when the regulator's letter come into the bank. So it really a lot of assurance comes from that front. But one thing is not very clear that what was the reason for his resignation. Yes, it looked like a power play, like you highlighted in the start of this event. So it can be a part of a power play between them. For time being, we don't see any major issue on the functioning of the bank because of this. But in the current market environment, when we have got this issues coming in and no specific reason, even in the con call came to they are not able to give the specific reason why he resigned. What was the key issue which he was facing up? So that may linger for some more period of time. But I don't see any major functional issue with the bank coming in. Yes, on governance, it will take some time. And I think that timeline will come from reappointment of the current managing director and new chairman coming into the place. These two things, even when that will be completed, by that time, things will be much more clearer.
So you did raise that all the concerns are not allayed, Ashutosh. I would like to point out that in his statement, Atanu Chakravarti has mentioned two important points. One was misalignment when it comes to the ethics and value. And then he later did speak to NDTV Profit and gave a quote that it was his personal values and ethics and nothing to do with the bank that he was referring to. So he allayed those concerns himself and demystified that particular aspect. But on the other hand, there's also a large merger process that is still on of HDFC Limited and HDFC Bank, with HDFC Bank as the listed entity. And that particular merger is also raised in the letter of Atanu Chakravarti, that probably it was not going in the way that he would have probably liked. Ashutosh, on this particular aspect, as an analyst of the bank and the merger process that you have tracked, you have views on the process of the merger and how it's been conducted?
So it's looked like that whatever they have put forward to the analysts, they are going ahead with that. They have said that FY26 will be the year of consolidation, which they are doing it. Now they are stating that FY27 will be the year of acceleration of the growth for the bank. We have seen the CD ratio from the upper level has been now bring down to a very reasonable level. So many of those things which they have guided is achieved. One thing which we need to know going forward, which was a very important point, was a PSL requirement. So that start kicking in, I think, from the next year onward. So that will be a very important thing from an investor point of view to look at how really they manage this PSL part of it, because the 4-year terms has extension has been given to them. So that will be the important things to watch out for the banks going out here. Yes, on a merger, I don't see any major issues from the investor perspective. Yes, there were some initial issues which has been addressed earlier.
Right, Ashutosh. So on the merger process, you made a very pertinent point that after 4 years get completed, the PSL requirement that really kicks in as a bank, that is something that the bank will have to really take cognizance of. So that will be on top of our agenda to watch out for going forward. Amit Tandon, while we are talking about this particular development, now we also gathered from our sources that one point of conflict was also that the non-executive part-time chairman was trying to take a lot more strategic roles in terms of the executive role that the management has. And in fact, we do gather from our sources that he was indicated informally to avoid getting into the execution matters and taking calls on that. How do you differentiate the role of a board and the management in situations like this?
Look, you've touched upon something which is very important, which is, what is the role of the board and the chair, and what is the role of the executive management. Now, for a long time, and for the longest, people have believed, look, it's the role of the board to define what the strategy is and so on and so forth. But if you think about it very carefully, it's the role of the management to decide what the strategy is and how will it be executed. It's for the board to first question and kick the tires on the strategy. Is this the right thing for the bank to do? Is this the right? So, if they say they want to focus on retail, not wholesale, just to give a big pic. So, is this the right thing to do? Should they be focusing on what are the underlying assumptions? Are they the correct assumptions? Is it consistent with their read of what the market is? And thereafter see how it is being executed. And finally, of course, look at what the parameters are on which the board is reporting. So there are completely different responsibilities. The responsibility of the chair is to see that, look, the meeting is conducted in the correct manner. Whatever are the issues which need to come to the board, whatever the time allocated to discuss each of the issues is adequate, and not get involved in the day-to-day running of the bank. And often, and we see that a lot with the market infrastructure institutions, some of the directors, and particularly those who are so-called public interest directors, have this view that, look, their role is very narrow, and the role is to ensure that whatever the regulator is saying is translated wholly and completely, irrespective of what the current situation in the underlying entity is, and that comes at the cost of everything else, and that's the only priority rather than, and a very narrow definition of what needs to happen. So therefore, since there's a difference in the role, it is of course very difficult for people to decide, when is it that they're intervening too much, and when is it that they step back. But that is what defines a great chair and a great independent director from one who is less effective in their board role.
Right. So the differentiation of the management and the strategic role, Amit, as well as also what really is defined by the board and the chairman of the board, those two differentiations are very, very critical. Ashutosh Mishra, on this particular point, there is one more aspect that had come to our notice while we were trying to understand the conflict areas. And you would remember how HDB and some of the subsidiaries transactions have really moved forward in the past at HDFC, right? And there was a time when MUFG, the Japanese company, was in advanced talks to buy out HDB. But it was decided against that and the IPO was done. We did gather that that was a point of contention where Atanu wanted it to be listed, and his vision for and the strategic move really prevailed. How do you analyze a situation like this?
That can be one of the reasons out there. We don't know. We can only speculate whether that can be the reason or not. Yes, post performance of HDB, post IPO performance, and no, even the off market pre-IPO price of the HDB and post-IPO performance is clearly indicating that some of the old shareholders has not made money. So there can be this can be one of the reasons which really started this whole issues. Yeah, that.
So all right. So that's an important word coming in. But to that point, now, Amit, again coming to the strategic decisions and the direction that the company really needs to take. The board has some say, but it's a collective say. How much can a chairman take over in terms of dominating important matters?
That's entirely a question of personalities and who are there. You have chairmen who are very dominating and kind of push through decisions which they want. There are others who are much more consensus building and see that everyone is taking views are considered, and then you kind of arrive at a decision. But again, boards have to remember that it's the responsibility of the management to deliver on the numbers and meet the expectations which are of them rather than that of the board. And therefore the executive management also has to have a complete buy-in. Having a buy-in always helps, and since you've spoken, maybe that's one of the ways of reducing the friction between the various people. But look, at the end of the day, friction is not necessarily bad. We all assume that everyone who's on the board will kind of be, there'll be complete, complete alignment of views. But boards can and should be there should be some degree of discomfort by being in a board where different people have different points of view. They're very vocal about why they agree or why they don't agree with what is being said. Which is also par for course. But at the end of the day, they all need to be rowing in the same direction. They all need to say that, okay, this is the decision we've taken. I may disagree, but look, if that's the consensus, maybe in the collective wisdom of the board, I'm going to kind of agree and go along with what everyone has decided and move forward, rather than then kind of dig my heels in and say, over my dead body, this will not happen. I'm kind of quitting the board immediately because you're not doing what I'm saying. That's not mature, certainly not mature behavior. I'm not saying this is what has happened here. I'm talking about a general, about it much more generally.
The biggest takeaway from what you said, Amit, is that the board is supposed to function in a collective decision mode. It is not the chairman who has to really take control and dominate certain decisions. That's a very important corporate governance rules, and especially in a large bank, which is systemically so important for us. Ashutosh Mishra, we also gather that this particular conflict going away with Atanu Chakravarti resigning and KK Mistry also lending his support to the decisions of the management and leadership of Shashidhar. Now, how do you see the way forward? Because we do understand from our sources that now the present CEO's position strengthens further with this conflict situation now ending, and going forward to be watched out for is his reappointment, which is due in October this year. How critical is his reappointment in this?
So it will be very critical to see his reappointment, and whether RBI give him a 3-year term or whatever the board recommend. That will be another point which we need to watch out for. And who is going to be the next chairman of the bank? These 2 things or 3 things will be very important to watch out for. But yes, it's also create whatever things was there going at leadership or board level, if that get addressed and bank is moving into the accelerated growth mode in FY27 onward, if everything remains good in the economic part of it. We are in between some war and other parts, so that have its own risk in the whole scenario. Then probably investor will get over this in the next 3 to 4 month period. But at least for next 3 to 4 month period, there will be some little bit of some discomfort till the time these 2-3 events get unfolded. Reappointment of the current MD and appointment of the new chairman. That will be very important things to watch out for.
All right, so Ashutosh, two important takeaways coming in apart from the PSL requirement watch and the merger process being completed. It's going to be very critical for this particular year that who comes after the interim chairmanship of KK Mistry really gets over, and it's short-term in nature. So who comes at the helm of the board of HDFC Bank? And the second most important thing is the reappointment of the present CEO and for the next term, and that is due in October this year. Let's also hear out another expert, Abhizar Devanji, on this particular matter.
So on boards, very frankly, differences of opinion and healthy debate is a very good thing. And frankly, if that has happened, that actually proves the governance of the organizations. Having known HDFC for quite a while, I do think that from a governance, from a debate, for an openness of discussion perspective, that organization has the right culture to do it, and it does do it. Now, ideally, what happens is sometimes as part of this discussion is that, some people may agree with a few things, others may find it ideologically different to do what they want to do. The regulator will want to get into what are the issues. And if the issues are simply interpersonal, then I don't think the regulator is bothered. Now, if you look at it from a regulator's point of view, HDFC has had some operating issues which they have sorted out with smaller fines. They have a larger issue in terms of integrating well the bank and the housing finance company. And that process, frankly, is mammoth. And you've got to give it to management that they have done a fantastic job at a time when times are turbulent.
All right, so there goes Abhizar Devanji's statement and also comments coming in. Amit Tandon, while agreeing to disagree at times is only healthy in a corporate environment, in this particular situation, this particular company with almost 45 to 49% of foreign investor shareholding in a bank, and that is a huge amount, and the corporate governance standards are much higher, or at least the expectation is much higher in higher FII held companies. How do you see this really building a perception or impacting HDFC Bank's premiumization on the stock market from the FII and also some premium investor community?
Look, again, what you're asking is saying is very relevant because unresolved ambiguity lingers, and governance uncertainty can erode trusts in ways that financial metrics will find very hard to repair. What the bank needs to do is kind of stay ahead of this any regulatory inquiry that may be there, and maybe they could facilitate a structured dialogue between Mr. Chakrabarti and an independent agency to surface and examine what his concerns are and address them and be a little bit more vocal about what is happening. I will, of course, having said that, say one thing, that we do take comfort in the fact that when you kind of take a step back and think about RBI as a regulator, they again don't mince words. So, there were issues with the bank on their credit cards, and they kind of said that, okay, you can't onboard new customers for about a 6-month or an 8-month or a longer period of time. Before that, there were certain other issues which they had flagged and said that, look, we're not going to sign off on the approval of an executive director till the issues are resolved. So the Reserve Bank of India has been on the front foot, and at the moment, there's nothing which has kind of surfaced. So all we have to hope is that it's unfortunate, in terms of the letter, just said that there are certain issues. It would have been good if, Mr. Chakrabarti had voiced what they were. Is it something to do with culture and ethics? But he's been in the bank for 4.5, 5 years. So therefore, it's something which should have been flagged from his side earlier. Is it just the fact that the company is mis-selling, which is, again, something which, if you voice it and discuss it, which can be addressed at the management level? Is it some third concern? So at this moment, we're kind of all in the dark, and that is again something which came out in the conference this morning, which the bank had held, where they said that, look, we ourselves are really not clear. So I will kind of encourage the bank and Mr. Chakrabarti to kind of facilitate a dialogue between themselves so that there's clarity, and the sooner you're kind of able to get a sense of what has happened, you're able to kind of communicate that to the market and the regulators, you will be able to move on and get this behind you.
All right, so very pertinent points there made by you, Amit Tandon. Thank you so much for all your expert take on the governance aspects and what's the way forward. Ashutosh Mishra, on your keen sense on the strategic as well as analytical way forward for this particular bank from here on. Thank you so much, gentlemen, for joining us. So with that, now we come to end of this particular discussion. Important takeaways. What will be key to watch is the next chairman's position, and also remember that CEO's position and term being also reappointed. Those two aspects will be very critical to watch, and as Amit was pointing out, some more clarity on conflict areas will also allay more fears. With that, it's an end on this special show on HDFC Bank's developments, but stay tuned to NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of people, language, and politics. Vanakkam Tamil Nadu. Here we come.
All right, team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey standing at the NDTV Profit market bit with all the action. Sharad, good afternoon. I mean, the way markets have started off, there is a gap down opening. The pressure is still there, but you are seeing some pockets which are probably reacting in the positive. But what is the market intelligence now telling you?
Good afternoon, Hiral, and of course there is a big sell-off which is there in the market. So there was a gap down opening, as you had pointed out. Minor recovery open, but still Nifty is down 500 points. Nifty Bank, of course, the HDFC Bank drag, that's the biggest story of the day. Of course, massive sell-off across all the counters. But nevertheless, let's pull out Nifty Bank also. There is a type of a recovery coming in. And remember, this recovery is also coming in from the HDFC Bank. It was down almost 7 to 8% in the initial trading session. And now there is a recovery at play. But still, it's the biggest contributor when it comes to the Nifty and Nifty Bank's drag right now also. Also, let's point out the key triggers, Hiral. And remember, 3 days of relief rally we had, but then market carnage right now happening. Both Nifty, Sensex, Nifty Bank, you take that. Geopolitical tensions are dominating the mood in Dalal Street right now. And if you look at the other key triggers right now going ahead, is that the HDFC Bank is still dragging Nifty by more than 100 points even after its recovery. You could see how big the fall has been. Apart from this, technicals are suggesting more downside right now instead of recovering, because oversold levels are almost there. But when the recovery will happen, that's the time question to ask. The India VIX again has jumped more than 15%, now near that 22 mark, and little bit of concern is definitely coming in the markets as well. But in this current situation, what should one do? That's very much important. But before that, remember, all sectors are in red. Realty, BFSI and auto have been hit the most in the day's trade, and largely last 2 or 3 days gains have been wiped out. Avoid trade unless you have a very strong risk management system. That's what the traders are talking about. And also value picking becomes a bit difficult in current situation. The rupee bond markets are closed on account of a holiday today. So that's why the rupees and the bond yields we are not seeing right now, but definitely it will be negative as the markets open tomorrow. But Hiral, it's an absolute carnage here in the markets, and it's just not HDFC Bank. There's a whole lot of banks, and almost 90% of the stocks are seeing short build-up in the F&O space.
Absolutely, 90% of your stocks are seeing a short build-up. In fact, it is Sensex expiry today as well. So you could see that volatility that could probably stay elevated in today's session. Where it ends is anyone's guess. But let's quickly just address the flashes. You have Europe gas prices, which have actually jumped 27%. That's what we've been picking up. And this is after the Qatar plant has been hit. And this is an update coming in terms of the Iran-Israel war that is ongoing. You have a Qatar plant which has been hit, on the back of which you have the European gas prices, which have actually seen an uptick of around 27%. Any impact when it comes to India is something that we will look to ascertain from here on, but a 27% jump is what we're tracking so far. But moving on, let's quickly look at the watch list. HDFC Bank, a 52-week low as the chairman has resigned. You have KYC Mistry, who will be coming in the interim for the next 3 months, and then a probable decision that will be taken. Nazara Technologies, a 918 crore acquisition deal, is something that the markets are not really taking well. The stock has been under pressure. Polycab continues to be in focus on the back of the Middle Eastern war, which has been impacting exports as well as domestic business as well, on the back of supply chain issues. Tata Motors CV is under pressure, but you have Investec, which has initiated a buy recommendation. So that counter is in focus today as well. And you have a Shriram Finance, which is the top loser on Nifty 50, with the HBCL hitting a 52-week low on the way crude prices are panning out, and it becomes a beneficiary for a ONGC. Adani Total Gas as well. The stock is up in a weak market, so strong moves coming in there. Acme Solar, NTPC Green also, because the ALMM list 3 for ingots and wafers has been approved by the ministry, and that is what is giving a fillip to both these stocks. Strong buy coming in on heavy volumes on ITI in trade, and higher milk procurement prices could potentially put pressure when it comes to margins for a company like Dodla Dairy. Camlin Fine is another one that we will be talking about. That stock has hit a 52-week low in today's day of trade. So that's the watch list on trending stocks today. But let's head across to Sharad to take us through the rapid fire with Vishnu Kant from Master Capital Services. Over to you, Sharad.
Thanks a lot, Hiral, for that. Good afternoon, Vishnukant. It's always a pleasure to have you. The first stock in focus is Shriram Finance. Of course, sell-off is definitely there, but the company has recovered whenever there was a dip over the last 3 to 4 trading sessions which we had seen earlier. Your views on that? It's a good buy the dip opportunity?
Hi, Sharad. Very good afternoon. Hi, Hiral. A very good afternoon to both of you. Well, so technically stock is still in buy trajectory because it is holding above its crucial horizontal support which aligns around 932. So as long as prices are trading above 930, 920 sort of levels, we can bet on buy. But any decisive fall below that level will trigger a panic selling, and that panic selling could be extended towards 850. So yes, for now we can hold this stock with having a stop loss below 930.
Right. And Vishnukant, your views on HPCL. This month the stock is down more than 20%. Further downtick here, what will be the key levels one should track?
I mean Hindustan Petroleum, right?
Yes, HPCL.
Well, so, for a short-term term, it's a completely in a bearish trajectory, and it is likely to extend this losing streak towards 300, 310 sort of level. So right now, one should not bet on this level.
Right. And Vishnukant, higher crude prices augurs well for stocks such as ONGC as well, and it's also holding up in the day's trade. You suggest further longs for this?
Yes, definitely. These prices are good for refining companies like ONGC, Oil India. So definitely prices are holding up. It's a crucial support around 260. So one can expect prices to reach towards 280, 290 sort of level. So yes, go for that stocks with stop loss below 260.
Right. And Vishnukant, your views on Adani Total Gas. In such a weak market, the stock has delivered very strong returns, and it's just not today's trading session. We have seen in previous sessions also. What are the key levels to watch out for Adani Total Gas?
See, we have seen good amount of buying as well as good amount of volume in today's trading session. The stock is up around 8.75% in today's trading session. Although in last couple of days we have seen sharp turmoil in the prices. Prices toppled below its 21-day exponential moving average and 200-day exponential moving average, and still prices are below its 200-day exponential moving average. So as long as prices are trading below 648, 650 sort of level, so there would not be any stability in the prices. So for long, prices must move above 650 with a full conviction for a fresh buying towards 680, 700 sort of levels.
Right, the standard disclosure as well for the stock which we have mentioned, Adani Total Gas. But moving on, Acme Solar is there, and even NTPC Green is there. Out of these two stocks, is there any opportunity being made here for a trade here?
Yes, definitely. Both stocks are looking quite good. In last 2 or 3 trading session backs, we have seen a good breakout in Acme Solars from a very crucial horizontal resistance. Prices are currently comfortably trading above their all key moving averages, be it a short term, be it a long term moving averages. So I believe as long as prices are holding above 240, 245 sort of levels, prices are now all set to extend this winning streak towards 290, 295. So yes, Acme Solar is looking quite good. One can buy this stock.
All right, so that's a pretty much interesting on that. Then ITI also, we are seeing a good up move was there initially, a gap up opening was there, and now also it's holding in the green last time I checked. Your views on that?
So it's a high beta stock, but looking quite good as prices has given a sharp rally in past few days, and I'm expecting prices to extend again towards 295. So with having a immediate stop loss below 259, 258, one can go long in the counter with a potential upgain towards 295, 310.
Right. And Vishnukant, stock from the cash market, Dodla Dairy. The stock is the biggest loser in the Nifty 500 index, and reports have also started coming in of price hikes, and because of that the dairy company's procurement cost that goes up. Important levels for that, the stock is down almost 8 to 9%. Important stop losses?
Well, so we have seen a very good up move in yesterday's trading session, and the move was somewhere around 10%, but similarly correction also has been witnessed in today's trading session. The prices are down around 6%. Well, but we have seen some amount of buying in yesterday's trading session. So as long as prices are above 1000 sort of levels, we can expect some sort of buying, and prices can regain towards 1190. So yes, for a very short term, one can buy the stock, and stop loss should be placed below 997.
And Vishnu, what about Camlin Life Science? Your views on that? Vishnu, Camlin
So,
Fine Science we're
yes.
talking about, yeah.
Yes, Camlin Fine Science. So stock is currently trading around 122, and the stock is in completely bearish trajectory. So there is no any kind of buying opportunity in the prices for bulls who wants to buy. So stock at least move above the previous June high that aligns somewhere around 145. That is also the proximity of 21-day exponential moving average. So yes, there is currently no buying in the stocks. One should keep the stock on the radar and let the prices move above 145 with a full conviction.
Well, that's the end of Rapid Fire. Thanks a lot, Vishnu Kant, for that. Over to you, Hiral.
Thank you so much for that. So these are stocks which are trending and which are on NDTV Profits radar. Let's see what Google Trends is indicating, which are the stocks which have highest interest in terms of where markets are concerned. Let's put up that one on the screens. Categorically, Urban Company is one which is seeing cuts in today's session. Waaree Energies, PFC, Moil, BPCL, these are the ones, but major cuts coming in terms of Urban Company as well. In fact, that was one of the stocks that we had as stock of the day in yesterday's session. Vishnu, your view in terms of Urban Company with the kind of correction that's coming in today as well? Vishnu, you're on mute.
Well, so the stock, has been on my radar because in yesterday's trading session, we have seen a move of around 10% in the stock on a EOD basis. And the volume was also good. And there were, I think, news that the SBI mutual fund bought the stock around 600 crore. So recent activity, clear-cut indicating that the prices are getting traction, and the recent, move in the prices is saying that the prices are now all set to extend this gain towards 127, 122. So today's corrective fall could be a golden opportunity to buy the stock. But I would like to highlight one point, that is that the stock has given a very good up move in recent days. So there is a possibility of corrective fall. So in staggered way, we can, buy the stock. The half amount of buying can be done at a current market levels, and the second installment can be done somewhere around 110 with keeping stop loss below 105 for the target of 129.
Okay, 129 on Urban Company. Thank you so much, Vishnu, for joining in. Always a pleasure to speak to you. But moving on, the government is actually stepping up its renewable push with the cabinet clearing a major boost for small hydro projects. Now, the policy move aims to actually lift capacity and also revive the interest in an under-tapped clean energy segment. Varsha joins us to list down the details of the approval, and then she will be in conversation with the management of transformers and rectifiers to understand how a trill would actually benefit out of this move. Varsha, over to you.
Well, thank you so much for that. Definitely, I would say a strong move which is coming for small hydro players. Union Cabinet have cleared 2,585 crore scheme when it comes to small hydro development scheme, and which the aim is to develop 1,500 megawatt of renewable small hydro capacity. Now, talking about the project capacity and timelines, the individual project size will be from 1 megawatt to 25 megawatt, and the implementation period will be for 5 years, that is starting from till 2030 to 31, and the scheme is expected to attract 15,000 crore in fresh investment. But to speak more about this, I'm here joined by Mr. Chanchal S. Rajora, who is Director of Finance at Transformers and Rectifiers India Limited. Well, welcome, Mr. Rajora, and always pleasure to speak to you at NDTV Profit. With the government announcing this scheme of small hydro power development scheme, how do you see order inflows for transformer as a whole?
Look, government has yesterday announced basically two good policies, and which is better good for the power sector. One is this SSP, what you were talking about. Another one is the Bhavya. If we talk about the small hydro projects, the opportunity for the transformer industry is quite good. The kind of the 54 to have 1,500 megawatt transmission things, it is required around 2,500 megawatt of the transmission facilities. So what we can see for these projects, around 220 kV of transformers will be required, and say approximately about 500 to 550 numbers of transformers required. So it is a significant opportunity which is directly as well as indirectly will benefit the transformer industries.
Rajura, when it comes to ordering momentum, do you expect ordering momentum to start immediately?
We don't see that ordering movement will start immediately. It will take around 6 to 8 months time because the cabinet has just approved the policy yesterday. Then people will start understanding what policy says, and then the investors will come into the port, which is basically this policy is mainly for the northeast regions. So we say that it is going to take 6 to 8 months time once the ordering will start. And it is for the company like us, or for particularly for our company, it is good because the facilities what we are building up, it is going to be available for these transformer in 6 to 8 months time. And if I tell you about only for the transformer industry, it is around 2,000 to 5,500 crore revenue capacity, revenue opportunity.
Understood. And sir, lastly, how does small hydro projects are, compared to solar or wind in terms of execution, complexity, and of course margins as well?
Look, for if you're talking about the transformer industry, it's one and all the same. It says the green energy transformers or renewable transformers. So it is the same. Yeah, for the power players who are going to put it up, yes, it's definitely a little bit challenging than putting up a solar or other renewable projects.
Thanks a lot, Varsha, for that. And of course, the management also giving the views in the small hydro projects as well. But of course, moving on, we'll be talking about how the developments are happening for these stocks, especially for Nazara Tech. They have announced an important acquisition here. Of course, a global acquisition, this is at play. And the amount you see, that's on the higher side as well. But the brokerages, they have turned a little bit of cautious, especially on a high risk reward area is something which they had mentioned. BNK had actually mentioned. And joining us would be Sachin Jasuja here. Good afternoon, Sachin. Your views on Nazara Tech. This acquisition seems a bit expensive and a bit different, a higher risk one, especially on the AI casual gaming segment. How do you see this development for Nazara Tech? Are they over expanding right now, or is there some concern here in this stock?
Hi Sharad, thank you for having me. So Sharad, I think this is a necessity of this particular business that you have to acquire a lot, to remain relevant into the industry. So I mean, we have seen globally also with Tencent and even so most probably I think Nazara must have done more than 15 acquisitions in last 10 years. So I think this is relevant for the for being sustainable into this kind of field where every day new games are coming up, new media fields are coming up, and they're giving the competition. So probably they have grown by 5-10x in last 10 years in terms of sales, but in terms of profitability we could not see that kind of trajectory. So yes, I think they had to acquire, but yes, whether from investors' perspective, this space is relevant or not, or this is can be really growth oriented or can generate a lot of revenues going forward, hard to say. And I think artificial intelligence will also play a key role into this industry going forward. So there are a lot of challenges, and considering that, I think investors are a little jittery about the recent acquisition.
Okay, so that's with regards to where Nazara Technologies go. But moving on, you have HDFC Bank's part-time chairman, Atanu Chakrabarti, who has resigned, citing differences over values and ethics. That stock actually took a beating when we opened up in trade, but post the commentary that we've heard from the management as well in terms of the conference call, the conversation that NDTV Profit had with Mr. Chakrabarti himself, categorically comes and tells you that there are no systemic issues that are prevalent in terms of where the bank goes. Clearly, this is an issue when it comes to ideologies, is what Mr. Chakrabarti highlighted to NDTV Profit as well. And there are no wrongdoings at the bank level for which he has resigned. Basis that, in fact, also listen in what KK Mistry of HDFC Bank, who's the current interim part-time chairman, has to say. Let's listen in.
minor issues do come up from time to time, but there was nothing material whatsoever. Let me reassure you, in no board meeting has there been any kind of, complete differences of opinion or anything of that sort. And the board minutes will reflect that. Relationship, human beings are human beings. There will always be some relationship issue between individuals. Those kind of things happen. There was no power struggle in the bank, as you put it, Suresh. The bank works, the entire bank, the management team in the bank works as a cohesive unit, and to my mind will continue to work as a cohesive unit. I would not have taken on this responsibility at the age of 71 if it did not align with my principles and the level of integrity that I would expect from the bank. None of us as board members are aware of what are the specific issues which Mr. Chakrabarti wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation.
Okay, so that's the view coming in. We've got both sides of the story so far. But let's ask Sachin D'Souza his view. Sachin, how are you looking at a HDFC Bank with the correction that has come in today on a YTD basis as well? That stock has corrected the most if you have to compare it to any of the other banks. Would this be an opportunity to buy a HDFC Bank, or would you say this is still a wait and watch moment?
Yes, Hiral, I think we see it as an opportunity, and words from Mr. KK Mistry is also really reassuring. And I remember I started working, in this financial market from 2007, so almost 20 years now, and I've never seen HDFC Bank trading near to price to book value of 2. I remember the financial crisis of 2008 when it was trading at, I think, in the range of 2.5, 2.6. Even in COVID, I think it was 3. But now, and the profitability growth has been phenomenal. Even in last 3 years, where the bank book has grown really well and the size is really big, still the profit growth has been more than 20% CAGR in last 3 years. So coming near to price to book value 3, now the gap is also very minimal as compared to the public sector banks and private banks in terms of valuation, and private sector banks remain quite efficient. And I think this kind of opportunity, if it doesn't escalate from here on the corporate governance side, and I'm sure that KK Mistry will take care of it. And let's not even forget one thing, that it is very well-owned bank. 47% is FII owned, 37% is domestic institutions. So I think they will take care of any wrongdoings if it happens. So if the NPA doesn't go up, I think this valuations.
Right, Sachin. Right, Sachin. We have one more stock, Polycab, which is focus. Of course, stock has taken a beating, but the Middle East tensions which have come in, and remember, the exports profile Middle East is the largest for Polycab. How are you seeing this, and what will be a reaction on Polycab?
So again, yes, this crisis, because of this crisis, the stock has gone down. But we feel that this remains quite a high quality play. On the power, proxy play on the power, you can say. So whether it is cable business, even from the renewable side, on the solar standalone side, they have started reporting numbers where the growth is phenomenal for FY30. The management has given the guidance, very strong guidance, and remain a very high quality, high growth play. And the valuations are also reasonable. I think we have seen correction from almost 50 to 40 kind of multiple.
Okay.
So we remain quite bullish.
So bullish in terms of Polycab. Thank you so much, Sachin, for that. We're running out of time, but very quickly, you have the Commerce Secretary who's coming and talking in terms of the Middle East war updates, where he has come out and said that they're announcing a new scheme under the Export Promotion Mission. And this new scheme will be aimed at exports to almost 18 to 19 Middle Eastern countries. The details of this are yet to be announced so far. We will try getting you more updates as and when the briefing, mentions it. But so far, some relief that could be coming in for exporters who would be exporting to almost 18 to 19 Middle Eastern countries. Let's see in what form they come in as well. But completely out of time. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now
Hello and welcome to NDTV Profit. You're watching this special coverage on India's GLP-1 moment, the way it would benefit all the generic companies. And not only that, we're talking about benefits that would be trickling in for consumers as well. I am Hiral Dadia and with me is Varsha, who covers this space pretty closely. Varsha, this is going to be an interesting moment where you have semaglutide patent which expires tomorrow, which is the 20th of March. And this opens up the Pandora's box for a lot of your generic players. And it's not only the ones who are going to make generic version of semaglutide, but the entire diabetes portfolio and companies who are probably giving the APIs for it. And if you're talking about hospitals, diagnostic companies, that opportunity is just immense.
I would say a big picture or a big change in entire healthcare. Considering one of the hottest drug, that is semaglutide, which is the active ingredient in Ozempic, is going off patent in India on 20th of March 2026. Now, what is this semaglutide? As I said, it's an active ingredient, is used in your for diabetes and plus weight loss, that is obesity. And going off this patent will actually open the market for 50 plus Indian pharma companies. There's a whole lot of pharma companies which will come up the generic version for this. And so GLP-1, if you see, is the fastest growing drug segments globally. Now, talking about, let's talk about some history and, what are the other parameters to it. So semaglutide, if you see, innovator, the maker of semaglutide is Novo Nordisk, and they have brands like Ozempic, then you have Wegovy, and also the third brand is Rybelsus. Now, if you see the patent expiry in India for semaglutide is 20th March 2026. Now, why this is a big shift also, you do have the other GLP also. Like I talked about semaglutide, you have liraglutide. The innovator is of course Novo Nordisk. There are generics, already Biocon is venturing and other pharma companies are also venturing into it. You have dulaglutide, again innovator. The maker of this active ingredient is Eli Lilly. Again, generics are not yet because it depends on the patent expiry. Then you have tirzepatide, wherein the innovator is Eli Lilly. You have brands like Mounjaro and Zepbound. Generics far away because the patent expires late 2030, 2035. Now, what is the India impact? No sudden price drop. Innovators continue to dominate. Gradual opportunity for Indian players.
So Varsha, are we saying that apart from semaglutide, for these other products, we are not expected to see a sudden price drop, though innovators will continue to dominate because the generic players are far away.
Correct.
So the situation for these three products is very different as compared to a semaglutide.
Because in semaglutide, you'll see 60-70% of price drop, because now whole lot of generics company will come in and they'll sell because it's a volume game.
Correct.
After the patent expires, it's all a volume game. Now, moving on, what happens after patent expires? Price drops sharply, like 50 to 60% lower. And, this access improves significantly in India. Also, if you see, demand explodes due to affordability, because you're getting that drug, oral drug at a very cheap prices, and demand explodes due to affordability. And this is a shift from premium drug to mass market drug. I would say everybody will have that capability to afford the Ozempic, I would say. Now, who will benefit in India? Which all are the companies which will benefit in India? Every other pharma company is talking about GLP-1 or semaglutide product. You have Dr. Reddy's, Sun Pharma, Biocon, Lupin, Mankind, Natco, Emcure, Zydus. These are all the formulation player which will be benefited. Even CDMOs companies will be benefited, who will make the API, the key ingredient for these companies. You have the likes of DVs, OneSource, all the CDMO companies will be benefited. API manufacturers and distribution and retail pharma networks will also be benefited. Hospitals will be benefited from this. A whole host of healthcare, entire healthcare will be benefited. Now, who's the big loser? Of course, Novo Nordisk.
I mean, it's the loss of exclusivity,
Loss of exclusivity. Now you won't be able to mint that money unless you come up with the other, a drug, I would say. So Novo Nordisk is of course the loser, considering the pricing erosion that the company will see. And of course, Novo Nordisk will also come to India, but at a very low price.
Yeah, so that's going to be the key question. But let's understand from all our guests. We have Ramesh Swaminathan, Executive Director, Global CFO from Lupin. We have Neeraj Sharma, who's the CEO and Managing Director of OneSource Specialty. VM Ramana, CEO Branded Markets, India and Emerging Markets at Dr. Reddy's, who are joining in as well. And we will have Sawan Mukherjee, who should be joining us on the show soon. But let me get in Mr. M.V. Ramana's view. Mr. Ramana, let me come to you. We're talking about a market which is going to explode in terms of where India goes. What is the kind of opportunity do you think that the Indian generic players are sitting on? And two, how are you looking at the opportunity for a Dr. Reddy's?
So good afternoon to you and all the panelists. Yes, so this is a very important opportunity, not only for Dr. Reddy's, but for many of the generic pharma companies, because the patents now start to expire not only in India, but several emerging markets, including Canada. So if you see the world over, there are three kinds of countries. One, where the GLP has been very well served. Second, I think, where it was partially served, and there are countries in which the GLP products have not been launched. For Dr. Reddy's, because of a presence both in India and emerging markets, we expect to take these products at an affordable price and ensure that these products are available across all of the markets where the patents would expire.
So, Mr. Ramana, let me take the opportunity to take a second question with you on this as well. In the entire development journey, where is Dr. Reddy sitting at right now? And two, with the kind of opportunities that come your way as well, from a benefit to a consumer perspective, any inputs that you have?
Sure. So first, I think Dr. Reddy's has been in the forefront of developing the generic version of semaglutide, and we all obviously have portfolio of products within both the diabetes as well as obesity range. And here, what we have been able to do is to have the manufacturing capabilities, because this is a very complex product. It is a complex injectable in the form of a peptide. So we have been able to put together a manufacturing facility doing the API. We're working on the formulations, both with our partners as well as our own capacities. And then we have the front end in most of the countries where we would be able to take the product. Second, I think you just spoke about the product itself. Semaglutide is a product that would help not only the people with diabetes, but also people with obesity. India actually ranks very high in the number of obese as well as diabetic patients. And hence, when the generics would start to get available starting from tomorrow, you would see a good amount of offtake, because these would be at affordable prices. Not only Dr. Reddy's, the rest of the Indian companies would also ensure that these products are affordable. And as a company, we would obviously look at not only ensuring availability of the product, how might we be able to connect with the patients, and how might we help them in their journey, and to obviously create a good amount of evidence on how this product helps both the diabetics and obese patients by partnering with the HCPs in India.
Well, Mr. Swaminathan, coming to you on this, starting with the semaglutide patent expiry on March 28th, how big is an opportunity for Indian companies and of course for Lupin as well?
The semaglutide becoming generic is certainly a very large opportunity that all of us are excited about. Clearly, because of the fact that India has a very large population of diabetic patients. There are more than 100 million people who have been impacted by diabetes, and there are a good 125 million who are pre-diabetic. About 50 million people would really be obese as well. So clearly, it's a very, very large market. If you look at, in fact, the numbers, the growth rate, there's 15.7% in the last 3 months in terms of diabetic products being consumed. Whilst if you were to exclude, in fact, the impact of GLP, it would normally be about 7.8%. So clearly, there has been an increase in terms of consumption of anti-obesity products. Clearly, because of the kind of advertisements that you see on TV, on airports and stuff like that. So clearly, there's a lot of visibility going on, and that is, in fact, setting the expectations as well.
Ramesh, I understand it is absolute nascent stage to understand with regards to market share. Talk to us about how big this portfolio will be for Lupin going ahead, because Lupin has entered into a semi-exclusive co-marketing agreement with Zydus as well for the Indian market. So how big could this portfolio actually become for you?
Clearly, we are pretty big in the anti-diabetes space. So we're amongst the top 3 players, and that sets the expectations really. I appreciate the fact that it's a pretty competitive market, and I would imagine that there'll be more than 40, 50 people, 40, 50 players, who would actually be entering the market with this drug. So clearly, there is going to be very high level of competition. I would in fact expect prices also to drop anywhere between 3,000 to 5,000 rupees. And I think the market, would be around 1,500, but eventually grow to much larger figures. But as you would also appreciate, there are a number of other drugs which are also, coming up. There are more than 40 drugs which are in the making, essentially going on to dual receptors, to triple receptors and the like. And clearly, that would actually expand the market.
Right. Mr. Sharma, as a CDMO player, how long is this opportunity window for you? If you could highlight us for that, considering you'll be manufacturing this product.
So, as you're aware, there are a number of markets which are opening up now. In fact, Canada, which is the largest market outside of US, is patent already expired in January, and now in the next couple of days, a number of other markets, large markets, will open up, including the likes of Brazil, India, China, Turkey, Saudi Arabia, and so on. So multiple markets. A significant part of humanity will have potentially access to semaglutide. But while this is the start, the patent expiries will continue in phases. In 2028, the next phase, which is the European Union countries, especially Eastern Europe, will come off patent. Then towards end of the decade, Western Europe, and then later on in 2031, 32 will be US. So so this is, as I said, in multiple phases. This is a multi-year opportunity, and as I said, this is just a start of that opportunity. And we at OneSource, that's how we have doubled down. In fact, the capacities which we have built and we continue to add to are being put in to service this multi-year opportunity.
Understood. And also, Mr. Ramana, do you see this as a blockbuster opportunity comparable to the past generic waves, or something fundamentally different?
You see that when it comes to GLP, this has been a very important category, and the way in which it has taken off because of the benefit that the product is able to give, both for diabetics as well as for obesity. So definitely this is a very important product, and it would benefit a large number of companies, but I think it will benefit the companies who have presence in multiple markets. So Dr. Reddy's being one of them, we expect that this is going to be a meaningful opportunity for Dr. Reddy's.
And Ramana, with 50 plus Indian companies that are expected to launch, how intense will that competition be? Because you already have seen the innovator who's already slashed prices. So what will differentiate winners? Speed, scale, and doctor reach.
When it comes to what will differentiate the winners, I would say 4 elements. One is, are you able to have the fully integrated manufacturing capabilities, because this is a pretty complex product? Are you able to offer the same product both in India and internationally, the same one product, one quality? The second, I think, is the footprint in India, in emerging markets, and in Canada to take this product forward. The third is the way in which we would be able to support the patients as well as the HCPs in terms of how this product can be used. And finally, of course, how are we ensuring availability of the product across all of these markets at affordable prices? So these are the 4 elements, I would say, and hence it would be a meaningful opportunity should you be good in all of these four issues.
Okay, so that's with regards to, who is going to stand to win in all of this as well. But, whilst we actually talk to all of the players, Sayan Mukherjee, who analyzes this space pretty closely as well, joins in. Sayan, welcome to the show. Always a pleasure to speak to you. Your initial assessment when it comes to the GLP-1 portfolio and the kind of benefits a generic player would see, and with innovators slashing prices when you're talking about a semi-glutide, will that be a double-edged sword? How are you looking at this entire gamut?
Yeah, thank you. We are looking at it in a very constructive manner. We need to keep in mind that the innovators, Novo or Eli Lilly, haven't really serviced the emerging markets, including India, adequately. I mean, these products came to India just around a year back. And by the way, Eli Lilly's tirzepatide is already hitting more than 100 crores of revenue a month. And therefore, I think within a very short period, we have seen a good pickup. So the opportunity for generic companies is actually to capitalize on a market which can expand meaningfully as prices come down. And by the way, the innovators themselves haven't really serviced that market well. So in that sense, this is a very large opportunity which can unfold given the size of population that we have in India and various other emerging markets. And as you know, this product has meaningful clinical benefit when it comes to diabetes or cardiometabolic disease and obesity in general. So we are looking forward to this opportunity, starting with India now when the patent expires, but also in various other 80-odd markets which are opening up for generic company. So notwithstanding the price cuts that we may see, it can at the margin be positive for the sector.
Got that point. Well, hi, Mr. Mukherjee, Varsha, this side, pleasure to have you. Who is better placed in India? You have partnered player, or you have fully integrated player, you have CDMO companies also. According to you, who is better placed when it comes to India in semaglutide or, overall GLP-1?
Yeah, so actually you're right. So there are different kind of players. As you know, this is a drug which is a bit different because it's a drug device combination. It's an injectable, an auto injection product. So therefore, there are players who would be supplying the device. The pharma companies don't manufacture the device. So it's a mechanical device. So there are set of companies who would benefit from there. Injectable plants are not readily available. You need injectable plants which meet the standards to produce this product. So therefore, the CDMO companies who would be doing the fill and finish job would be a beneficiary. And then, of course, you have the marketing companies, which are the generic companies who would be marketing this product in India and various other markets. Now, what we think is to start with, let's say in the initial period of this genericization, everyone in this chain would benefit because I think there would be enough demand and also the growth would be quite significant. So whether you have integrated players like who are doing their own manufacturing and the ones who are doing just the commercial front end or marketing, they will all benefit in the initial phase, particularly when we are looking at emerging markets, because this would be the branded markets, right? So even companies which have the commercial front end and may not be vertically integrated in terms of manufacturing, of course, for them a part of the value is not captured, but still they would benefit. But I think over time, as prices come down, over time when the generic market, the regulated market opens up. So if we are talking about US and Europe many years down the line, then I guess being vertically integrated it would be important when you are looking at those non-branded markets. So to start with, I think it should benefit all players who are part of the supply chain.
Okay, so benefits should pour in, but what happens in terms of pricing is what we need to see. Stay with us. We'll just quickly look at what that revenue generation so far has been as well for the innovator. Let's look at a Novo Nordisk. $26 billion is what they've garnered from Ozempic, and Wegovy, and this is data as per 2024. Eli Lilly has got around $16 billion from Mounjaro and Zepbound. So this is the revenue contribution that they've seen if you have to look at the GLP-1 portfolio. And very quickly, in terms of price sensitivity, the innovator price has been around 15,000 to 25,000 per month, and they're expecting a 50 to 60% lower price, which is coming down to almost 5,000 weekly is what you're talking about in terms of the generic companies. To add to this, India, as we know, is a very price-sensitive market, and the generics are expected to explode the adoption in terms of where consumers go. So that's what we're looking at overall. So the final patent expiry price crash is what we should be watching out for. Let me take this question with the management of OneSource as well. Are you seeing any pricing pressure as more CDMO players are entering?
So, our point is very clear on that, that we as CDMO are still a small fraction of the total in-market price. And our pricing is very, very market agnostic. Whether it is India or Canada or Brazil or any other market, our pricing to the customer is based upon volume and is tiered on volume rather than on the market. Having said that, because we are really invested into this business, we have also worked out, and we continue to engage with our customers, how we can increase the scale, for example, increase batch size, which would increase the efficiencies, and we would be able to share part of that efficiencies with our customers to continue to make them competitive. So that's the model which we have with our customers, that if they work efficiently with us on expanding, increasing batch sizes, we will certainly make sure that they remain competitive as long as they are in this field.
Right. And Mr. Ramana, continuing on the pricing strategy, just wanted to understand, as far as my knowledge, this will be a volume game. And also wanted to understand, will GLP see better margin than traditional generics, or follow the same trajectory? Just wanted to understand the pricing action and the pricing strategy or sensitivity when it comes to semaglutide overall.
Sure. So, Varsha, what will happen is, this is not a small molecule. This is a complex peptide, and hence you would not see the kind of pricing that you would see normally when a small molecule goes out of patent. Having said that, the pricing that you would receive or you would be able to get not just in India, but in emerging markets and Canada is going to be different. So as a company that has ability to market the products in many of the emerging markets, we expect the realization in several of the emerging markets would be better than what you would realize in India. But overall, India would support in terms of volumes. And similarly, I think as San was talking about, that there is a significant amount of unmet need. So you would see that there would be different markets playing at different prices. India would be competitive, but then if you have a good spread of presence, not just in India, but in other markets, you should realize good margins over the next 2 years.
That's with regards to a company view, Sayan. Let me take your closing comments when it comes to the price erosion that we're expecting or pricing pressure that we're expecting. And apart from that, in terms of the manufacturing capabilities as well, who would you prefer in pecking order if you have to look at the Indian markets? Who stands to benefit?
So, on the pricing front, clearly in India, what we would expect is somewhere around 4,000 rupees kind of monthly price to start with. And as volumes pick up, we could expect the prices to come down over a period of time. And, the volumes will grow significantly by then. So what we are actually forecasting is by, let's say, fiscal 30, when the market matures in terms of volume and in terms of stabilizes in terms of pricing, the Indian market could be close to $1 billion in terms of value. So therefore, I think it's a market which will be quite significant for most pharma companies over the next 5 years or so in terms of supporting growth in the domestic market. And this is just India, and then of course, there are markets outside of India. So most of the stocks that we covered, I think from an Indian market perspective would be beneficiary. We have already seen a bunch of approvals being given. And, we have Sun Pharma, Dr. Reddy's. We have seen Lupin and Torrent tying up with Zydus for a special device. So all these companies are, quite interesting and should benefit from this. As far as export market is concerned, we have Dr. Reddy's, who have an opportunity in Canada, right, which possibly can be, addressed before others come into the market. So from an international perspective, I think we may see greater impact for Dr. Reddy's.
All right. Interesting comments that we've picked up from someone who analyzes the industry and from someone who's actually at the helm of it as well. But thank you, Sayan, Ramesh, Neeraj, and Mr. Ramana for joining us on the show. Always a pleasure to speak to you, and great insights I'm sure the viewers have picked up as well. But completely out of time on this special edition on India's GLP-1 moment from Varsha, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
All right, team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your automate.
First question with you. Why the fundraise? My understanding is that this is entirely for working capital. Just want to understand as to why this entire fresh issue for working capital, why an IPO, why have you planned that exactly?
So let me start with good morning first of all, and let me first start and give you some introduction about the company, and then I will answer your question about the fundraise. So basically the company is a leading basmati producer, and we do branded rice, and we have recently forayed into also FMCG products. The company has three big units, three production units. One of the largest unit is based in Punjab, in Amritsar, very in the proximity of the airport, and about 6 to 7 kilometers from the airport itself. It is a carbon green unit, so registered on UNFCCC. So it is, it is very good for the environment. So we are taking care of the environment, being a carbon green unit. This also generates its own electricity by the way of solar and by turbine. Then we have another unit which is in Safido in Haryana, which is the aromatic capital of Haryana, aromatic basmati capital of Haryana. Then we also have units in Delhi, which are the processing units, which were the oldest when we started. The company has been working with basmati. My father has been there. It is a 40-year-old legacy that my father started this business with one of his partners, and then we made a public limited company in 2003. Since then, it has been working as a public limited company with the independent directors and full compliance. So this is a small introduction about the company. So we are coming up with an IPO. It is a full fresh issue. So the idea of having a full fresh issue is so that we can put all the effort to the growth of the company, to take it to different higher levels. The issue is fully for a working capital. The reason is that I just mentioned about all the three plants that we have, and all these three plants have enough capacity to, even if we double up the turnover or maybe even higher than that, we can still, with the existing units, we can take care of the doubled revenue in the future.
Got it.
So the plants are future ready, and yeah.
Sure, got it. Rajesh, my next question is for you. What is your revenue breakup like right now for your basmati rice sales versus your other FMCG products that you sell?
Yeah, FMCG, we have just begun it, so it is not a huge amount. It amounts to 10 to 15 crore only. But our game plan is that in future, we will be concentrating more on FMCG and take it to 100 plus crore in future. Presently, we do 65% domestic sales, 35% export sales. And in the half year, as we have told you, that we have done a turnover of 1021 crore, on which we have done a net profit of 48.6 crore. Earlier our net profit was 2%, 3%. It has increased to 48.6% because of rationalization of cost at various centers. And we are also concentrating on high value ended products like brown rice, so that we can improve our margins, which is why our net profit margins have improved. The working capital we avail from three banks, and about 900 crore working capital facility is there. We are utilizing about 740 crore presently in the half year ended 30th September 2025. And with this IPO money, we will get more money and we can increase our turnover.
Well, that was the management of the new company that will be launching its IPO very soon. But now let's see what's on the show today, what's on the small cap Bazaar show today. Firstly, we'll be speaking with the management of Naha Spinning. Now, the stock is up nearly 7.5% in the last 5 trading sessions. And could this mean that yarn spreads have increased, and could that benefit the company going forward, is something that we'll get to know from the management on the show today. Secondly, we'll also be speaking about Butterfly Gandhimati and Stovecraft. Both the stocks have been gaining in trade. They're up more than 10% in trade at one point of time. Now, is this because the fresh gas shortage concerns that we are seeing owing to the attacks that has happened on the LNG facilities, has that led to this spike in the share prices of Butterfly Gandhimati and Stovecraft, is something that we'll decode on the show. Glodium IVF. Now the stock has dropped as much as 16% in trade, its biggest intraday fall since listing, and this is after the company reported its quarterly earnings. And if you look at the net profit, it has fallen nearly 60% on a sequential basis. And lastly, we'll also be speaking about Gujarat Alkalis. Now the stock has gained for the second consecutive session. It's up around 15% on the back of strong volumes. Volumes are nearly 18 times its 20-day average. So what could be brewing around this counter is something that we'll discuss on the show today with our analyst. Now, if you look at the market, the Nifty is at its lowest point. It's down nearly 600 points. It has fallen below the 23,200 mark, trading around 23,180. Now, if you look at the sectoral indices, none of them are trading in green. All of them are in red. The least the index that has fallen the least is Nifty Energy, down around 1%. And the indices which have fallen the most is Nifty Auto and Nifty Real Estate, both down more than 3.5% in trade. But similar picture is something that we are seeing when it comes to the small cap. That's also down around 2% in trade. But which are the sectors or counters that have been buzzing here, Mahima?
Right. So, like you rightly mentioned, the mid cap and the small cap 250 is equally under pressure. The small cap 250 right now down by about 2% and the mid cap by around 2.5%. But some specific names like Sesasai Tech is down 7%. You have the new listing, Rajputana Stainless Steel, also down by about 6% Euro Capital down 6% as well. You have Gordium, which Somit was mentioning earlier, down almost 15%. It saw a 17% rally yesterday, but down 15% in trade today. Something like the Shivalik Bimetal also seeing a downtick of around 4%. But on the flip side, you have certain counters which are doing fairly well. Butterfly Gandhimati up 13%, Gujarat Alkalis. You have counters like NACL, which is up 5% as well. Kesoram doing fairly well, up 5% as well. Stovecraft, as well as Nitco Pharma, Capsite Infra, some of the other names that are gaining in that range of 4%. But moving on to our next conversation, which is on Nahar spinning. To take this conversation ahead, to understand as to what's happening with cotton prices, yarn prices, and the spread, of course, we're joined by Dinesh Oswal, the MD of Nahar Spinning Mills, joining us now. Dinesh, thank you so much for taking out the time. Mahima this side. Just want to get a sense, first of all, with regards to how cotton prices have been. From my understanding, they are almost at a one-year high at the current moment. And wanted to understand as to how this changes your spread, so your raw material versus your yarn prices, and how does this impact the company?
The cotton prices have increased by about 3 to 4% in 1 month, in 1 month time, because all the cotton is with the government CCI, and in 1 month time the cotton prices have gone up from 53,000 per candy to approximately about 56,000 per candy. Though in local market the yarn prices have also increased to some proportion, but exports, because of this war, freight and insurance and all, and the withdrawal of ROTDP by the government, little bit impact of spreads is there. But hopefully, I believe that the government is going to restore ROTDP in April, and that will help a little. And in general, the demand is good.
Dinesh, the other aspect is, you were mentioning as to how a lot of this is controlled by the Cotton Corporation of India. Recent announcement by the Cabinet Committee of Economic Affairs has approved a funding of around 1,700 odd crores for stabilizing cotton prices. What is your reading on this, and how will this impact going forward? Because this is a positive development coming in for the entire industry.
No, that whatever the government has said, I don't know that cabinet meeting, I also read it. But for this season, the cotton is already being procured, and CCI is having more than 1 crore stock of bales, 1 crore bales in stock already. And in fact, in India, the cotton available is only with the Cotton Corporation of India, and all the spinners have to either import or they have to buy from the CCI.
This increase in cotton prices, will that impact you? Could you just give us some understanding, and how will this yarn spread movement, which is also, I believe, favorable for the company, right?
Yeah, you are right, because in fact the situation has improved, because since last 2-3 months there has been a good demand of yarn in general. Like I can say about my company, that about 3 months back we were having stock of about 45 days, but now at current we are having stock of finished goods only for 20 days.
Okay. Dinesh, are you seeing any impact in terms of your mill functioning because of energy crisis?
Not much, because like a lot of our exports are to China, Bangladesh, where the freight has not been impacted much, though it has doubled, but from 1 cent it has gone to 2 cents. But the major impact has been our exports to Europe and to Egypt, where the freight has gone 300 times. From $1,000, it has gone up to $3,000 to $4,000. And we have been impacted by the insurance cost, packing cost, and everything has a little bit increased. This is how the situation is.
So, we understand obviously the cost has gone up, but what is the on-ground situation here? Are you still exporting at this higher cost? Who's bearing the impact of this increase in cost at this moment?
Little bit we have been bearing it in our own self, and rest we are telling the other buyers also. But in general, the exports are very good this quarter.
The higher cost, you're saying export number continues to grow?
Yeah, a little bit dollar has helped us, you can say that.
Okay, so I believe this will not at least impact your revenue in the fourth quarter. But what when it comes to margin, how will we see an impact? Because you're saying that some cost of the increase of this increased freight and insurance cost is something that you're bearing, right?
But not much, because all of our exports are mainly to China, Bangladesh, Korea, where the freight cost has increased, but from 1-2 cents it increased by 1 or 2 cents. That we can absorb.
And what about the other markets like Europe, as you were mentioning?
That the exports are not much, but then the local market is also picking up, and our local sales are also going up.
Dinesh, in the last 3 quarters, if my reading is correct, you've done anywhere between 700 to 800 crores of top line each quarter. March FY25, you did around 3,200 odd crores. To at least reach to that level, you will have to do another 1,000 odd crores in Q4. Do you think that's a possibility on the cards? And if yes, that means that the growth versus FY25 is going to be flat for you.
No, because like I told you that we were carrying a lot of stocks. But fortunately, as we have been liquidating the stocks, the fourth quarter, the sales will be very good, and we will be touching about 3,300 to 3,400 crore sales.
Okay, and what is the outlook for FY27? What is the top line and the bottom line plus margins that you're aiming at?
The top line, the next year, I think we will increase our sales by 300 to 400 crores.
Sorry, 300 to 400 crores of top line.
Yeah.
And what about margins?
They will also conjugate as per the market situation, but it will be better than the last year's, I think.
Okay, got it. And overall, in terms of order trends coming in from clients, what is the kind of trends that you're seeing right now?
The market is really good in exports as well as domestic market. Some concern is in the synthetic market, like polyester, because there the prices have increased in 1 month about 25%, whereas the polyester prices, whereas we have not been able to transfer it in the local market. But I think gradually the market will accept it, because there is no other way to do.
Okay, all right. Dinesh, thank you so much for taking out the time and helping us answer all those questions. We look forward to speaking to you once your Q4 numbers are out. But thank you so much for joining us.
Thank you.
All right, viewers, it's time to take a look at the F&O space, and we have Sharad joining by to give us a perspective. Sharad, any change from where we spoke last?
No, Mahima, it's the same. There are minor recoveries there from HDFCs trying to pull up the Sensex, but the story remains the same. Carnage all across, and now actually it's worse because there's not a single green in the screen. I'm not able to find anything, and Reliance is down almost 1%, and the sea of selling. L&T, Bajaj Twins, Eternal, and actually it has intensified, to be honest. Also, let's look at BankX, how things are panning out, and largely the big drags are coming in from all the private banks. Of course, some kind of a slight recovery is there in HDFC Bank, but today everything is falling down. Let's see which stocks are there actually who have made it in the long build-up. And interestingly, there are just 2 candidates, ONGC and Oil India. And of course, that's the reason is on the higher crude prices. It benefits them. I doubt if there will be anything in short covering. If we have, let's just pull that out as well. But it's not there, correct. And long unwinding, it's PFC and REC. Both of them make it to the list. Interesting. They're coming together. Both of them are down 3 to 4% odd. And short build-up, you name it, and it's there. HPCL, OMC stocks, the selling has intensified. Last time it was 4 to 5%, now it's more than down 7%, and Petronet LNG also down 6%. So OMCs are taking a big beat, but overall in the F&O market, 80% plus short build-up is right now also existing.
Okay, Shah, thank you so much for getting us those details. Of course, viewers keep in mind there's also weekly expiry playing its part as well, will be kind of playing its part in the last 1 hour. So keep a watch out for that as well. But, it's festive season booming, and we have Gudi Padwa today as well as Ugadi. And to understand as to how trends are shaping up in terms of buying jewelry or buying gold, we are now joined by Saurabh Gadge, who is the Chairman and Managing Director at PNG Jewellers, joining us now. Saurabh, a very happy Gudi Padwa to you. My first question to you is, what is the kind of festive season trends that you're picking up? Because this quarter you would have wedding season coming in, plus Gudi Padwa, Ugadi, etc., boosting up your sales. So what are the early trends indicating?
I think Gudi Padwa is one of the biggest gold buying days in Maharashtra state, primarily because it signifies the start of the Marathi New Year. It's the start of the Chaitra month, which coincides with the beginning of New Year and making new starts. So a lot of people believe in purchasing something precious on this festive day to make the start of the new year on an auspicious note. Having that in mind, gold has always been on the people's mind when it comes to Gudi Padwa. It's something wherein it also starts the arrival of the wedding season in Maharashtra, and Gudi Padwa, that's why also coincides with the wedding jewelry purchases. And every year we see this, that during Gudi Padwa there is demand for pure gold as well as gold jewelry, especially wedding jewelry. And that's also the trend this year, what it seems like. Prices have corrected a lot in the last few days, and I think there's a lot of excitement in the market looking at that, because there are a lot of stories going on in people's in circles wherein if the war ends and oil corrects, gold would see an upward surge. And that's why people want to be a part of this low rise market right now. So we are excited on Gudi Padwa. It's not at the month end, so people have money in hand. And also it's coming on a Thursday, it's like just before a long weekend. So I think all things look good. Bookings have been quite good considering the high gold prices. So all in all, we're expecting a good Gudi Padwa as we progress ahead.
And Saurabh, what is the kind of growth that you're penciling in this season versus the last season for the particular festive season and Gudi Padwa especially?
So I think if you look at Gudi Padwa versus Gudi Padwa year over year, at PNG, we should look at a 20% growth in terms of value. Having said that, a lot of booking also happened on Gudi Padwa for the festive season ahead, because this entire season is for 1 month up till Akshaya Tritiya. So the whole month will be a busy month, but I think if you look at day versus day, we're expecting around a 20-25% jump in the value compared to last Gudi Padwa.
Got it. So value growth will be largely on account of the rising gold prices. But what about the volume growth that you're looking at versus the last season?
Volume, I think could be maybe in a single-digit growth, because gold has seen the sharp rise. Even last year to this year, gold has almost seen a 70-80% rise. So you'll see some pressure on volumes. But I think in value-wise, which we should be doing good. Diamond also looks strong this Gudi Padwa. A lot of interest in color stones, diamond jewelry. So those will also be additional margin levers for the industry.
Okay, and Saurabh, what sense are you making of the gold prices? Of course, slight correction has happened because of the entire war situation, but we've seen almost an 80% hike in the past 1 year. Overall, what is the kind of trend that you're foreseeing in the near future?
I think my personal view is fundamentally gold will remain in a bullish zone. Currently, I've seen a lot of profit booking happening and people moving into oil because they're seeing good spikes there. But if you look at the overall world condition, there's inflation which is rising. Rate cuts are not going to be happening. You'll see a lot of pressure on dollar. And looking at this, the gold's role, which a lot of central banks were looking at as a de-dollarization safety haven, as an inflation beater, will continue. So I am bullish that even in this year, gold will see a rise. What I think is we'll not see those erratic movements, but gold will see an upward rise. And I think for next 2 to 3 years, I look at gold in an upward trajectory. And like I've always been saying, gold is a long-term asset. So one should look at gold with a long-term view and not be looking at it at a 1 week, 2 week view, what is happening today. But gold is always a good investment. And I always encourage people to invest in gold and not to speculate in gold.
All right. Saurabh, thank you so much for getting us those details. And we look forward to speaking to you once your Q4 numbers are out. All right, now putting spotlight on the other small cap buzzer, that is Gujarat Alkalis, and it's approved its capex last month. The stock is buzzing in trade today, off from its day's high point, but still up 8.5% as we speak. And we have Parth joining by to give us a perspective on why the stock is buzzing. Parth, over to you.
Yeah, right. So Gujarat Alkalis is in focus today, and as you rightly said, they approved a huge capex program last month, which was upwards of 1,000 crores. It had 3 major expansion and efficiency projects. The first one was their new food-grade phosphoric acid plant for 560 crores. The second one was the expansion of their caustic potash capacity for 80 crores. And the third one was the installation of 4 new boilers for 390 crores that is expected to save steam costs for the company. If you have a look at the stock performance, then yes, the stock has gained a lot in trade today. But yesterday, the stock actually, yesterday, on 16th March, the stock hit a new 52-week low, but it has rebounded sharply from those levels and has now gained more than 25% from those levels. The stock is still, however, down around 15% from in the 6-month time frame, which shows its underperformance in line with the broader markets. Regarding key takeaways from their last quarter, the company achieved higher production across all of its chemical products. The new phosphoric acid plant, which they are doing capex for, is expected to generate revenues of more than 350 crores for the company. The management has also laid out a plan for their FY31 in which they plan to surpass revenues of more than 10,000 crores and achieve EBITDA margins of more than 20%.
Right. Another counter that remains in focus is Gaudium IVF. Now, after reporting its earnings, the stock is down massively, around 16% is last what I had seen. But this is also because the company's net profit, if you look at on a sequential basis, has fallen by nearly 60%. What led to this fall? Let's get in Varsha with more details.
Well, there's a good growth when it comes to revenue, but all we are seeing pressure is in margins. And remember, this company had a very good margin of around 38-40%. But now, if you see, the EBITDA margin came off to almost 26%, and that's what is hurting investors. If you see, the increase in finance cost impacted net profit, and a higher cost of material impacted EBITDA margin for the company. Onto the Q3 numbers, revenue was up almost 70%. But EBITDA was up only 16%, while margins was down at 26% versus 38% last year, and PAT is at 3.63 crore, which is up only 7% year on year. Recently, if you see, this stock was in focus because Mukul Agrawal had bought 25 lakh shares at 85 per share, and onto the stock performance, if I were to talk about, well, the stock is down more than 15% today, but the company has seen a flat performance in terms of stock price since listing. Recently, as this is a recent IPO, raised 165 crore, listed at 83 per share at a premium of 5% over issue price. But talking about the strength over here, this is the first company in India which is listed as an IVF player. And overall, if you see, pan-India network using a hub and spoke model is some of the strength that the company has, and they have an attractive unit economics as well. Onto the weakness, this is a high people dependence company, and also contingent liabilities and cash flow swings are some of the weaknesses that this company has. And also, if you see the overall, if you see this segment, the IVF segment is growing at a very fast rate at almost 13% CAGR. But yes, this is a very people dependence and lot of competition. You have small change when it comes to IVF center, but overall, if you see, not good numbers is what led to crash in the stock price.
Thank you, Varsha. Thank you for giving us that detailed link on why the stock is down. so much in trade today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
Affect the entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Welcome to Ask Profit. I am Mahima Vachajani and you are watching NDTV. It's a show where we get all your stock related queries answered. But before we start doing that, let's take a quick look as to how the markets are doing. Well, it's clearly under pressure. A bloodbath is what we're seeing right now. The Nifty is now below the 23,200 levels, and we'll have to wait and watch out for as to how the last 1.5 hour trade fares, because it's also weekly expiry for the Sensex. Down 2.6% for the Nifty 50. Let's try to pull up the heat map and see as to what counters are doing right now. Shriram Finance losing the most ground. It's seen a significant rally, but since the past few days, it's been losing ground. Down 6%. Eternal losing 5% as well. So all the gains that it saw in the last 2 days, it's been wiped off. There's Bajaj Finance, L&T, M&M also losing ground, down by about 4%. HDFC Bank surprisingly has recovered a tad bit, trading around 4% lower. But only ONGC is holding up. Throughout the day, it's been the only gainer on the Nifty 50, up 1.3%. For a brief while, there was Coal India also, which was kind of contributing positively, but that too has turned into the red, almost flat as we speak. But let's try to pull up the sectors and see as to what sectors are doing. All sectors, by the way, in the red, of course. But you have Nifty Auto losing the most ground, 3.8% of a downtick, followed by Realty. You also have Defense, which is down 3%. You have just the Nifty CPSE and Nifty Energy, which are just down by about 1%. Otherwise, all of those sectors down in that range of 2 to 4% each, almost 2 to 3% each. Let's quickly try to pull up the advanced decline ratio because that will give us a picture as to how the broader end of spectrum is looking like, because the mid cap 150 and the small cap 250 is also under pressure. You have the mid cap 150 which is down by about 2.5 odd %, the small cap 250 also down by about 2.1 odd %, and VIX is up almost 17%. So that is the extent to which the volatility is looking like right now and at its day's high point. So clearly it's a market where you need to be cautious and to understand as to what you should do with your portfolio. You can go ahead and call us or WhatsApp us on the numbers that are flashing on your screen up there. And to answer those queries, today we are joined by Kunal Rambia, fund manager and trading strategist of the streets, joining us now. Kunal, thank you so much, of course, for taking out the time. My first question before I go on to take all of these queries is, what is the kind of support and resistance that you're seeing on the charts right now? I know that you're getting these questions a lot these days, but what is it that you're seeing on the charts for the benchmarks right now?
Good afternoon. Thanks for having me on the show, ma'am. So as far as Nifty is concerned, we have seen a steep decline, right? And that's from the previous high itself. And now Nifty is reaching near the previous low. And I'm looking at the weekly chart where the bottom of March 2025 was somewhere near to 22,200 to 22,250. I think that is a level to watch out as a support. So ballpark figure which we can keep in mind is 22,500. Near that level, if Nifty comes down, I think that will offer good risk-reward ratio for someone who wants to think of long-term buying, and the longer-term trend will still remain intact. So yeah, that's the level to watch out as a support on Nifty.
Also joined by Radha Raman Agrawal, Managing Director and CEO at Swarm Advisors Limited, joining us now. I'll start taking the query. The first one is from Lalita, who's writing us from Bengaluru, wants to know if this is the right time to enter into Shriram Finance. Mr. Agrawal, I'll come to you on this one first. It's seen a downtake of over 5% in trade today. Do you think it's the right level to buy from long-term perspective?
First of all, thank you for having me on the show. I think it's a tough market day today. And see, if you look at Shriram Finance, with this new capital coming in and overall the cost of borrowing going down and the growth coming in. So maybe today it's got a 6% dip on the screen. But at the same time, from a long-term vision, it looks good. See, there can be a short-term volatility. For example, the whole piece, the geopolitical thing might have connected, and then they might have some bearing on the CV cycle. So effectively, there's some bit of pressure on the stock. That's the reason you see a downtake. But in the medium to long term, I think the stock is a good stock to own and take it forward. But the volatility obviously can be there, and I think we should wait and maybe look at how things move when the geopolitical situation stabilizes. I think once that stabilizes, it will be a good stock to get into.
Okay, all right. So that's the view coming in on Shriram Finance, over 6% as we speak, by the way, not 5%. But the next question that we have is from Anand, who's writing us from Bengaluru, asking about development, so DW development, and he says that he's bought it at the levels of 306. Wants to know if he can hold or sell from a short-term perspective. Kunal, enough data on the charts to give a perspective?
So, can you just, D development and engineering. Now, this counter has exactly fallen from its previous highs of July 2025 of 330 mark. Right now, it's trading at 263. The immediate support level, which I can see on the daily chart, is around 255, where it made a bottom a month ago. But again, the way it has fallen today sounds a little scary. So yeah, if the counter holds 255, one can definitely think of accumulating. Otherwise, stay away from this counter for now, and we'll wait for some kind of consolidation before initiating a fresh position.
Okay, the next one is on ITC. Meher has 67 shares at an average price of 306. Wants to know if this is the right time to maybe average out or wait for some time to average out this counter. Radha, I'll come to you on this one. 299 is where it's trading at currently. Do you think it's a good level to average out?
I think what you talked about, the investors in bought it at a very close price. So I think one should wait and maybe look at some bit of correction to happen more, and let the market stabilize and then only move forward on that. Otherwise, the gap in both will be very limited. So let it correct a bit and then only take it forward.
Okay. The other one is on Eternal, and I'll come to you on this, Radha, because the viewer is bought at the levels of 230. Wants to know if this is a good time to maybe add more of this counter. So I think he's bought it recently, it seems, and wants to know if he can buy more considering the view on this particular counter. Last 2 days, if I'm not wrong, last 2 days it did, have good gains, but today those gains are completely wiped off, and it's come back to the 230 trading, zone. Would you recommend a buy right now in Eternal fundamentally?
I'll tell you, so broadly, one should not be looking at speculating to that extent because you will find wild fluctuations happening. In fact, yesterday it was 5-6% up, today is a 5-6% down. So one should also look at from a medium to long-term perspective in terms of how things move. The company is done brilliantly well, and good part is given this capital market issues, even for fundraise for other companies might also get difficult, which in fact will be positive for Eternal and the overall Blinkit thing. So in a long to medium term, definitely it looks good. But I would not like to comment more in terms of short-term volatilities because given the geopolitical thing, it will remain very volatile, I think, going forward as well.
Okay. All right. The next one is on Olectra Green Tech. Kameswara Rao is asking this question from Kakinada, and he's asking if this is the right time to maybe enter this counter. Kunal, your view on the charts? Down 4.5%.
Yeah, so the only interesting observation on this chart is that somewhere in July 23, the counter was near to 1,000. After that, it reached the same level somewhere in March and April 2025. And again, it has reclaimed this 1,000 after breaking it for a week or two. So if the counter holds this 1,000 level, I think this can offer a good risk-reward ratio from the long-term point of view. But again, just excluding yesterday's move, the counter is still not done much. So wait for further follow-up buying. If the counter manages to go above, say, 1,060, 70 for a day or two, then with the stop of 1,000, one can definitely think of buying this from the midterm perspective. And the targets can be as high as 1,350 to 1,400 levels.
Okay, all right. We've got our first caller for the day. Arvind is calling us from Bareilly. Arvind, a very good afternoon to you. What's your question about?
Good afternoon, ma'am.
Good afternoon.
हेलो मैम, मेरे को डायनेमिक केबल्स के बारे में पूछना था. डायनेमिक केबल जो शेयर है, इसको ये फंडामेंटली स्ट्रांग है क्या नहीं है, इसके बारे में मुझे जानना था. ये
ठीक है. आपने ये ऑलरेडी खरीद लिया है? आप खरीदने वाले हो?
मैं खरीदने का सोच रहा हूँ. इसको डायनेमिक केबल को मैं खरीदने का सोच रहा हूँ. प्लानिंग कर रहा हूँ 270 के आसपास.
ठीक है. ओके. I'll take this up with Radha. It's a very small company, 1,300 crore of market cap, but it is a manufacturer of power infra cables. Any view by any chance?
So I think my suggestion, not only specific to the company, but suggestion will be there may be slightly small cap companies you should avoid and maybe look at you have enough cable companies that have higher market cap and larger size. So given the volatilities, it will be difficult to come down a very small company here. But it will always be this sector looks very attractive. In fact, you have Ultratech also coming and then doing a setup here. So my suggestion would be more in terms of look at a large cap to that extent in this sector, not the small ones.
Okay, so that's the view coming in on the entire cables and wire space. But the next one is on Dixon Tech. Ramesh from Bangalore is asking if this is the right time to buy the counter. Kunal, your view on the charts?
So certainly this counter is consolidating since I think around 15-20 days near the same levels itself, and it has not really broken the levels of 10,000 also. So if the counter holds on to this 10,000, that's the sign of consolidation and bottom formation, but the momentum is missing. And in such kind of uncertain market, rather than just assuming whether it will hold the level, one should wait for the breakout. As of now on the charts, the breakout is at 11,000. So if the counter manages to close now above 11,000, then with the stop of 10,000, one can buy, and the double bottom target then can be 13,500.
Okay, all right. So that's the view coming in on Dixon Tech. But time to step into a very, very short break. We'll be right back answering all your questions on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you The investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations. Delhi, the Greens are ready.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. But just a quick take on the markets, because now they're sliding below the 23,100 levels also that we just spoke about 10 minutes ago, saying that we were below the 23,200 levels. But right now, we did slip below the 23,100 for a while and just come back from that. 3 to 4 odd points of an uptick from that, but overall a fall of 675 points is what we've seen from yesterday's closing. It's Nifty. Today's Nifty one-day loss has been more than what it's gained in the last 3 days, and this is the biggest fall that we've seen since the budget day. Only 2 stocks in the F&O right now are in the green. You have ONGC and Oil India. Otherwise, geopolitical tension plus the HDFC bank issue is also kind of dominating the whole Nifty 50 pack as a whole. You're seeing Shriram Finance, Eternal, counters like those, tanking in trade, and how all of your sectors are in red right now, with most of them trading with cuts of about 2 to 3% each. Right now, the support levels that we're seeing maybe could be around 23,000 levels, and intraday resistance maybe around that 23,200 odd levels on the Nifty. So that's with regards to where the markets go. But there you go, we've slid below the 23,100 levels, well below the 23,100 levels now, with cuts of about 680 points on the benchmark. So we'll have to wait and watch out for as to how markets end today. It's certainly been a volatile day of trade and bloodbath for the markets. But moving on and taking on your next query, which is from Savio, who's writing us from Dubai. He's asking if this is the right time to invest into something like an Aster DM from a long-term perspective. Radha, your view on this one?
So I think overall the sector looks good. So by and large, that's a sector which will actually be hedged in terms of a lot of things happening. And there will be minor corrections to that extent, but at the same time, overall looks positive. Again, the piece of advice here will be maybe we look at a slightly bigger ones here. So we avoid with slightly small caps and mid-size caps when we look for the larger ones in this particular space. So I think that suggestion will be that.
Hey, we've got our next caller.